coffee. Come on, wake up now. Pour that coffee down your throat hole. It's hot. Now you got a hole in your throat. Oh no, just call your boss. Take the crust from out your eyes. So tasty, not a coffee.
Good morning, Tasty Nation. Welcome to Tuesday's edition, 1 day removed from New Year's Eve, 2 days removed from 2026. Whether that's good or bad, I'm not sure. Ask your P&L. My name's Mike. I'm here with Jamal. Jamal, how you doing this morning?
I'm doing well. Actually, I feel pretty good. Look, first of all, let me be honest with you. I don't like waking up early. I don't think I've ever said this when I do the morning show. I don't like waking up early. I've never liked waking up early. I'm a nighttime person, although that is starting to change a little bit. But yeah, I got some great rest last night. I feel good, man. How you doing?
I think I'm good. I need to check my Aura ring. See if my Aura ring tells me I'm doing good.
I'm glad you brought this up because I've noticed you have it. I have a couple other friends who have it. I know you get a. Do you like it for the statistics or do you like it? Yeah, is it the statistics that do it overall?
Yeah.
I don't know if I want to know that much about myself though.
It's been interesting. I think the biggest thing that you learn is how food and booze affect your sleep.
Yeah.
Especially like late at night. So like my best nights of sleep are when I'm not drinking.
See, I said I don't want. I know. I knew it. I don't want to learn that much about myself. God. I've actually thought about getting one though. I might actually get one soon.
Yeah,
it's inspired me, Mike.
Yeah, I think you learn more. You just learn more about sleep than anything.
Yeah.
There's a lot of cool sleep data, but yeah, basically just not having food before a couple hours before you go to bed. There's a huge difference because rest is all about your resting heart rate.
Yep.
So if your resting heart rate is elevated while you're sleeping, you're not resting, and your resting heart rate is elevated if you have food in your stomach, digesting, whatnot, getting rid of toxins, aka booze.
That's why I want to drink before I go to bed. Yeah. Resting heart rate go down.
Yeah. But yeah, it is interesting, and it's always related to like how low your resting heart rate is relative to how ready you are for the next day. Yeah. So
I gotta check that out. Now it's interesting, man. We are at the end of the year. It's I don't know, for some reason it's happening. You know what? It is different more this time, I think, for the end of the year. Typically, I have probably taken some time off, and so it's more apparent. This time around, I think I'm just going to walk into the new year and not even realize that it's New Year almost. I mean, because I've really kind of gone straight through. Really hasn't been a whole lot of time off outside of the few days that we've had. But lo and behold, I mean, 2026 is right around the corner. It's here.
Yeah.
It's here.
I feel like I'm in a similar boat. Let us know in the YouTube chat what your holiday plans are for New Year's Eve, or what your resolutions are. How about that?
Yeah. Resolutions.
We're streaming live on YouTube, tastylive. Join us there. But yeah, I was actually joking with my friends yesterday. I'm like, I'm around for the holidays, and I'm available to do like things like this. If people are out, I can cover for people. But then when it comes to February, March, I gotta go snowboarding.
Yeah.
So. Yeah. Those are when my normal snowboarding trips are. So
yeah,
it's a give and take.
Yeah.
You know?
I know, as you say that, I'm not sure if I'm going to be able to do my normal, usually every year for the tournament, last few years, gone to Vegas for a few days. I don't know if I'm going to be able to do it this year. My kid's starting to get heavy into basketball more with travel. They usually do travel kind of heavy that time. I haven't decided yet if I'm going to do travel. I'm doing things very different with him than we did with our oldest. Travel basketball is like, oh God, it's it ends to a mean. But I'm learning, like, you know what? I don't have to do everything the way that they want it to be done. I mean, when I say I mean him. So we've experimented with different ways. To this point, he has yet to play travel basketball, and without bragging, like he's one of the best, if not the best, in his grade. And people are always like shocked that we have never had him play any travel. And it's like, hey man, I mean, it's different. There's other ways to do it.
Yeah.
But that being the case, I don't know. It's gonna mess up my travel schedule this year. It's gonna mess up my March. I don't know. We'll see. I know I'm a little annoyed about it because going to Vegas during the tournament is fun. It's really fun, man. I will say though, last year Vegas was a little bit more empty than you would expect.
Really?
Yeah, it was a little bit. It wasn't as full as it normally had been. Maybe because prices had gone up like 3x from the previous years or two.
Yeah.
It's ridiculous.
That'll be a detriment for sure. Yeah, I haven't been to Vegas in quite some time. I feel like the last Vegas trip I went on was for Tasty. It's like a Tasty event. And that turned into...
This was, like 2021, 22 or something like that?
Yeah.
I think I remember that.
So,
Yeah.
but
I got
to go back.
You know what? And this is the time where it's good to mention names of people that have gone by. Didn't you guys go with Anton?
Nick went with Anton.
Nick went with Anton. That's right.
Unfortunately, I was.
You guys remember
there.
him? Come on, chat. You guys
there.
remember Anton?
Yeah. I heard they had a grand old time.
Yeah. Well, you know, I'm sure.
Expensive steaks.
That guy in Vegas. I mean, he was hilarious. The way I've never seen somebody love Las Vegas. Especially since there's like kind of this foreign component to him. It's kind of funny the way he was like, oh, Las Vegas is great. He had this twinkle in his eye.
Oh, yeah.
Cracked me up.
Absolutely. Yeah, he's an interesting fellow, that's for sure.
Yeah.
Yeah, I got to get back to Vegas at 3 times the price point.
I was about to say, you really don't have to. No, there's actually better places. Snowboarding is probably better.
Yeah.
On another note, I got to tell you this, man. Last night, I was watching. So I've really gotten into a lot of documentaries overall. I've always been into documentaries, but there's these really good ones that come on. I'm about to really date myself. That come on public television.
CBS.
Nah, but seriously though, actually 2 really good ones recently. One was about food in Chicago. It was dope. It was about like how the Chicago dog came into play and just all the different restaurants over the years, like Charlie Trotter's restaurant and just other like dope restaurants throughout like the history of Chicago. It was really great. But that's not the one I got to talk about. I got to talk about the one I saw last night. I didn't know about this, man. This maniac who had like poisoned like these Tylenol bottles in the 70s in Chicago. Dude, it was not 70s. It was 80s. It was like early 80s. This dude like poisoned like 6 or 7 different like bottles, and it was the first nationwide recall. Johnson & Johnson recalled Tylenol. First nationwide recall ever. Cost them $100 million. Imagine how much that probably hit them.
Yeah.
But it was wild, man. And it was obviously sad, but it was crazy, dude. Like the fact that somebody could do this. And so as a result, the 2 landmark things that came of it, A, was the suit. Well, not the suit, the recall. First ever recall, $100 million. But also, you know how those seals that we have seals on bottles now? That's why we have them, because of this maniac. That's the reason why you have tamper seals and like nobody can do that. But just imagine, once upon a time, somebody could just walk into the store and do something like that. Wild stuff.
So back in the day, it was just free for all.
Yeah.
Kind of like the airlines, like you could just rip cigs on airlines and no security.
It was a dark time, Mikey.
Yeah.
It was a dark time.
Yeah.
I remember that. I remember being on a flight and it was like cigarette smoke everywhere, and I was a kid. And it's funny you bring that up because I've been watching Mad Men. I never watched that show. I've been binging the hell out of it. I don't binge shows, like period. For the most part, I like watching a couple of episodes, and especially if it's a deep show, I like to think about what I watched, you know. But for whatever reason, I mean, this show is just like, dude, I just love it. And so like I just binge the hell out of it. But all of the things that you see, you know, the ladies who are pregnant, and she's like, oh yeah, I can't wait to eat a nice big red steak. And it's like, you know, obviously that's a bad thing. And just smoking and like, oh, let me hold the baby. And there's like a cigarette in the mouth right here. Oh, that was such a beauty baby. It's like all these weird things. That's
a beautiful baby, but smoking in his face.
It's crazy. All the things that we didn't think about like once upon a time. It's wild, man. It's wild.
Speaking of shows, I watched a very interesting one recently, Death by Lightning. You seen that?
No,
you heard of it?
No.
It's a limited series on Netflix.
Great movie.
Great.
Okay.
Yes. It is basically, it's crazy because it's very well done. It's very well cast. It feels like a show, like a fiction, but it's a very accurate historical depiction of President Garfield. President Garfield was ultimately a forgotten president, for lack of better words, where he went to the Republican National Convention and basically just went on stage, was like, I'm just going to do this speech. delivered the speech,
That one
killed
dude,
the speech.
Michael Shannon. Okay, that's right.
Yeah.
I've seen the picture, but
Yeah.
it looked interesting.
Yeah. So he like delivers the speech, and then there's this dispute of like who should be nominated for president, and they're like, well, how about this guy that just gave the speech? And he's like, what are you talking about? Like, I'm not fit to be president. And basically, like the people in the convention nominated him. He ends up winning, and then some crazy guy who's like following this whole thing basically becomes obsessed with him. And I don't want to spoil
it. Well, you don't have. I mean, it's historical.
Yeah.
I mean,
but no, it's like
he was historically
very accurate.
Wasn't he assassinated?
Yeah.
Yeah, that's what I thought. Yeah.
But I was watching
stuff about his assassination. It's like,
yeah, it's insane.
Yeah.
I was watching this. I'm like, this is crazy that this actually happened. Like it's ultimately very historically accurate. So it's a quick watch. It's like 4 or 5 episodes, but definitely check it out.
Those are honestly the best. I mean,
yeah.
Especially in something like that. Like, why take me through 2 seasons of the situation that's historical like that? Just give me 5 hours. Like deep 5 hours. That's all I need.
Yeah,
that's perfect.
Yeah.
You know what I'm saying? Like,
so yeah, I think you'll enjoy it. Check it out.
Check it out.
Ring in the new year with some assassination.
I'm gonna have to remember if it was. I don't think it was Garf. What year is Garfield?
It was like 1900 something.
I can't remember the connection. So our neighbor 2 doors down, just the sweetest lady. She's 90. She just passed away like in November, but we always knew like she was. I don't know. We always knew she came from like this like kind of interesting family, but we never really like. I don't know. We just never really knew the connection. But not long after she died, we realized that she's connected to this family like that owned this huge house. And not far from where we live, in Oak Park, and which Oak Park has a like crazy ton of history. By the way, I don't know if you know like that whole area where I live. Like there's she's not part of this, but there's a lot of mob. Like you ever saw Casino?
Mm-hmm.
Most of the dudes that you saw in Casino actually like lived around the area where I live now. I mean it's crazy. But she's not connected to this, but she is connected to this family that like owned this house that eventually they donated the house to the village and area. We did not know that. And apparently like her grandfather they have a patent for like coin slot machines or something like that. Some crazy patent like that. Something simple, right? But like the family eventually like grew to prominence because of that kind of thing. And I think, I can't remember if it was Garfield, but one of the presidents around that time period asked like her grandfather to run along his side, but he was like, nah, if I'm gonna run, I'm gonna be the dude that's gonna run, not on your side. But it's just kind of interesting. Like he had that connection with like one of the, I can't remember if it was Garfield. I don't think it was him. It was somebody else, another president. But just kind of like, wow, this little 90-year-old lady. I mean, like literally, like used to walk with a cane down to McDonald's every day, grab like a Coke or whatever. Like that was her like day, and then come back and like, wow, that little lady like had that connection. This is so crazy. Again, she was 90. You just never knew, but totally.
Yeah, she's moving mountains.
yeah, just had no idea. We should have had an inkling though, because when we first moved into our house, she's like 80 something. She goes, "Oh, I heard your son's on the basketball team." Like, how the hell do you know that? Like, why would you know that?
Yeah.
But she knew a lot of people in town knew her. It's crazy.
Yeah.
It's funny how that works sometimes.
The depth of connection.
I know. Is it gonna be like that for us someday? Is that how it's gonna be? Some person when you're like 80 be like, Mike and his whiteboard.
My God.
Where are you?
That would be wild. I guess we'll see. Mm-hmm. We got to get there first, right?
Yeah, we got it. We're still at 2026. We got a long way to go.
Yeah, I'm still like 25, so I don't know. Garfield was elected in 1880. Yeah, 1880. Yeah, it's insane.
Nah, I like that guy though, Michael Shannon. I remember him from Boardwalk Empire. I don't know if you ever saw that.
Yeah, Great show. That's one of my top 5 shows of all time.
Yeah, it might be that. I mean, like that might deserve a rewatch. It's been a while, but
yeah,
that was a good one.
Yeah. That was a Scorsese show.
He did do that. That's right. When's the last thing that he did? Was it that big? It was that big epic He did a thing on Netflix a couple of years ago.
Yeah, I don't remember.
So,
I don't recall.
are you even shocked that silver's back up?
Oh God.
I mean, I'm not.
Yes, we are. We are looking at the markets today. Forgot.
Yeah,
I mean, silver. I'm not surprised that it's still volatile. So yeah, I'm not surprised that it's back up. What's platinum doing?
Probably the same.
Up a cool 5%. Yeah, I mean, the markets are at 7:15. We have an hour and 15 minutes before the markets, the equity markets open. But platinum up 5%, silver up 8%, gold up 1%. These things are flying around like crazy, and the rest of the market is doing nothing. It's a very interesting time here.
Ain't it though? Like,
yeah,
this
like
is literally the only thing moving.
Yeah.
And it's unusual to have this type of move on anything towards the end of the year like this, especially around this time where liquidity is dried up. I don't know. I'm starting to wonder if this thing's going to get out of control or not, or if it's going to calm down. If it really gets out of control and it shoots above 80 plus, I don't think that's good. I just don't. I think when certain assets get out of control at times, it's a little unsafe for investors, traders, if you will, can be. You can get caught the wrong way. I hope everybody's being kind of risk defined on this, because I think it could get wild. Really could.
Yeah, these are big contracts in the futures market for sure.
Oh yeah.
But yeah, to your point, it's like, yes, an increase in volatility can be good to get in or get out, but too much sustained volatility can trigger something else or alert us of something else going on.
Isn't it funny too, like at times like this, that people think that there's like this, there has to be this grand plan, or there has to be something going on, or, like right now, I think the goalpost is January 1st for some reason, because China's supposed to, I haven't even cared enough to read. But because I mean, how often do we hear about all these different things, or everybody has a reason right now why gold and silver and all these things are doing it. Can it just be whatever happened to supply and demand? Like, can it just be that? No, it has to be that all of physical silver is locked up right now and there's a problem there. And, I don't know, man. I don't really care about that. I just want to take advantage of those opportunities, and that's what I'm here for. But I am not, so far, this thing is almost following like an October playbook, like we saw, a couple months ago. So far it is doing that. There was that it was I don't remember the exact days, but I remember that there was, before the big turnaround in gold and silver, there was a day where it dropped big and then it went back up, much like it's doing today. And we'll see how this day holds out. We'll see, I guess, the next couple of days. But look, I mean, as much as I'm talking about, I'm excited about it. I like the fact when at least there's something to talk about, something moving. Yeah,
I mean, gold, silver, platinum have been the story of the last couple of weeks here, but platinum still going nuts, and I think really it's all about implied volatility of silver and implied volatility of gold. I mean, gold is still kind of the one that's not reflecting the same amount of implied volatility when you look at GLD versus SLV. GLD is still under 30%. In terms of implied volatility, it's flying around. SLV, on the other hand, has skyrocketed all the way up to 75% in January, 63% in Feb. And the implied volatility 5-day change is, still going up. 10% increase in the last 5 days in silver, only a 3% increase in gold. So I think if you're trying to buy delta, gold is where I would go. Silver, I think you can do a little bit of both, but silver, I would absolutely have a short component in January. If I'm going to Feb or March to buy something, I've got this longer term put diagonal spread here, long March, short Feb. And then platinum, no options there, so you kind of have to trade it directionally, but this is a massive product. So, it's been crazy. Crazy.
Like, what are their sizes again? I saw something recently about like the sheer size of the like a market cap of SLV and GLD compared to like a lot of other names. I mean, they are really big products. It's something. That's exactly why you got to be risk defined, I think, for that alone. God, what did I see?
Yeah, I think it just goes back to your initial point of like, this is a very volatile situation and it can continue in one direction or another. And right now, silver is the only product when you compare silver and gold. Silver is the only one that is reflective of a decent implied volatility. Gold is still super low, so it's like I'm not selling premium in gold. I'd rather I shouldn't say that. I don't want to sell premium undefined risk in gold.
Yeah, exactly.
27% is not reflective of what's happening from a realized move standpoint. Like, it dropped 20 points yesterday.
That's what it is. Top assets of the world: GLD 31 trillion, Nvidia 4.5 trillion. Yeah, just based on that, based on what's within it, right? Like GLD, because GLD I think actually holds gold. So does silver. Silver's only is 3.9 trillion. So it's number 4 if you figure in that matter. GLD, Nvidia, Apple, silver, Google. So
Crazy.
31 trillion, bro.
Yeah, and E-minis only had
whatever happened to Fort Knox? You can't even the hell with Fort Knox. GLD.
Yeah, that's it. It's all digital now.
You know what I mean?
But yeah, E-minis only have a 14-point range. NASDAQ, similar story, 70-point range. Dow and the Russell, all flat. All 4 of these are within 10 points of up or down for the net change on the day. Bitcoin catching a little bit of a bid, up 800 points. ETH up 50. So seeing a little bit of movement there, but this has been another story where it's just been flatlined. Like, this Bitcoin hasn't moved from 88K, I should say between 87.5 and 90K in 5 trading sessions. Same with ETH, kind of just flatlining. These two, I think you'll see much more movement in 2026, but feels like kind of just the holiday lull. We'll come back to this next year. That's at least what I'm seeing.
See, this is what happens. Then I go down a rabbit hole. Like, okay, what countries have the most largest gold reserves? I mean, I assume it's China. I'm looking at an old thing here. A while ago, it was not that. But I'm sure I'm not the only one looking these things up right now. And as a matter of fact, that's what's going to keep these things moving around even more. That's what's so great about it. I think this is like, I don't know. Now that I have perspective, it's important to like. I feel like that's what I try to bring to the network, like that perspective. Like, it's important to pay attention to the time that we're in when this is happening. Because I remember when this happened in 2010, 2011, I didn't really appreciate it the way that it happened. And I just think you got to appreciate, because these are going to quiet down. They're not going to move as much. You're going to be like, damn, remember when gold and silver were moving like crazy? This is actually crazy right now. I mean, it really is the way that these metals are moving, bro. Like 160-something% that silver has done this year. What? I mean, wow. If I would have told you something moved 160-something% this year, you would have not said gold, or you would have not said silver. You would have probably said Bitcoin.
Yeah.
You would have probably said, NVIDIA or something AI related, which I think, I mean, to be fair, they've been quiet more recently, but I think they did, again, like Palantir, as much as we were talking about how it's not moved recently, I think it moved 147% this year. So, I mean, it's not like they haven't, but, yeah, as a matter of fact, speaking of performances, as we're closing in on it, I mean, but it is something to behold that silver has moved 167% this year.
It's nuts. But I think it just goes to show, like, even though you have markets that are sleeping right now, platinum, silver, gold, like, these things are still ripping around. And this can be due to a number of things, but I think it's emphasized by the fact that none of the other markets are moving around and all of the focus is on gold, silver, and platinum, which is pushing and pulling it even more.
And I think it should be said, by the way, and guys, can we cue up a round of applause? Because SanDisk needs a round of applause, okay? SanDisk, by the way, is up 578% this year. Just by the way, as we're sitting here talking about silver, SanDisk. What?
There you go. I like that one.
578% this year. Now, second on the list, WDC. And I remember. I remember when I remember trading these names too. This one, both of these these gains really snuck up on me, by the way. I don't think I started paying attention to them until like August, and I was like, wait, what? And then obviously they took off even more. So there have been some big moves this year, but again, for what I just said, the top largest 5 assets in the world, silver has moved the most. So of those top 5 assets in the world, we mentioned, what was it? Google, NVIDIA, GLD, SLV. SLV has moved the most. I mean, the rest of them are not that high. So,
yeah,
I don't know, perspective, man.
It's been a crazy year for sure. For these precious metals.
On the flip side, the worst one was the name that we were asked about yesterday on OTCL, TTD. TTD is just shit. And 67% down.
Yeah.
Do you recover? I mean, do you ever look at the worst names on the S&P 500 and say, "Oh, this might turn around," or is it like, "Nah, this is done"? TTD, Fiserv, Deckers might be one though. Deckers might be one to put in the back pocket. I'm telling you, I'm going off. Remember, I told you before. For those who don't know, I've told Mikey this before, but to bring up another old name for those who are. Well, they're not deceased. They're still around, but we just don't talk about it. Victor Jones. I'm just playing Victor. I'm just joking. If you ever hear this, Victor's going to laugh. He'll be mad at me. Victor, I remember used to talk about during the recovery of during the pandemic, we were coming out of it, and he's like, "Man, I'm telling you, Denny's." Dead shit. You looked me dead in the eye. It was like, Denny's. That is going to be the thing to buy. Everybody's going to be going to Denny's. I was like, Denny's? Denny's.
Yeah, he was all up on silver. Like,
I was about to say, if I'm gonna mess with him, I gotta be fair too. He used to talk about silver a lot.
Yeah, he really did. I remember that.
He was talking about silver.
It was trading around 30 or 25, and he's like, "Yeah, this thing's going to 50, or 50 plus," and here we are.
Yeah,
66. Crazy.
Same man who said silver said Denny's. See? People you can do both. You can do both. You can.
Now I feel like I got to go to Denny's. See what all the hype is about.
No, you don't. No. I remember I used to go to Denny's a lot in my bachelor days. That was the thing to do, right? You go out, have fun, and drinks, go to Denny's. It was still
go to Denny's at 4 a.m.
Yeah. Well, I remember going to one time at like 3 a.m. and I was in there and I looked around and I was just like, nah, hell no, I gotta get this is the last time I'm coming to Denny's. It just didn't look right.
Yeah.
It's like you just realize like, I don't think I should be in here right now. Last time I've been to Denny's a long time ago.
I love it.
That was it.
We do have some confirm and send questions from the viewers, but if you have any other questions, you can throw them in the YouTube chat. Again, we're streaming live on tastylive. You'll see this video streaming front and center. You can throw in your trade ideas questions along the right-hand side chat. Do we want to go to a quick break and then do it, or just go straight in?
Let's go to break.
Okay, cool. We'll take a quick break. We'll be back in about 90 seconds. You're listening to Tasty Live.
When the market moves, traders need to move faster. tastytrade Active Trader Tool offers full depth of market visibility, one-click order entry, and instant position management so traders can react in real time. While others charge for professional tools, tastytrade provides them for free. Opportunity can move fast. Seize it with Active Trader. Try it now on tastytrade.
Grow a strong community with tastytrade's referral program. When your friend joins tastytrade, you'll both receive $100. As your community grows, you get more bonuses. The referral program runs through December 31st, only at tastytrade.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new tastytrade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
tastytrade's Money Match event. Unlock 30 days commission-free trading. plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new tastytrade account. Level up your trading experience with active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new tastytrade customers.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number one for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. tastytrade. Make your move.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
What's up? Welcome back to the show. We've got Confirm and Send coming right up for you. A couple of viewer questions. But again, if you want to throw in some more questions in the YouTube chat, we can get to those as well. There's an interesting one in here. We were teased a little bit with one of the questions.
Yeah.
And it's something that has come up quite a bit in emails, chats, what have you. But we'll get to it shortly. Just wanted to throw it out there, you know. It is Tuesday, December 30th. And we've got your questions. Hopefully, we've got some answers for you, too.
Yeah.
Shall we dive into it?
Let's do it.
Sweet. All right. The question of all questions. I've had a great year trading. You love to see it. I want to reduce my tax liability though, with some losers I have. What is the wash rule if I sell some of my losing positions? I initially went to DePaul for accounting, and I took one class, and I said, no, I got to go.
Yeah.
That's my side story on this.
I can believe that.
And now here we are talking about options trading.
Can't run from it.
No.
Can't run from it.
So what is a wash sale? First and foremost, wash sale is ultimately a violation when it comes to creating a transaction, for lack of better phrases. But basically, if you are acquiring and selling something that's basically identical within a 60-day window, so basically if you're buying or selling the same product and you're trying to harvest losses, it's ultimately
what it boils down to, right?
Yeah, it's ultimately a no-go.
Yeah.
So
somebody trying to circumvent that rule, just like, oh, I got a loss here. Let me just sell this thing, and I can buy it back and start all over. It doesn't work that way.
So one of the interesting things is that I've done before, and I think that's interesting to just consider, is if you have a great year trading and you want to reduce your tax liability, you don't necessarily have to sell those positions. So like on the other side of the coin, let's say you have a long share position, or you have a long call that you bought that's multiplied. You could sell the next strike next to it and create this micro spread and free up all that buying power related to the position, and it basically kills the position, but it doesn't close the position. So that's one way you can kind of move from this year to next. That has nothing to do with wash sales, but just something to consider. But at the end of the day, if you have losing positions from a different security and you're trying to offset gains from one, there is things you can do, but at the end of the day, like I said, I exited my accounting practice after one class.
Yeah.
So you really got to reach out to your tax accountant and see what they have to say, because they'll be the experts on this. Even if they're not a trader, like they'll know exactly what you can and can't do, or they'll have a system where they're just putting in your numbers from Tasty. That's another great thing about Tasty, is you have the ability to download, or I shouldn't say download, but input all of your data into your turbo taxes, your
Very easily,
H&R
actually.
block. Like it's literally a portal where it's like, oh, here's my account, here's my thing, boom, done. And then you just review it.
Very easily, yeah, that you can import all that data into whatever tax software that you're using for those of you who do it by yourself. But yeah, I completely agree with you on this one. I mean, your tax professional is definitely the best place to get the best answer for this from, because we're traders, we're not accountants.
But yeah, ultimately, the purpose of a wash sale is to prevent you from claiming tax losses to offset capital gains on ordinary income while essentially maintaining a continuous economic position in the investment. So if you think about that from a conceptual standpoint, you can't offset losses on gains and then also get back into that position.
Yeah.
So if you have two different things, one's a loser, one's a winner, fine. Like that's not going to be an issue. But if you're trying to continuously stay into a position, then it's not going to ultimately be allowed. But at the end of the day, again, you need to consult a tax accountant, which we are not.
It does not apply to cryptocurrencies, though, from my understanding. But again, double check with your tax professional.
Yeah. But yeah, it's one of those things. And honestly, we have segments on it where we've talked about it before in more detail. So if you search for wash sale on tastylive, you'll find some content. But at the end of the day, everyone has their own very, very particular situation when it comes to taxes. And it's just better to just get an accountant's view on it and go that route. Next question. I noticed volumes were very light yesterday, and I expect the same today. Is it worthwhile to open new trades in illiquid markets, even though liquidity should be back when I close it? Good question. I mean, if you can get filled now, and you assume that when you close the position or you look to adjust it, you'll be in a more liquid marketplace, I think it's okay. But at the same time, I don't think you need to force anything at this point in time. Like I haven't placed a new trade. I haven't placed a substantial amount of new trades, I should say, in quite some time. I placed a long-term NVIDIA trade because it's NVIDIA and there's no issue with liquidity. But yeah, if you're trying to dive into these fringe names now, I might wait until the new year when there's much more liquidity in general.
Well, we talked about it yesterday. SanDisk actually was one of the trades that we were looking at. Can't remember if it was yesterday during the OTCL, but I think it was. And we looked at that, and look, the trade looked right. It was just a $10 wide iron condor. It was more than 1/3 the width of the strikes, but it was pretty illiquid. And truth be told, if you tried to probably put it on, you'd probably give up some edge, which would take away from that 1/3 of the width of the strike. So that's the perfect, I think, trade. When I think of this example, that's the perfect example of it. And I just think it's better off not to go about that trade. And again, everything was right about it. I mean, it was $10 wide, 1/3 the width of the strikes. The IVR is high, but it's illiquid. I mean, it was like, remember one of the markets was like 8.20 at $9. I mean, it was like, kind of silly. And so why do that to yourself? It's going to be hard to get back in. I don't think that's not just necessarily illiquid because of the current time period. That's just kind of illiquid, but it looks fine. And it's just, why don't you wait for the times where IVRs are higher, like in SPY, that are in the order of 25 IVR and SPY? If SPY is 25 IVR, other things are higher. Wait for those time periods. This is not the time to really force a trade.
Yeah, and we've seen collapsing implied volatility. We've seen the VIX collapse as well. We're sitting at 1450 here, and that doesn't bode well for premium that you're trying to collect across the market.
And there's a reason we're talking so much about silver and gold, GLD, SLV. That's where the volume is. That's where the volatility is right now. Trade that. That's where it's at.
Yeah, it is a very interesting period of time where literally the rest of the market is snoozing and gold, silver, platinum are just ripping around. So yeah, I think there's not going to be much of a difference either. Unless there's a big directional move in your favor, there's not going to be much of a difference if you enter a trade now or if you wait until next week.
Yeah.
Honestly. And it might even benefit you if you wait. Next question. What has surprised you most about this year? Well, you listed like 5 of them.
Fact that SanDisk is up 578% this year. The fact that silver is up the most of the 5 largest assets this year. Yeah, those 2 for sure.
Yeah.
Anything else?
I think
are we just
Bitcoin-
limiting this to stocks because it could really get deep real quick?
Yeah. I think from the broad perspective, the easy winner for me is the fact that Bitcoin had its rally up to 125 and it was euphoric, but now we're sitting at 88 and it's like no news outlet is even talking about Bitcoin anymore.
No.
It's very interesting. So it's interesting because I think the general public is off it. Other than the hodlers, the people that are buying and holding, I think you will see much more volatility there in the future, and it'll be interesting to see how that plays out. But that's what's most surprising to me is like you had this euphoric rally, you had products like MicroStrategy rip all the way to 500 plus. Now we're sitting at 150. It's been a crazy scenario in the crypto space, specifically just with Bitcoin, MicroStrategy, those kind of products. We haven't talked about Mara in 6 months.
Oh God,
this one's at 9. So yeah, I think that for me has been the most surprising is just how we've fallen from the recent highs in Bitcoin and have had a really hard time rallying back. But I think there will be a time and a place where there's a big rally in here. Going back to 125, potentially beyond, and we'll be here for it.
I think so too. I will say though, I think we're getting dangerously close to a point where people might become a little disinterested in it for a little bit. I think that could possibly happen, just to play contrarian. I mean, I think it is at a point where people might get a little disinterested when you start seeing these other assets. This is the thing that happened in markets. People start chasing the stuff that's really moving, and we could eventually see people kind of, send Bitcoin to the woodshed a little bit more here in the next couple of months. It could get as low as 75K because it's just been people haven't been interested in it, and the volatility hasn't been there. Since this question is so broad, I'm just going to take it there. Okay, I didn't expect Minecraft movie to be the highest grossing movie 2025. I did not have that on my list. At all. Number 2, Lilo and Stitch. Like what? I mean, these are the top 5 grossing movies. What's that? What is that telling you? What is that telling you right there? Minecraft movie, Lilo and Stitch, and Superman. Kids are going to the movies, and people are taking their kids to the movies, which I can attest to being true. Although we only saw one of those. We only saw Superman, but that's what's happening. So the movies aren't necessarily dying yet. Buy AMC. No, I'm just kidding. I don't know. But I'm just saying.
Hey.
People are taking kids to the movies. That's it.
There's worse things.
There's worse things.
And buying AMC, hoping for an absolute rip.
The movies are back, man.
Yeah.
Although Netflix might have killed the movies, but
hey, you never know. No, I think it's still a pastime that people enjoy. Like I have multiple friends that have movie passes where they like pay monthly to go to.
Yeah, I don't know about all that, but yeah. I mean, I like going to movies, but
yeah.
I don't know if I need a pass. I mean, it's not cheap though.
Yeah.
I mean, we went the other night. I mean, obviously, like $50 at least to go for all 5 of us. And then I didn't even buy that many things, but I bought popcorn and like a couple of cans, I don't know, like $30-$40.
Yeah, so you spent like $500. So maybe you do need it. But no, I think it's an interesting point. But yeah.
Going to the movies is cheaper than taking a family of 5 to breakfast, I'll tell you that.
Yeah.
Like a breakfast spot, you know what I mean? Like that's $25 a pop.
Yeah, if you leave the house, you're spending hundreds of dollars.
Yeah,
that's just where we're at, and that brings us back to Bitcoin.
Yeah,
Bitcoin might be our savior in terms of cost adjustment.
Yeah,
but yeah, it's been a crazy year. And yeah, I see a YouTube chat question: are we doing Guess the Market for 2026?
Yeah, for 2026. Yeah. I don't know. I think they're still debating that, but Tony is supposed to. I think Tony and Chris Vecchio are supposed to host tomorrow's show, and they are going to give out the winners for this year. So stay tuned for that.
Next question, please. Do you approach 2026 with a plan to do things differently, or another way of putting it might be, do you think markets and the opportunities present change just because the calendar year changes? No, the markets don't know what time it is in terms of the movement and what's happening. Like a perfect example is this gold, silver, platinum situation. That's going to continue into 2026. It's not just going to be this like year-end holiday thing. I think for me, 2026, just like most people, end of the year, I like to do a quick reflection, see what worked, see what didn't work. I also like to look at my total P&L and sort by like biggest loser, biggest winner, and then just be like, okay, why was this the biggest loser? Why was this the biggest winner? Can I repeat this? And IBIT is definitely one of my biggest winners on the year. And I'm going to do the same exact strategy going into the next year, where I'm just selling a strangle, eliminating all upside risk. And I'm doing that in the E-minis too. For me, that's been my biggest aha moment of 2025, is realizing that if you want to be bullish in a bullish market, you don't need to underhedge a strangle. Like if you have a strangle and you're getting tested to the upside, you don't need to just roll the put up and lean short. You can move the whole damn thing up. And that's really been the biggest eye-opening thing, is like, okay, these markets, as long as they're moving up and to the right, I want to be a part of it, but I also want to have that neutral premium, and I want to make money on premium versus just buying and holding. Because you're gonna outperform when the markets are flat or down. You will outperform if you have a strangle on relative to buying and holding. Because buying and holding, you're just eating all that loss to the downside, where you can manipulate your loss with a strangle. And to the upside, same story. Like you're still gonna make money to the upside as long as you're adjusting. So that's been my biggest approach change for 2026 and beyond. And that was all from the 2025 strangle. Like that was the whole idea with the IBIT strangle. So every year I think I fine tune what I do and what I don't do. But that's really it for me. What about you?
Yeah, we actually did a couple of those videos recently, and be on the lookout for those about looking at some of our biggest winners and losers, which is always a really good process to do, because you think about why this happened. In some cases, your biggest loser might be something that you got frustrated on, and it's a good idea to sort of analyze that, do that sort of autopsy on that. But I just because the calendar changes, I know once upon a time I used to try to think ahead of how this calendar might change, or like I said earlier, the idea of flipping the whole S&P 500 and seeing what underperformed this year. Oh, cool, I'm going to buy those because they're going to come back. Like I don't do that anymore. Like Mikey said, just because the calendar turns doesn't mean, the market doesn't know the difference really. And so as a result, I've just gotten to this point in my life as far as trading. I take things as they come, like I'm not going out and looking to buy Bitcoin because it's been down and I think it's going to be up at some point this year. Like, no, I mean, when it goes up, then I want to buy into strength. And that's the way the idea of buying into strength and selling into weakness is definitely something I've embraced a lot more, as opposed to trying to buy what's down or sell what's up. I don't really try to do that as it is. I mean, not like as a strategy, right? Like right now, the idea, like I still have to put on an SLV because I'm playing that to the downside because I feel like it's overstretched to the upside. That's not like I'm going to look to get short silver all year. No, that's just a short-term trade. So I take things as they come. And so just because the calendar is changing, I'm not really that focused on the year changing as opposed for my trades.
Agreed. And speaking of reflection, 8 o'clock, we have the Tasty Bites Best of 2025 segment. And then at 9 o'clock, we have the Best of 2025 market measures. So today, whether we like it or not, is a day of reflection.
Yeah.
And it'll be good because it'll highlight some of those top performing, most watched segments from the year. Good.
I like that.
Next question.
Isn't there four?
That's it.
Oh, really?
Oh, yeah, that's right. He did say that we had 4. We went through 4.
Oh, yeah, I didn't realize it was 4.
Yeah.
So fast. Time flies when you have them.
But yeah, let me check the YouTube chat real quick. See if we got any other questions.
Seriously, though, top 5 movies of the year. Minecraft movie, Lilo and Stitch. Domestically. Minecraft movie, Lilo and Stitch, Superman, Jurassic World Rebirth, Wicked for Good.
Well, Minecraft has Jack Black, right?
Yes.
He might be the best cast character for that role. Just like over the top,
Minecraft I think. I actually don't know. I'll be honest with you.
I think it is him.
Oh yeah. I think you're right. Yeah. I mean, wow. Like in the top 10, I think there's only one R-rated movie, and that's Sinners. I think all of them.
Sinners is top 10.
It's number 7. Yeah. Round of applause for that dope movie. Number 7, but Avatar. First of all, how does James Cameron know how to make a movie that makes just billions of dollars out of the gate? I don't know how he knows how to do that. Bro,
Well, Avatar was really like the first step into AI.
Yeah, pretty much.
Like that was our intro to AI.
Yeah.
Was Avatar back in the day. Because when was the first Avatar movie? It had
2009, actually.
Okay, yeah.
I just looked this up recently. I didn't think it was that long ago, but it was 2009.
Yeah. So that was our first this is legit quality and it's all fake.
Yeah. I'm seeing these videos now where it's they're crazy. It's just crazy.
I do see a question here. For a poor man's covered call, would there ever be a case to roll down the long position? Not really. I think so. Rolling down the long position means if you have a long call that's in the money.
They mean rolling up, right? If you're long the call, they mean rolling from 200 strike to 220 strike.
Yeah. So you can do that to reduce your risk if you're trying to capture some gains, if that's the case. But if you're seeing losses, if you have a poor man's covered call and the stock or ETF goes down, selling the at the money and moving it back in the money isn't something I would do. I would just leave it because you're adding risk into a bad situation, and it's defined risk for a reason. You're still going to make back that value if you get the reversal. If you're adding the trade-off is if you sell the at the money on a losing position and move it back in the money, you're just adding a ton of risk for little profit potential. You're already capped on the upside because your short call is capping your upside profit potential with that long call. So, yeah, I would just leave it personally and see what happens. But because it's going to be a huge risk adjustment or risk addition for very little profit addition.
Yeah, assuming they mean rolling up with, from the 200 to 220. Totally agree. I mean, especially if you have, obviously you said the poor man covered call, so you already got that short at a nice strike where you feel comfortable. Like you just said, if you roll that up, I mean, everything changes. And, at that point, you're either closing the whole thing instead of just rolling one up. You're either closing the whole thing and starting over, or, I would say that. But yeah, there's no reason I'm going to roll up and then leave that short where it is, because then you've completely changed the whole complexion of your trade.
Yeah. I think the most practical and most probable situation where we're rolling up is if we have a zebra, because a zebra has no upside cap. So a zebra, you have a back ratio. If you get the move to the upside, you can move the zebra. You can close your deep in the money zebra that has a lot of value and a lot of risk on the table and just move it back at the money. And you can secure a lot of that profit. You still give yourself that unlimited share upside, but you're eliminating your big downside risk. So adjusting zebras, if they're profitable, if you want to stay in it, is 100% something that makes a lot of sense.
Yeah, agree.
Let's see if we can find some more here. Got a couple minutes left.
What was I looking at? Worldwide. Naza 2? What the hell is that movie? 2025 box office worldwide. Zootopia was a big damn movie. Lilo and Stitch.
Zootopia?
Zootopia 2. Dose. Yeah. Interesting that the F1 movie wasn't in the top 10 domestically.
Yeah. Maybe it didn't have enough time.
A lot.
Yeah, it was great. Maybe it didn't have enough time to acquire capital.
Seriously? I mean, Minecraft movie came out April 4th. F1 came out only 2 months later. Ain't even close.
True. Jamal, I battled my natty gas position, and I'm now close to a scratch. It's moving in my direction. Do I close the scratch or hold for a couple of more days?
Yeah, we are here. I am still not quite a scratch. I have the 380 4 put spread. Look, this is a good question. I mean, I assume you're in 28-day cycle too. Your probably strikes are a little bit different than mine. If it's a scratch and you've been worried about it and you don't like the the potential risk, or if you feel like you want to close, and there's nothing wrong with closing for a scratch if you don't really love a position. You can just close it and move on. Obviously the implied vol is still kind of high in there, but if you're not feeling it, close it, move and just wait, move on, or you can roll it out, or you can save. If you can close it and save that money and wait for a better trade that might come when volatility pops up overall in the market again, or maybe move it in something that's actually, moving around a little bit more right now, like an SLV or something, right? Like, so the answer is there's nothing wrong with closing for a scratch. If you need me to tell you that makes you feel better, then cool, you can blame it on me. But
there you go.
I assume you're asking because you probably don't like the way it made you feel when it was down there. I can understand, and maybe had a little more risk than you wanted. Totally understand though.
Yeah, I think it's not always about getting to 50% profit on every trade. Like, it's not going to happen. A lot of times, and we've talked about this many times, but a lot of times it's about bringing your losses back to a scratch. Because if you put on a trade and your max profit or your 50% profit's $100, and it goes to the downside like Natty Gas did, and you're taking a $500, $600, $700 loss, and then you bring that back to a scratch, the value added back to the portfolio is 7 times what your 50% profit was. So it's a huge value add if you can turn your losing trades into lesser losses or scratches, because your losing trades, especially from an undefined risk perspective, you're going to have a handful of trades through the trading year where they are large losses. But if you can manipulate them and manage them and bring them back to scratches, that's really can be the difference between a really great year and a mediocre average year, especially if you can do that consistently. So yeah, I totally agree. I think if you had a bullish position, or even if you had a strangle on in here or whatever you did, if you took the losses all the way from 5 or 4.5 down to 3.5, and now you're getting this 3-day rally in a row and it's saving you, I think there's nothing wrong with getting out of that position and coming back to it in a couple of days. That's it. We are out of time. Actually, last one. Any chance to do a written breakdown of my IBIT trade? Yes. We can do that tomorrow. Or Friday. No, not Friday. We don't have to show on Friday. Well, yes, I will do that for sure. Because it definitely deserves an anatomy of a trade. It's been a great trade. And it'll just reemphasize the whole process behind it. But yes, we will do that. Let's take a quick little 90-second break. We'll come back for the 8 o'clock show, Tasty Bites Best of 2025. Stay tuned on the YouTube channel as well as tastylive.com. But yeah, we'll take a quick little break and we'll see you soon. You're listening to Tasty Live.
Tasty Trade's Money Match event. Unlock 30 days commission-free trading. Plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new Tasty Trade account. Level up your trading experience with active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new Tasty Trade customers.
We wanted to call in because recently, some traders may have known there was some crazy activity in the SPX, and for some reason they were stopped out 200 or 300%. And what happened, unbeknownst to us, is the trade desk just emailed us and said these trades have been busted, and you're not going to have to pay it. It saved us about $10,000. And then Marty calls us this morning and says, I just want to explain to you guys what a trade bust is. When you really get down into the to the nitty gritty and you're in the foxhole and things are going bad, when you can reach out to the trade desk and you talk to someone that you've spoken with before who understands your account and the way you trade, that is a feature of tastytrade, which I think you guys need to emphasize more, because it certainly has meant a lot to us. It saved us a lot of money, and it's taught us how to trade a lot better, and that's really helped a lot.
Well, thank you.
This was not a paid, you're not getting paid for this advertisement.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with tastytrade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the tastytrade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Look who's back testing. tastytrade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at tastytrade.
Grow a strong community with tastytrade's referral program. When your friend joins tastytrade, you'll both receive $100. As your community grows, you get more bonuses. The referral program runs through December 31st, only at tastytrade.
Welcome back to the show. It is 8 o'clock. We've got a Tasty Bites segment for you. Best of 2025 Tasty Bites.
I'm excited.
It's going to be good. It's going to be good.
I mean, who doesn't like a recap?
Yeah. And who doesn't like the little Tasty Bites logo? Do you ever notice that? The little teeth on it?
Yeah. It's kind of dope. It's kind of dope and sinister at the same time.
I like it. I did see the referral program on the YouTube channel. We've got that pinned to the top of the YouTube chat if you want to check that out. $100 for a friend and you if your friend joins and deposits $2,000 minimum, but you can scan the QR code. Gives you all the information there. You can find your referral code on the Manage tab on tastytrade. I know you're going to be hanging out with some friends for New Year's Eve. Maybe some of those resolutions are to get into the markets and start slinging those options.
Slang it.
Yeah. That'd be crazy if I went to a New Year's Eve party and someone was like, listen, I just want to start slinging these options in 2026. I'd be like, come to the right place.
Yeah.
Come to the right place.
You're here. You've arrived.
But yeah, check it out. Scan that QR code or go to tastytrade.com/referral. Best of 2025. What do you think? We were just talking about how it surprises you that movies, the movies that are at the top for 2025 are basically kids movies, for lack of better words. what kind of theme do you think we're going to see for the best of 2025 Tasty Bite segments?
Something related to AI, I assume.
Yeah. I think it's going to be selling premium.
Yeah. Some type of word. Yeah.
No,
with a VIX average of like 19. Yeah, for sure.
Yeah. I think it'll be about adjustments through the downside moves you've seen.
Probably right. Yeah. I mean, because we did have we've talked about this a couple times. There's quite a few dips that happened throughout the year. And if you did those right, worked out great.
That's how it always is, isn't it?
Yeah, it is. It's scary when it's happening, but you know.
That's why size is always the most important thing, which I think we'll see here too. All right, let's dive in. Best of 2025 Tasty Bites. The hidden cost of playing it safe.
What?
We literally. Okay, don't trade small. Just trade once, trade huge. That's our joke around here. No, hidden cost of playing it safe. July 14th, episode 2025. Let's check it out. Compared to a naked short strangle, adding 10 delta wings reduces conditional value at risk by 66%, reduces buying power by 85%, while reducing max profit by only 48%. So this study initially analyzed a spy strangle versus an iron condor, 20 delta strangle versus a 20 delta short, and a long 10 delta option for an iron condor. You can see here, conditional value at risk gets cut by a huge margin. Buying power gets cut by a massive margin. Credit only $300 relative to $582. I mean, we talk about this all the time. Especially this is something that we deploy a lot when we go to place a strangle, and we might see that the product is taking a little bit more buying power, or if it's 100% IV product, like it usually makes sense to just go and define the risk because you're going to be dealing with like maybe a cash secured product or again a heightened buying power requirement. But what are your thoughts on?
I mean, yeah, look, when you price out and size up like a strangle immediately, I think that's the first thing that people are drawn to is that pop, and it's like, ooh, that's really nice. And the amount of money that you can make. And I think people do that. That's probably the biggest mistake on every trade. Like when you size it up, you queue it up. See, everybody always pays attention to the potential money that you can make and kind of like, okay, I know what I could potentially lose, but forget about that. This is how much I can make. And that's definitely something I think people do initially on a strangle. Whereas, you can put together a couple of smaller trades that you're not thinking about as much too, right? Like I think with a strangle, most of the time you have those on. They do take up a lot of buying power, and they probably take up a lot of percentage of your brain too, if you're thinking about them day in and day out. So this totally makes sense. I get it. The idea of being safe, you can do that across a couple of different things, and you're not necessarily, it's not absorbing your brain as much.
Yeah. On the flip side though, defined risk, not as much management opportunity. So if you're staying in a strategy for a full year, or you intend to roll and defend a position, I think there's an argument to stay undefined risk, keep that credit higher, and keep those rolled credits higher, because there's plenty of scenarios where you have big move to the downside or upside, and then it reverses, and defined risk just does not have the same amount of defensive mechanics. So it can go both ways, but when you have situations where you're using a ton of buying power for little credit, I'm always going to go defined risk in that scenario. Next one, please. Sizing up on defined risk trades generally results in more risk than a strangle. And, when you think about that, so again, sizing up on risk-defined trades generally results in more risk than a strangle. It can be because if you have a defined risk trade that goes in the money and stays in the money for that period of time, there's just not much you can do with that position. Where a strangle, you can manipulate it more easily.
Well, iron condors are a good example of this. And again, people do love to do the iron condors for size. I know they have great success with it for sure. Just be careful at a time like this. Is a perfect example. Like at a time like this, most likely there's a lot of iron condors being put on and markets are barely moving. So it's awesome. until like 2 weeks from now, for whatever reason, the market moves huge out of nowhere. And that we've seen that happen when markets are quiet. A couple of weeks go by and all of a sudden, boom, you have a big 150 down day move and volatility jumps by like 4 points somehow. I mean, that's when it can get scary and it can mess you up. But again, you kind of get lulled into that, right? Because of this kind of environment.
Yep. And I think this is the most important point here. Iron Condor has lower P&L and more frequent CVAR occurrences than a naked strangle, meaning that increasing size comes with large and frequent CVAR losses. And that's simply because if you have a strangle, your conditional value at risk is significantly higher than an Iron Condor. Like your Iron Condor CVAR is ultimately the defined risk of that spread. And if you have a 10-point wide or 20-point wide wing, that tells you that it's only 10 or 20 points beyond your short strike. So Iron Condors, the probability of realizing max loss on an Iron Condor is significantly higher than realizing a loss equivalent to your buying power or CVAR with a strangle, because the market needs to move that much more for you to reach that same point in time, or same point in the price point, I should say. Mm-hmm. So again, there's reasons to do it, there's situations to do it, but when it comes to realizing losses and having those losses be close to max losses, Iron Condors are of course going to have more occurrences, just because there's less you can do, for sure. Next slide, please. Narrowing an Iron Condor simply reduces the credit, CVAR, and buying power across the board at nearly the same rate, essentially spinning your wheels. So looking at a wide versus narrow Iron Condor, 20 delta and a long delta defined, long 10 delta defined risk option versus a 20 delta and a long 15 delta defined risk option. So just moving that in closer, the credit gets cut by a third, conditional value at risk gets cut by a third, and the buying power gets cut by a third. But what we're going to see is the same scenario where your probability of reaching your CVAR is ultimately going to be higher because your long option is being moved just that much further in the money, yep, or closer to the short option. Next slide, please. Simply adding long wings may not be the answer. Even though we still have access to defined risk trades, be aware that a fixed width spread or Iron Condor in an underlying that increased significantly in price sees its pop greatly reduced. In order to get the same pop that you had in 2020, your wings on your 20 delta wide IWM Iron Condor would need to be 20 points wide, making it much less feasible for smaller accounts, partly due to added skew. So 20 delta short with long strikes 5 points away, you can see your pop in 2020 relative to 2025. Pop in 2020 was significantly higher relative to the pop now. And I think if we look at IWM on a price chart, it's going to be funny. But yeah, in 2020, we were trading, a high was around 160. 170, and we dropped as low as under 100 in when COVID hit and everyone was locked inside, but quickly rallied back to 150. Now in 2025, we're dealing with a price point that's almost double that, sitting at 220. I mean, we got as high as 250, 260, and got as low as 180, sub 180. So yes, we talk about this all the time too. Like the width of your spread being narrow or wide has everything to do with the price point of that product. Like a 5-point wide spread on a $30 product is very different than a 5-point wide spread on a $200 product. A $200 product, 5-point wide spread, that's super narrow. But a $30 product, 5-point wide spread is wide because of the delta difference. So I think it just reemphasizes, if you're doing Iron Condors, look at the value difference between your short and long option and look at your delta difference between your short and long option. And that will help you determine, is this wide? Is my probability of reaching max loss low or high? And if your deltas are very similar, your probability is high. If your deltas are very different, your probability is lower. Next slide, please. When using undefined risk trades in low IV stocks, you get a sizable increase in buying power. However, in higher IV stocks, the percentage increase in buying power is much less, allowing you to use more undefined risk and have a better credit buying power ratio. So Strangle versus Iron Condor, buying power reduction in Walmart versus United, both $95 products. IV in Walmart, 24%. IV in United, 51%. The 1 standard deviation Iron Condor, very similar credit, but the 1 standard deviation Strangle, $1,200 in buying power versus 900, and the percent change in buying power, 200% versus 100. So again, very different situations here. And of course, in the higher IV stocks, you have the ability to get wider and collect the same amount. You have the ability to absorb more because your strikes are going to be further out of the money than a closer Strangle like in Walmart.
Yeah, this is interesting. I would totally expect UAL to, especially being a little higher IV, expect that 1 delta Strangle to be, one standard deviation Strangle to be more money, honestly. I would expect those to be flipped.
Yeah. Final slide, please. Takeaways. By trading in Iron Condor without getting too narrow, you can reduce the tail risk and capital components that come with Strangles while maintaining a reasonable credit. However, be careful of sizing up more contracts or getting too narrow. Sizing up defined risk tends to result in more risk than a Strangle. Narrowing long strikes doesn't optimize anything and can reduce pop even further. So again, if we have a decision to do multiple contracts with a narrow spread versus one contract and make that spread wider, we're more often going to make that decision to just go wider with one contract versus adding multiple contracts with a more narrow spread. Defined risk strategies cost 25 to 40% of the credit received. However, undefined risk and high IV stocks offer a better credit to buying power ratio and smaller buying power increases, making undefined risk a suitable option for smaller accounts if done optimally. And again, it always comes down to your ability to withstand variance. And if you're doing undefined risk, you need to be able to withstand pretty much all variance. Otherwise, it's a situation where you probably should go defined risk. But it all comes back to defensive opportunity and the things you can use in your toolbox to offset some of that risk down the road.
Hidden costs of playing safe.
There you have it. And we are at almost 8:20, which is bringing us to opening bell in just a little bit. We've got the markets opening in 13 minutes-ish. E-minis down 3, NASDAQ down 22, Bitcoin and ETH still sitting around the same levels. But yeah, silver, platinum, gold continue to be the story. We'll see how they react to the market opening in just a little bit. But we're going to take a little 90-second break, and we'll be back shortly. You're listening to Tasty Live.
Tasty Trade's Money Match event. Unlock 30 days commission-free trading. Plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new Tasty Trade account. Level up your trading experience with active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new Tasty Trade customers.
When the market moves, traders need to move faster. tastytrade Active Trader Tool offers full depth of market visibility, one-click order entry, and instant position management so traders can react in real time. While others charge for professional tools, tastytrade provides them for free. Opportunity can move fast. Seize it with Active Trader. Try it now on tastytrade.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
Wolf! The first half of this year's market has been giving the good guys the business.
It's certainly been back and forth for sure, Pete, and I'm getting whiplash over here.
With good mechanics, we can see Team Tasty stay strong in the second half.
Absolutely. Let's check out our starting lineup.
Tony Bat Batista, the John Jay College of Criminal Justice. Number 69, because it's one standard deviation plus one. And you know, I'm the Bat.
John McLaurin, Wisconsin. Number 2, because I'm Beth's right-hand man.
Vanetta Logan, the Indiana University. Number 3, because that's how many shots of bourbon it takes to make it through the first hour.
I like the looks of that lineup.
Well, be mechanical is always better than just trying to run plays and see what sticks, Pete.
When you got skin in the game, you stay in the game.
That's right. Now get off the couch and get into the game.
Watch Tasty Trade.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80 plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
This is opening bell. We've got about 6 minutes and 20 seconds left.
6 minutes. 6 minutes. You know what I learned? You know what I learned in that last segment there? Is that we looked at, in that was July, and Walmart and UAL were both trading 95. And they're both trading around the same spot now.
Really?
Yeah, really. I was like, wait, what? That's kind of interesting. And the fact that they're both, again, they're 3-letter tickers, so I just assumed they were listed on like the NYSE. They're both listed on the NASDAQ. How about that? That's what I learned. That was my takeaway in that last thing.
Interesting.
Kind of interesting.
I'm about to lose my my lowly UAL status here. I have a silver.
Yeah, I think I am too. Yeah.
From all the travels.
I know.
It was a fun ride.
I know. I know.
I messaged United on like their little app, and I was like, "What do I need to do?" They're like, "You need to have one more qualifying flight," and I'm like, "How about I buy a ticket and don't show up?" They're like, "No, you have to take the flight."
You can do that. It kind of in the form of a card. So I've actually used the card for a while. I mean, I just eventually was like, okay, I'm just using I got a card and I just kind of use it to buy stuff and then I just pay it.
To get the points?
Yeah, that's kind of what I do. You know, take the points.
Well, I did the math and I would have to spend like 20 grand on my card to get the.
Yeah. I know.
So that's problematic.
No, it is. It is. Yeah.
But I mean, how is there not a way where I can't just like spend $100 or $200 and just get the same thing next year?
Because they don't want you to have it. It's that simple.
That's true.
Yeah.
It was nice when I was doing the international trip because you can upgrade for free.
Dude, that was the best.
So that saved me like literally $700 or $800.
Yeah.
I wouldn't have done it if I didn't have the card, but like because I had the status, I was able to do it.
Yeah.
But that status is leaving.
It's nice having the status, right? You feel like somebody, and then it's changed.
I was a silver boy. Now I'm.
That happened with me with Hilton. I was diamond, and since I haven't stayed anywhere more in the last like year, down to I can't even say it out loud. I don't want to say what my new status is. It hurts. It hurts.
We'll say it's not diamond.
Yeah, it's not diamond. It's not diamond, and I'm not okay.
You walk in there and you're like, "Do you know what I used to be?"
Yeah, exactly. They know.
Used to be a diamond.
They know. Oh, hi,
Like,
Mr. Chandler.
Yeah,
Good.
former diamond.
I think I know you, but you look different. Hi, Raphael.
Fun times.
Yeah.
Couple minutes left here. Bitcoin catching a bid, up 4 digits now, up 1,000.
It hurt us.
Yeah. E-minis down 4, NASDAQ down 40. Gold, silver, platinum continuing to be the story of this week. Silver up 7.5%, gold up 1%, and platinum up 5%. Yesterday's move in platinum was crazy. If we go to the daily chart here, it was down like 15%. Just absolute madness. And we've been seeing 5% moves every day for the last 5 trading sessions, at least 5% moves every day. So it's gonna be crazy to see how this thing settles. Because I mean, this won't go on forever. But what will the price point be when it stops? I think is the interesting question.
Yeah, I mean, look, it's this is the way that metals move. Honestly, this is one of the reasons why I've really never been a proponent of like strangles in metals, even at the times that they require it, because I remember these things. I remember these type of moves. I mean, and again, commodities can move in a way that, especially in a short time period, that can just eviscerate you if you're not, if you're undefined. So again, speaking as a guy who sold a strangle in SLV yesterday, but I did that against a position that I'm already kind of waiting on. And again, my risk is to the upside, but I feel like we're kind of, and again, I could be wrong. We'll see how it goes. But it's SLV, and it's not a huge, again, it's a huge product, but it's not one that I'm clearly that worried about. And honestly, I'm short. What my upside is the I think God, is it 70? I think is the I sold the 70.62 strangle yesterday.
Yeah.
I want to see SLV go up even higher, because then I think it gets crazier. From here, in my opinion, if silver goes to $100, woo, that's gonna be wild. But I think the turnaround will be wilder at that point. Because again, I know it's up 167%. I know things can go higher. I know the Monte Carlo theory, but I would like to see it. I would like to see it in this case.
I think it would be interesting to see that price point. One of my friends, he works in cancer treatment centers and he repairs those like huge machines. He's a brainiac, but he's like, this platinum surge, the price of platinum, because they use platinum in a lot of their products. He's like, it's creating issues with repairing these things, creating new. It's like, when you think about it, if the cost of silver doubles from here, how does that affect the AI world, chip world?
Right.
Like that could really be the huge fallout that people are thinking about. Like if you're expecting the market to crash, it could be this. It could be the price of metals being so expensive that it becomes no longer feasible to make this like a super profitable endeavor.
And I think this is one of the things that people talk about a lot when you talk about different assets, and the fact that there's a physical component to it that makes it more real than the idea versus like a Bitcoin, right? Like there's no physical component to it. There's a physical component to this, and there are a lot of real-time applications that these metals utilize that could become strained and create that supply and demand. So yeah, man, I actually would love to see if silver's gonna touch $100, because I feel like the fall will really be crazy then. Right now, it's actually still somewhat contained, I would say.
Yeah. There's the bell, 8:30.
always forget.
That's a new one.
Yeah,
I like that.
You like that? Yeah.
E-minis catching a bid, NASDAQ catching a bid. We're about to tick green here. If this continues, we're off to the races. Bitcoin up 940, ETH up 40. E-minis completely flat on the day, but that's not the story, as we've been saying time and time again. Platinum up 6%, silver up 7.5%, coming off the highs, just a tiny bit, still up there though. And gold deciding what it wants to do next. Speaking of gold, in about 10 minutes, we're going to have Craig on, Futures in Focus. He's going to tell us everything we need to know about gold futures products, the 1 ounce product. So stay tuned shortly for that. But yeah, kind of a muted day here, as we expected. I mean, the VIX is super low. E-minis, NASDAQ, we're going to see low volumes considering we've got New Year's Eve tomorrow, New Year's Day on Thursday, and just another short week. These short holiday weeks, crazy things can happen like we're seeing in gold, silver, platinum, but for the rest of the market, it can sometimes be like this, just a little break. You know?
Yeah. This is again lowest VIX of the year, even though it's a little bounce here. But this is the lowest area of the year, as you can see when you look at the chart. I mean, it's pretty low, and for good reason. I mean, gosh, when you think about again, you can't help but look back on the year that we've had. Obviously, we all remember what happened in late March and April, and what happened in the way we got up there, the tariffs, et cetera, the other few blips throughout the year. Like I said, the last time I checked, the average VIX for this year was 19, which again is close to the close to the long-term average. And that just lets you know it was somewhat of a volatile year. But it went in different spurts, and you were able to just have so many different trading opportunities this year. Again, I mean, looking across the year, we knew gold and silver were moving at times, but it wasn't dominating, I should say. I mean, it was still like more about the AI trade. It was still more about the Microsofts and the Metas and the Apples of the world and tariffs and what names it was going to affect. And at one point, the retail names and, these furniture names that were getting decimated, right? Because they had stuff coming from Vietnam and all that. And so there was just all of these different asset classes that moved a lot throughout the year that we were able to trade. I think this has been one of the best trading years ever, honestly. Just all the different things you were able to trade throughout the year. Even bonds were still interesting at one point in time. Currencies did some stuff. So it was quite the year. I mean, think back to 2022 where nothing was fun to trade. And the 10-2 spread, if you traded that, you complained about it all year. I mean, those were the kind of years that we've had before. So yeah. So this was a great trading year overall, I thought.
Yeah, I mean, you've had the Mag 7 stocks. Basically, all of them are significantly higher from the open, but you've had your opportunities to play upside and downside moves in here, and that's really all you can ask for from a trader's perspective. You don't want to see just this up and to the right, like Abercrombie and Fitch. We were just talking about that. Jesus,
damn, you're right, it's bad, bro. Oh my God.
Yeah.
Oh my God.
I didn't even realize that it was mooning like that, but yeah.
Isn't there a documentary on ANF and the guy who started it and how am I imagining that? He's kind of a weird, seedy dude. Am I thinking about the right one? I think there's a one.
I think there is something there. But this is what you don't want to see if you're trying to trade. Like from this move from July to March, just an up and to the right, no selling. Very little selling, and everything is just straight up and to the right. You had massive gains here. This is not a trader's market you want to see, or a trader's chart, I should say. But when you look at this year for all of these products, NVIDIA had its heyday, but from August to now, we haven't moved, and you've had up and downside movements pretty regularly. Same with Amazon. From April lows to the highs, of course, you have a higher high, but from August to now, chop, upside, downside moves. Microsoft, same story. August was actually where the high was reached, right around 560. Now we're sitting at 487. So, but again, you've had your dip buys, you've had your rip sells.
Microsoft, look at those the last several weeks of Microsoft. It's stuck in the mud.
Yeah,
it really is. You kind of wonder what's going to happen there. I wonder if it's going to break out or break down, but it's definitely coiling. Something's going to happen some point soon.
Yeah, I mean, Apple, similar story. August 1st to now, significantly higher, but still, you've had your rips, you've had your sell-offs. Like, it's been a nice two-sided action market.
But these things have run out of gas for the year. They're all just coiling. They're just sitting. I wonder what's going to happen next, man. Apple, Microsoft, NVIDIA, Amazon, Google, Meta, Tesla, no, not so much. But all of those that I mentioned, AVGOs in that category too. Wow.
Yeah. I think the cost, I think if platinum, silver, gold just keep ripping.
Yeah.
That's what could be the catalyst for some market mayhem.
Yep.
That is for sure.
I think so for sure. I think if they do, which again, that's actually kind of why I want to see it. I'm not rooting for anybody to lose money to the upside. Trust me. I think the more that they move to the upside, the better chance we have for a reckoning and a change. And then that money's going to flow out of that into something else. And it might be back into those names, or it might be into, healthcare or something else, or financials. Like, the money shifts. We haven't seen, oddly enough, that's one of the things that you talk about coming to the beginning of the year. I will say this, you're going to hear a whole lot about the January effect with regard to small caps. They talk about that so much. You're going to hear about it all January for IWM and for small cap stuff. It's always, that's for the last, 20 years I've been in the market. Every January that comes, they start talking about the January effect. It's always the thing. You're going to hear about that at some point. But the idea of sector rotation, I feel like we haven't seen it as much to end the month/quarter here. Of course, this is, end of a quarter coming up tomorrow, right? That's the other thing. So I wonder if there's going to be some sector rotation. I wonder if that's taking place on a small scale. I haven't seen it because obviously volumes have been so low, but I think that's the other thing that might be starting to take place and might start taking place over the next week or so here.
Yeah, seeing a lot of low implied volatility in SPY right now, but like we're saying, like if these things keep going, silver, platinum, gold, like we're going to see some volatility here, and it could permeate through the tech stocks, which are super concentrated and could bring some craziness.
I just looked at platinum again. I remember last week when we were looking at platinum, and I looked at, if you want to sell a future, what it would cost, and I felt like it was like $5,000, $5,900, and it went to like 9,700, and now, boom.
Yeah, 13 large,
pretty fast.
Yep. And yeah, that's another thing with futures is you can see a lot more buying power requirement fluctuation, especially in super volatile times. So you got to everything comes back down to sizing appropriately so that you can absorb some of these moves. Yeah, a lot of people in the YouTube chat saying American Apparel was the docuseries, which is correct.
There's also one on Abercrombie too, though. I saw it's not a good one. It's not positive. Trust me.
Yeah. I
looked it up. It's not positive, but I guess there's one on American Apparel too.
Yeah, I did watch the American Apparel one. That one was insane.
Yeah.
And I think it's kind of a spoiler, but the American Apparel one, it's all about like how terrible of a person this person is.
Yeah.
And now he's like the CEO of Yeezy. Something like that.
That's actually kind of what I was thinking of too. But there also is one about Abercrombie, and it deals with these weird, have to check it out, look it up.
Debating to fade this little metals pop or not this morning. Hey, do what you gotta do, but defined risk is where we're sticking here.
Yeah.
Especially in gold. I think Craig will agree.
Yeah, and again, I keep looking at. I keep pointing this out. I keep thinking, and again, I'm playing this to some degree, like it's going to go like it did in October. And again, so far it's looking a lot like that. If you look like the October move and you look at right now, this is the day where you get somewhat of a bounce back. Is tomorrow going to be the fade or not? Nobody knows. Therefore, define risk.
Yeah. We're going to take a little 90-second break. We're going to bring Craig in for Futures in Focus, sponsored by the CME Group. Everything you need to know about gold, micro gold, and the 1 ounce. So if you're thinking about trading these products, stay tuned. We'll be back in just a little bit. You're listening to Tasty Live.
Tasty Trade's Money Match event. Unlock 30 days commission-free trading. plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new tastytrade account. Level up your trading experience with active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new tastytrade customers.
All right, Katie, what is the Widowmaker?
The Widowmaker can be any spread that is volatile that might dink you if you're on the wrong side of it, but at tastylive, the Widowmaker historically has referred to a spread in natural gas futures and the seasonality of injection season and the storage around that. So it's typically a calendar spread that has the propensity to move between the March and April natural gas futures contracts.
What does tendies mean?
Tendies refers to ordering chicken nuggets at a restaurant when you're out watching the game with your boys or your girls, but tendies in the options trading world or the trading world refers to profits that you are taking on a position. What is an offer?
So the offer price is the price at which you can buy an option at, the bid being the price to sell at.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with tastytrade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the tastytrade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Grow a strong community with tastytrade's referral program. When your friend joins tastytrade, you'll both receive $100. As your community grows, you get more bonuses. The referral program runs through December 31st, only at tastytrade.
Hello, everyone. Welcome back to the show. My name is Mike. I'm here with Jamal, and we've got a special guest in the house, Sir Craig. How you doing?
Craig, baby,
Great.
how you doing, man?
Great, thanks for having me.
Yeah.
Of course.
Good to see you.
Thanks for coming in.
We're all old friends. We've traveled before. We've hung out.
It's been a while, though. Yeah, we missed you. At least I missed you guys on the road this year.
Yeah,
you guys you were doing your own thing, huh?
Yeah, I was stateside. He was on the move. And you were on a different thing.
We were on a different tour, right? So I missed, I was hoping maybe I'd get a journey cover this morning or something, Jamal, because I didn't get it on the road this year.
Every time we talk.
Did I miss it? You already did it this morning?
It's actually a requirement. When he's on the show, he does a full song.
And I missed him. See, I was hoping you'd open my segment with that.
Do you want to know how the whole thing started? That whole thing started when we first started doing shows again, which again was the first time I started doing Tasty shows. And we were at the Vic, which was really funny to me because I think 3 months earlier I saw this one dude, Kingfish, at the Vic, incredible blues dude. And so 3 months later, we're at the Vic, we're doing a show. And before that, maybe within the week before that, I don't know what we were talking about. And again, I used to do a segment with Tom and Tony on Fridays. And I was talking about something and Tom was like, "You can't sing." What? I was like, "Really?" I was like, "You know what?" And I was hanging out the night before, literally the night before. I think my kid had won baseball. We had won baseball league. And we were at home and I was making a big thing for it. We were playing We Are the Champions. I was like, you know what would be good? You know what would annoy the hell out of Tom? Is if I sing We Are the Champions. I'm going to do that. Yeah, I'm going to do it. I just made it a good idea for myself. So I went the next day and nobody knew I was going to do it. And I think, of course, I didn't even tell Britt ahead of time because I knew she would have been like, "No, we can't do it. We got this much time for the show." But I was like, I'm working this thing in. And I did it. And it just became a thing.
I didn't know that you'd done that before. I thought what I had seen, I don't remember what city we were in, but I thought what I had seen was your first go around. And I was pretty impressed because I'm 53, right? And I'm pretty much tone deaf. I can't sing. So the chances of me ever becoming a rock star they're approaching zero right now. So when I saw Jamal come out and do a cappella too, right?
Yeah.
The whole side. I'm not sure Tom was as impressed as I was. But
Exactly. That was the whole point. I wanted him to be annoyed. The most fun one, though, was we were in L.A. and we were at this cool-ass theater, man. And I guess like Jerry Lewis used to do his show from there or something. And I made it became a thing. Like people started, I didn't expect it, but people started asking me, "Are you going to sing at a show?" And I'm like, "Shit, I might be like overstaying my welcome here." But I did George Michael's like "Gotta Have
wow.
Faith" in that thing.
That's a lot harder.
You told me
there's some notes in that
I would have been like, hell no.
There's some notes in that song. It was actually kind of pretty tough to hit.
It was kind of fun. It was, yeah, it was. It was kind of fun, but yeah, it kind of became a thing.
Well, I'm sorry I missed it this morning.
No, I'm
too late.
We're here to talk about you, man. Talk about these things, about what's going on right now. How about these moves?
Yeah, I mean, I don't know if you guys planned this, but you picked a pretty good week to talk about gold.
I mean, it's been insane. It's been the only thing that's really moving. Like E-minis, NASDAQ have been super muted, but gold, platinum, silver. I know platinum is a popular trading vehicle, especially from some people on the desk here. But gold kind of set the stage earlier this year, and now we're seeing silver and platinum just rip around. It's been quite the spectacle.
It's been a remarkable, I mean, not just this week. I mean, it's been a remarkable year for gold, silver, all these metals hitting all-time highs. And that's been reflected in our business too. When you look at like the individual trading or what we might call retail trading, we've seen an explosion in interest in trading these metals because of the price moves. And I think because they're on shows like this, right? People talk about them. Individual traders get interested in them. So we've seen a lot of volume this year from individual traders in these metals. So it's a great time to talk about it.
Yeah, I mean, as you know at Tasty, we're always paying attention to volatile stuff and things that are moving quite a bit. And this just fits the bill. I mean,
it's there. Yeah.
Let's dive in, shall we? Get to some slides. Everything you need to know about gold, the micro gold contract, and the 1 ounce. 1 ounce is interesting.
Yeah.
And it's a newish product, but I'm normally trading the gold futures with options, sometimes the micro gold if I want to take just a directional stance. But the 1 ounce is always interesting too if you're looking to get some micro deltas and exposure that way.
Totally. And I'm going to actually push back on you guys a little bit in a few slides from now because it was a developing product, I would call it, but we've really seen, I think in October we had ADV in that product of over 80,000. So it's as liquid as I think most individual traders need it to be. Tight bid offers. It's really become an interesting product that we'll talk about in a bit here.
Cool. First slide, please. Gold futures give you standardized exposure to the global benchmark for monetary risk. So the standard gold contract is large notional. Micro gold is 10 times smaller, but the 1 ounce is 10 times smaller than the micro gold. So I think to your point, when you're looking for specific exposure or specific notional risk, you can really get granular with that 1 ounce product relative to the micro gold. We had this question, I think, yesterday on Option Trading Concepts Live, like, is the 1 ounce a physical delivery? If you want to compare and contrast, like the micro gold typically is financially settled.
So a couple things on this slide, actually. First, even before we get into that, like the notionals, and it's hard to keep up with the notional of gold these days because of the moves we were just talking about. But and maybe it's even worth backing up. Like, what do we even mean by notional value? Which is simply like the amount of exposure somebody gets when they trade one contract of these, right? So, we have 240 on here. It's actually, what's gold? 4,400 now, something like that.
Yeah, 4,400.
Somewhere around 4,400.
Yep.
So at $4,400 an ounce, that standard size gold is 100 ounces of gold. So that's actually $440,000 worth of exposure right now. Even 240 was a lot. 440 is a lot of exposure for a lot of individuals, which is why the micro, like you were mentioning, Mike, which 1/10 the size of that, or about $44,000. So that's all we mean by notional, is how much exposure you're getting to that particular product. And all you do is multiply the current price times that multiplier 100 ounces, 10 ounces, or 1 ounce. So, rather than 240, I would say it's more like 440. On the micro, it's about 44,000. Then, of course, the 1 ounce is really just 1 ounce of gold, which is what it's quoted in anyway. So what, about $4,400 worth of gold on the notional. And you're right, Mike. The standard size and the micro gold are both deliverable products. And I think that's worth touching on, whereas the 1 ounce is actually what we call cash settled. And the difference is, and I think I've just talked about this with Nick and Tony. I'll go to a lot of shows, whether it's a tasty show or an industry show or something, and people will be like, I don't want to trade futures because I don't want an oil tanker showing up in my front yard or something, right? And of course, that's not going to happen, but it is important, I think, for retail traders or individual traders to know that some of these products, like the standard and the micro, will be delivered if you hold that future until it expires. So if you're holding a long standard gold contract, when it expires, you've got an obligation to take delivery of 100 ounces of gold. Now,
for GC and MGC, right?
For GC and MGC, 10 ounces on the MGC, 100 ounces on the bigger contract. And you guys know that, like, if one of your customers was holding standard size or these contracts as expiration approached, you can talk probably better than I can about what your risk department would do, right? They call them, email them, make sure that they're not, getting out. They're making sure they're getting out of those contracts.
Yeah. Right.
But the fact is, if somebody did hold them at expiration, there is that obligation. Whereas the micro gold at expiration simply settles to cash. So what we mean by that is that every day you hold a futures contract, we do what's called a mark to market. So if your position moves for you, your account gets credited. If your position moves against you, you're debited. And we mark that every day. For a cash settled product like the 1 ounce gold, on that last day, we move the money one last time, and then the position goes away.
Yeah, it's very similar to other cash settled products. It's another reason why we like, SPX, XSP. It's just one layer of risk that is removed ultimately. And at the end of the day, like, to your point, I mean, we're not shilling out like shipments of gold and oil. Like, it's not to the benefit of anyone if you have thousands of barrels of oil showing up. Like, it's just not right. It doesn't make sense.
And that's the reality is that, brokerages aren't going to allow individual traders to take these deliverable contracts to expiration. But if you are trading them, you should know when they expire so that you can either get out of it, liquidate the position, or just roll it, right? Roll it into a deferred contract if you want to maintain that exposure.
Yep. And the CME Group website does a great job of just organizing the spec sheet for all these. So if you ever have questions on anything you're trading, you can always just go to the website and look up the specs. You can quickly see whether it's cash or physical settled.
Mm-hmm. Exactly.
Let's pop over to the next slide. So yeah, a couple of specs here. Good timing. Tick size, tick value, expirations, settlement, trading hours, peak liquidity. So like we've talked about this before. Peak liquidity generally going to be U.S. and European hour overlaps, but the contract sizes, tick value, they're all just multiples or fractions of one another.
Yeah, exactly. So you might see that tick size of 10 cents simply means that you might see a quote on your screen that looks something like 4,400 even 0.00 bid at 4,400.10, right? That's the smallest increment between the bid and offer that's allowed. That's all we mean by tick size. And then to get the value, the dollar value of that tick, it's just a matter of that multiplier we were talking about. So on the bigger gold, because it's 100 ounces, that 10-cent move is going to be a $10 move or impact rather to your P&L. A $1 impact to your P&L in the micro, and then of course the 10-cent impact on the 1 ounce.
Yep. So they all look similar, like micro gold and gold. I'm looking at them right now. Like they're moving at the same number, I guess we'll say, but the actual dollar value is different depending on the size of the product you're trading.
Exactly, right. The quote's going to look the same because it's based on the underlying of gold, right? But the impact to your P&L, and that's what's so important. That's why the micro and even the 1 ounce have become so popular among individual traders, because at $10 per every 10-cent gold moves, especially with the moves we've had lately, that's a big impact to can be a big impact to your P&L.
Totally. And yeah, even like just looking at the notional from earlier this year, like this has been a huge increase in the price of this. So it's nice to see the 1 ounce catching some steam and becoming, another great way to get more granular delta exposure.
Yeah, how long has that 1 ounce been around?
Over a year now, but it's really been this year that it's really kind of caught fire, and what we're seeing actually is a lot of brand new. We can kind of tell when someone's new to our markets. A lot of the brand new to futures traders are actually trading that as a first product because it's manageable. Like you can manage that kind of exposure without, with less risk than a bigger contract, right? Like with less risk than the GC. So you can kind of start to feel what futures are like with a much smaller product. So we've seen that, it's invited a lot of new futures traders, I think, into our markets.
Mm-hmm. Cool. I would imagine.
Next slide, please. So liquidity. So looking at some of the characteristics of some of these products, looking at bid-ask spreads, order book depth, execution quality, peak hours. Again, I think when it comes to the notional size of some of these products and comparing that to the order book depth, you can have some differences there, but the bigger the size generally, you're going to have a wider, I don't want to say wider bid-ask spread, but the notional impact will be greater just because of the notional size of that product.
Because it's bigger in dollar terms. And this is where I was going to push back a little bit, just because I think, maybe the slide was done a bit ago. And the 1 ounce gold was a developing product. It was newer. Mm-hmm. And a lot of times when we launch new products, it does take a little bit for them to sort of become more liquid and stuff like that. So I think that, thinner and execution quality adequate, I'd actually say it's better than adequate now. And one of the things that I think, and you guys can feel free to disagree with me, but for an individual trader, I think that bid offer, the quality of the bid offer tends to be more important than the size up on the bid or on the offer, just because retail traders tend not to sweep through a price.
Right.
And I think when you look at the bid offer for these three things, for these three products, it's going to be very similar. So yeah, there's not as much dollar notional represented on the book, for example, on the 1 ounce, like you were saying, Mike. But in terms of execution quality and in terms of the tightness of that bid offer, I think it's there on the 1 ounce.
Yeah, it is. It's going to be now, right? I mean, because again, the amount of liquidity that's going on in here, the amount of volatility, especially given, like we said, there's not much else that people are trading besides gold and silver, and so yeah, it's a lot tighter now than I think any
than
of
it was.
Like you said, these were done a little bit ago, but also, people weren't trading probably 1OZ as much because it had nothing to do with the product per se. It was just more about gold. And now it's trading a whole heck of a lot more, and people want exposure, they want access. This is how it works in market.
You're exactly right, Jamal. Like I was saying before, in October, I think we were doing over 85,000 a day in the 1 ounce, and then we've been over like 55 in November, and then I'm not sure about December, but that's a liquid product for sure.
Sweet. Next slide, please. So looking at the calculation, 24 ounce gold, closer to 44 now, but different account sizes. So how does this impact buying power requirement, typical margin requirement with 1% moves relative to margin?
Yeah, I really, Tony and Nick had a slide similar to this up the last time I was here, and I told them I really like the way that you guys lay this out in terms of the impact on a $25,000 portfolio. But let's actually even step back. So, again, because, we've got gold at 2,400 instead of 4,400 here, we're a little off on the numbers.
Yeah.
So like, for example, a dollar swing on a 1% move instead of 24 is going to be 44 and so on and so forth for the other products. And the margin on here is a little bit different than it is now because of two things. One, the price of gold was much less, at 2,400, and volatility has really increased in gold and particularly in silver, but in both metals, vol has really exploded. And those two things are going to contribute to higher margin requirements. So instead of like on the GC, we've got 7 to 9, it's actually $20,000 now. So $20,000 to hold a GC. The MGC would be $2,000, and then the 1 ounce would be $200. And what we mean by that, and I think this is important, when we say margin in futures, it's different than what we mean by margin in the stock world, right? Because if, let's say you were trading GLD, right, a gold-based ETF, and you were holding $45,000 of GLD, well, by Reg T requirements, you'd be required to put up at least half of that, or $22,500, right? If you're holding an MGC, which gives you a similar exposure, again, that notional exposure of $44,000, it's $2,000, right? Or $2,000, right? To hold $44,000 worth of exposure. That's what we talk about when we talk about futures being capital efficient, right? Instead of 22.5, you're putting up 2,000 to hold that same, approximately $45,000 worth of exposure. Now, again, that's leverage too, and we always talk about both sides of leverage, right? It can work for you, but it can also work against you. But that's what we mean by margin. So to hold a GC, it's $20,000. To hold an MGC, that's $2,000. And then if you want to hold a 1 ounce futures contract overnight, it's $200. So again, much more manageable for individuals, than that bigger GC contract.
Makes sense.
Yeah, I think a good rule of thumb is the more of a difference the number is between your required buying power and the notional exposure, the more you can see that fluctuate as volatility really comes into play. Where if you have a similar to like a cash secured product, or a product where you're putting up a lot more to hold the notional, you're not going to see as much fluctuation. So it always comes back down to sizing, correct?
Exactly, and that's why I like that impact on a $25,000 account. It's really double the numbers that are on here, right? Because of that leverage. If you're holding, if a 1% move in that bigger GC contract is going to be about 20%, right? On impact to a $25,000 account.
Yep.
Yeah, it's probably, honestly, using that GC is probably a little too big for somebody with a $25,000 account. That's why it's nice to have the MGC or the 1Os.
Right, because you don't want 20% of your P&L, of your account size rather.
Yeah.
On one trade. Generally speaking, that's a rule that I think
unless you've been long
would agree with, right?
Yeah, unless it
worked for you.
Platinum, silver, and gold for the last 2 weeks. Next slide, please. So options on gold futures. Some key elements. Futures contract is the underlying. So when you're rolling from one contract to the next, you can be looking at different contract prices. And there is a nice way to see that on the Tasty platform. I think the Tasty platform is the best organization I've seen across all platforms, where you know the last price, you have color-coded options expirations that settle to that contract, and then it shifts a different color to the next cycle. So it's just super easy to see like where you're actually rolling into. And like right now I'm looking at gold, there's, I want to say 20 different option expirations that all settle to the G6 contract, like a G6. So it's easy to see, like you can roll from one to the next, but as long as you are settled to the same contract, it's going to feel like a regular.
Yeah, and you're downplaying a little bit, but that color coding and the fact that Tasty's made that easy is actually really important, because there are a lot of there's options expirations every day, and it's critical that someone know what future the options that they're trading are based on. And, the fact that Tasty makes it easy is actually really important.
Yeah.
I don't mean to put you on the spot. I've actually always wondered this. Like January, but it sells a G6, which is, as we all know, February. Is there a rhyme or reason?
I think it's I don't know. The answer is I don't know, Jamal. I think it's probably a legacy thing. And I think gold is probably, of all of our products, the most confusing in terms of like the future versus the option.
Yes, for sure. I mean, I just roll with it now, but when I was learning, I couldn't figure it out. I'm like, because first of all, it takes you a little bit to realize, F, G, Z,
Yes.
right? And then once you get that down, you're like, hell yeah, I know it all. And then this.
And then you've got to realize that.
And then you're
Totally.
like,
No, and we have a tool not to diminish Tasty's functionality, but we actually created a tool because of that called it doesn't exactly roll off the tongue, but it's called the Contract Directory and Expiration Calendar on CME's
sure
website.
you guys got to shorten that.
I know we have to, but it's a calendar. If you go to the tool, it's a calendar, and every day the calendar has a hyperlink. You click on it, and it tells. And every day that there's a hyperlink, there's an option expiration. It tells you what option it is.
That's nice.
With the associated future on another tab. So you can kind of see all of the information, when they expire, what time they go off, when the future expires, all of that stuff. And it's it's a simple thing, but it's really important that people know that.
It's pretty sweet. One of my favorite movies, of course, the Batman with Michael Keaton and Jack Nicholson, and he goes, "Where does he get those wonderful toys?" You guys have some of the best tools, like for real. And we've talked about this before. The CME FedWatch tool, like,
yeah,
oh yeah,
you guys. Got to be killing on the internet with that thing. Everybody runs there.
I mean, everyone quotes it, right? Whenever people talk about what the market is saying, it's the Fed. I think it's the most clicked on page on our website.
Oh, I'm sure.
So
yeah, I click on it every day. So there you go.
There you go.
But yeah, one other thing about the Tasty organization. So like just a little hack. It doesn't give you the exact time and date, but to the same point, like I can tell you right now, the G6 contract will last until the end of January because the options on the G6 contract go to January 27th and then it switches to January 29th. So that expiration is somewhere in that window. And you can, if you're trying to roll from one to the next, like you have to roll before that date.
Right.
Next slide, please. So strategic use cases. Interesting.
Yeah, it's been a remarkable year for gold all around, right?
Yeah.
Because some of the sort of traditional theories, I wouldn't say have broken down because they're still there. It's still an inflation hedge, still a store of value and all that. But traditionally, people have said, well, in a high interest rate environment, gold's not going to perform as well because gold is a non-interest bearing asset and all that. But it has. Right. So then you get into like the first line item you guys have here, hedge currency, right? They talk about like the dollar devaluation and that kind of thing. Well, maybe there's I think what's fact is that a lot of the gold buying this year has been done by central banks, right? I think that's been very well reported. Is that like a hedge against dollar, the de-dollarization or whatever? Who knows, right? But I think, certainly that you have to consider that as a possible factor. So there's all of these things that are playing into gold right now that, maybe historically haven't been as strong. I mean, what do you guys? You guys are the traders.
I mean, I'll tell you what, I feel like that's the interesting thing about the gold move this year is that every one of these at some point in time I've heard, and this is what we've talked about recently, like all the different theories on why it's moving. One of our great people on this network, Chris Vecchio, I think coined something. This was like 2 years ago. We were on a show together, and I think he's right. The gold has benefited from narrative flexibility. Whatever narrative you want to apply to it, it has worked. It has gone up because it's an inflation hedge. It has gone up because inflation is coming down. It didn't really matter. And that's what I've seen this year. All of these have been valuable at some point in time.
Yeah, I think it'd be hard to pinpoint an exact reason, but I think you're exactly right, Jamal. All of these things are sort of coming into play, and it doesn't seem like they're going to go away either. As you look into 2026, a lot of the same questions that we had in 2025 seem to still be there. There's still geopolitical risk out there. The de-dollars, all of this stuff.
Yeah,
right?
there's some
It's
supposed
still there.
Jan 1 goalpost right now about China doing something, so you're right.
China, what's the Fed going to do, right? I mean, I think there's a ton of uncertainty, even in the FedWatch tool. It's what's the monetary policy going to be? Who's going to be the Fed? All of this stuff, I think, certainly seems to still be in play as we move into the next year.
Yeah. And I think it's always interesting to look back and you've got the standard gold contract and then the micro gold was created and now the 1 ounce is created. And it's all because the price of gold has gone up so much. But when you think about what inflation is the increase of all asset prices. So it would not surprise me 10 years from now to see a product that's even smaller than the 1 ounce just because of the price. So it's like, regardless of what your narrative is, to your point, it's like these prices will keep going up. And that's especially true if gold specifically is seen as a hedge of currency debasement or geopolitical, all these things. So it's a nice product.
It's a great point. Like, and that's true of our, you look at our equity indexes that are, the most popular, as much as individual traders have traded gold this year. Our equity indexes, the S&P and the NASDAQ, are still our most popular products among individual traders. And the micro NASDAQ, I like saying this because it surprises people. We launched that in 2019. I haven't asked you guys, so I'll put you on the spot now. What do you think the NASDAQ 100 was trading when we launched the micro NASDAQ on May 6th or something of 2019?
Oh, jeez.
It's a 25,000 now, right?
Yeah. It's got to be like less than 10.
I'm thinking 9,800.
7,700.
Yeah. That's crazy.
Wow. It surprised me when I did it earlier this year, and that's so I like putting people on the spot because no one ever goes that low with it. But so that even that product, like to your point, Mike, that was a $15,000 product just in 2019 is now a $50,000 product. So asset prices keep going up.
Yep. Yep. Next slide, please. Trading workflow. So just like anything else, I think you can, get into these, get out of these. But I think the biggest thing is when you're trading futures, just understanding when the liquidity is there, when it's not. But what do you have to say about?
Yeah, and I think just knowing, what's going to impact gold, which is going to be a lot of the same things that impact stocks and interest rates, right? With inflation reports come out or jobs numbers come out, GDP numbers come out. You want to make sure that you're aware that those things are about to be released, if you've got a position on in this asset as well, right? Because those same things are going to impact, or can impact rather, this as they can in some of the other markets.
Yeah, absolutely. Next slide, please. What moves gold? Looks like all these are high impact. Real yields, inflation expectations, U.S. dollar, central bank policy, geopolitical tensions, cross asset volatility. But it's to your point, like it's the narrative that works for it. Really?
Yeah, I mean the dollar, right? Like the dollar. It used to be you could time your watch to it. If the dollar went up, gold went down. I've seen a lot of times this year where that was not the case.
Yes.
It tells you the kind of wild year we're having in gold.
Exactly. Like, and then you can tie that into rates too. Rates go up, then dollar goes up because people got to buy dollars to buy treasuries and gold. But there's so many, I think you're right, Jamal.
The other thing I like to point out, this is Wars is on here. I will say a good friend of mine that I used to work with, you met him, Kevin Davitt. He pointed this out to me years ago, the gold to silver ratio. Typically when that thing is above 100, it's pointing out something like a war or something like that. And it was above 100 at one point in time this year. And basically we were in a war. We were in a tariff war. I mean, at least it seemed like we were going to be. And that's why it was above 100. And if you look back across time, there's a lot, like 1991, Gulf Storm, there's a lot of times where it's above 100. It's usually something like that, serious strife. We know that ratio is around 60. Now it's completely changed because of the way silver is going. I don't really know what that means.
Yeah, well, that's a whole other trade, too, that, we've talked about is that gold-silver trade, if you want to play one against the other. Because you're right, back in April after Liberation Day, gold spiked relatively more than silver did, but since then, silver is. I think everyone. It's been well documented what silver's done relative to gold since then. But that's another trade for people, right? Like people actually can put that trade on. Tom and Tony did that a lot on the tour this summer. They would do that gold silver ratio trade. There was a lot of debate on stage as to what the ratio was in that. But,
I don't really know myself.
But that's another tradable spread.
And I think VIX spikes too are interesting. I mean, I know one of the things that we were talking about earlier at one point in this year when the markets in gold were moving kind of in the same direction, and you felt like there was going to be a day where all of them were going to be down, and sure enough, that happened, and the VIX spike occurred. That's something interesting, I think, to watch too. I feel like yesterday was a little bit interesting in that we really weren't down big, and it's again a week holiday, but obviously gold was down big, but volatility did not move. It's kind of interesting. And Tony and I talked about this at the end of the day. We were both surprised that didn't create something more. Maybe it just has to do with this week. I don't know.
Yeah, but that's this year, right? Stocks break and gold rallies, stocks rally and gold rallies. Like, it's just, some of those relationships, haven't been as strong as it seems like they have been in the past.
Yeah, 2025, baby. It's been crazy.
Yeah, man.
Next slide, please. Gold futures risks. So opposite side of the coin, what could create risk in the price of gold? Macro catalyst gaps, delivery, margin expansion, liquidity thinning. We've touched on a number of these. I think margin expansion comes with volatility. If you're sized correctly, it's less of a concern for sure. But what is your number one thing you're focused on for out of this list?
I think like you said, Mike, I think we've touched on a lot of this. We talked about how, some of these are deliverable. You want to make sure, when that contract is expiring, margins. Yeah. As vol goes up, as price goes up, you can see margins change and things like that. Or when vol comes down, you can see margins sometimes come the other way too. So just something to be aware of. And that's kind of like with all futures trading.
Yeah, a lot of people were talking about that over the last 24 hours, how the margin change created a liquidation. I mean, it's something that a lot of traders always mention, think about who knows, right? But that's one when I see on the screen here. I know a lot of people had been talking about that.
Yeah. I'm curious because of the platinum move specifically. I know we're talking about gold, but like platinum was down 15% yesterday after reaching a new high. Like something must have happened. Like it's got to be.
It was interesting how they all kind of touched these highs and then flipped hard yesterday.
Yeah.
I will say that it was.
Yeah, I mean CME is just we've got we use a margining system called SPAN. I think technically that stands for Standard Portfolio Analysis of Risk. If you go all the way back with it, but that's the margining system, and it's one of the inputs is obviously volatility. So as volatility goes up, you can see you can potentially see margins go up.
Totally. Last slide, please. Takeaways. Real quick recap. Gold, micro gold, 1 ounce, all super tradable products. It's nice to see the 1 ounce picking up some steam, getting a lot more liquidity there. I think when it comes down to this breakdown, just making sure that the size fits correctly. If you're accounting for all these things, you're accounting for the fact that these things can and will move, and buying power can fluctuate as well, because you have the benefit of the doubt of the nice margin relief. But at the same time, if things do go crazy, like that number can change. So it's super important to keep that risk in check.
As with all futures, right? Like that sizing is critical. And the last thing I would say, just in terms of somebody that wants exposure to gold, and I'll steal a line from one of the guys we work with a lot at the CME, Bobby Iacchino. If you want exposure to gold, there's nothing more correlated to gold than gold. And that's what you're trading when you're trading futures, right? You can get exposure to the price of gold if you trade like gold miners stocks or ETFs. When you're trading the future, you're literally trading the price of gold. And it's what we call very pure exposure. So be the last thing I'd point out for someone that was interested in getting exposure to it.
Nice. And one more time, mention that thing again for the contracts.
Contract directory and expiration calendar.
There it is.
And if you Google that with CME, it'll come right up.
Awesome. Greg, thanks for coming, man. We appreciate you, man.
Thank you, guys.
Good to see you. Happy New Year.
Likewise. So Happy New Year to you guys, too. Yeah.
Hey, we'll see you next year. Thank you very much. Segment sponsored by the CME Group. That is Craig over there. Love and life, Craig Grewick. But thanks again for coming on. We'll take a little 90-second break. You're listening to Tasty Live.
Tasty Trade's Money Match event. Unlock 30 days commission-free trading. Plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new Tasty Trade account. Level up your trading experience with active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new Tasty Trade customers.
Diversify your portfolio with stocks, options, futures, crypto, and more. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Tasty Trade. Download today.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
Tasty Trade is now on TradingView. Trade stocks and futures.
Today's episode of Market Measures is brought to you by SIBO. SIBO is partnering with tastylive to provide educational opportunities for traders at all levels. Did you know index options like these can provide opportunities for diversification, lower volatility, liquidity, and other benefits? To continue your education on some of the mechanics learned in today's Market Measures, check out SIBO's Retail Trader Suite at www.sibo.com/minis.
What's up, everyone? Welcome back to the show. This is Tasty Live. We just had Craig on from the CME Group, talked everything you need to know about the gold contracts, and I found that contract expiration tool. I put it in the YouTube chat, so if you want to check that out, if you're joining us on YouTube, it's on the right-hand side there. But
great segment.
Yeah, great segment. Lots of information there. We do have a market measures for you. Best of 2025. We had the best of
Tasty Bites.
Tasty Bites. I'm like, options drive? No.
So I never really, like, as a kind of halfway on purpose, I never really look at our slides ahead of time when I'm on the show to do this. I thought our last best of was like going to be listing off a bunch. I didn't know it was just one.
Yeah.
Is that what this is too? Is it just one?
It's got to be just
like
one.
The best?
Yeah.
So it's saying the best.
The best.
We need a the in front of it. Damn it. The best market measure. This is the best market measure we had 2025. Is that what we're looking at right now?
We're about to.
Okay.
Let's find out.
All right.
Best 2025 market measures.
Why is
Of
there
course,
one?
it's Kelly criterion.
See, this is what I mean. Why is there a one? This is it. There should be no one. Guys. Kelly's criterion. Okay.
So yeah, Kelly's criterion is an interesting. It's an interesting mathematical theorem.
Probably.
Yes. Yeah. It actually applies. So when I started trading, it was all about my poker history and trying to like translate poker strategy to the options world. And it was always like, pick your spots, bankroll management, high probability trades, et cetera, et cetera, et cetera. But the Kelly criterion is actually something that comes up a lot too in the poker world in terms of like expected value, that kind of thing, implied value, expected value. So Kelly criterion is super important to understand from a conceptual basis. And we'll dive in. The growth formula. From April 25th, 2025, the Kelly criterion helps determine the optimal fraction of capital to allocate in order to maximize long-term growth while reducing the risk of ruin. So a simple definition, Kelly equals maximize growth and control risk through proper sizing based on edge, implied value, expected value, that kind of thing. Next slide, please. So the formula is expressed as F equals P minus Q over B, where F is the optimal capital percentage to allocate, P is the probability of profit, Q is the losing probability or the probability of loss, and B is the net odds received or the amount won per dollar bet.
So Q is also equal to 1 minus P.
Yep.
What I'm saying?
Yep. So just probability of profit and then the probability of loss ultimately. So now that we've got that math stuff out of the way, let's dive further.
I'll tell you the last time I saw a formula.
It's always funny whenever I'm looking for a formula, I always ping Dr. Jim. I'm like, hey, can you give me a formula for this? He's like, oh yeah, here you go. Let's use iron condors as an example. So $100,000 portfolio, strategy, 1 lot iron condor, probability of profit 85%, which brings your probability of loss to 15%, and the net odds of 20%. For example, a $3 premium versus $1,500 buying power. So the result, Kelly recommends allocating 10% of capital for optimal long-term growth with virtually no risk of ruin. So risk of ruin can also be stated as how your bet size run out 100 times, 1,000 times. If it's too large, if your bet size is too large, you don't allow yourself the ability to absorb variance against you. So that's another. We talk about this all the time. Like that's embedded in this segment here. Let's move to the next slide and we can dive deeper. So the sample portfolio should expect to see a 25% final profit after 100 trades with zero chance of depleting the capital. So again, 10% allocated, the mean final value 125K, so 25% expected gain. Average drawdown 37%. So this is a good call out here that even though you're expected after 100 trades to make 25%, your average drawdown is still a pretty large number with 10% allocated. So, and this is kind of a multiple effect where if your allocation's too high, that average drawdown is going to really drag down as well. Ruin rate projected to be 0, and the full Monte Carlo simulation, 100 runs. I know Monte Carlo traditionally is usually a lot more, so like 5,000, 10,000 simulations, which gets you closer to that expected value, right? Mm-hmm. The more you run something, the more you account for the tails in your favor and the tails against you. And I think that's a good way to think about this. Like if you're entering a new trade or you're making an adjustment, if I run this 1,000 times, do I feel good about what I perceive the results to be? And if the answer is yes, you're likely in a positive expected value situation. And I think that comes with like price extremes and things like that. But from a straight up formula standpoint, 10% with the strategy in place, here's your expected mean return.
It's pretty damn good. I mean, 25% profit.
Yeah.
Trades, 0.
And really, the ruin rate is the most important thing. We see this all the time. It's harder to trade small and smaller accounts. But at the end of the day, like if you're throwing on 4 or 5 trades and you're using all your buying power, like it's only a matter of time before things turn into ruin because you can't absorb the volatility of a tariff situation and like literally anything. And even this year, we're up, 20% this year? The previous years, we're up 20, 30%. Within that annual return, there's still super volatile periods. Like we had a VIX of 60 this year.
Yep.
We just forget about it.
Yep.
Because we have, the near-term memory, short-term memory. Next slide, please. If we keep the success rate at 85% but change the odds, the optimal Kelly allocation will also change. Higher odds support larger, more aggressive position sizing. So if we look at 15%, 20%, and 25% odds, your Kelly is going to ultimately go from 15 to 25. So the mean return, if your odds are lower, shift negative. Average drawdown is significant, ruin rate is significant, and this is just on a 5% change. So I think when you look at a lower percent odds of making money, that's when you need to really size down to account for the fact that you're taking more risk by way of a lower probability of profit. Where if you have a higher odd probability to make money on this simulation, you can use more of that allocation ultimately because you have significantly more winners versus losers. So this goes back to this segment we talked about earlier, the question we answered earlier of like, you're going to always have losers. If you do 100 trades, 200 trades, 300 trades through a year, you're going to have losing trades for sure. But if you can turn those losing trades into lesser losses or scratches, it makes a massive difference, as you can see here, in your year-end results or your projected year-end results.
I mean, it's amazing how different it is.
Yeah. And another call out here, this average drawdown. So we looked at the 20% odds, 10% allocation, average drawdown of 37%. Slightly higher odds and more than double the allocation, you basically double your average drawdown. So still have to understand that even in a 25% allocation situation, you're going to have drawdowns that are still pretty high. Last slide, please. Takeaways. Kelly provides a mathematical framework for optimal position sizing, and many traders use fractional Kelly 25 to 75% to reduce volatility. Option strategies fit Kelly well because probabilities and payouts are known before entry. And I think the biggest takeaway for me from a defined risk standpoint is just matching up your probabilities. Like, I know we looked at this the other day. If I'm selling an at the money spread and I'm not collecting 50% of the width, I'm not selling the at the money spread, because if an at the money spread is a 50-50 probability, if I'm not collecting 50% of the width of that spread, reflecting a 50% probability, that's not a great trade to make. So just understanding those kind of things, like if you're one standard deviation away and you're collecting 1/3 the width, that's pretty standard. But when you have these situations where there might be skew affecting premium on both sides, if I'm expecting a 50% probability and I'm not collecting 50% of that width, it's a no-go for me.
Yeah.
And that's just from this. Like, that's literally mathematically from this, but applied to real life trading.
Yeah, it helps you realize when trades working well in your favor potentially, or when not to force trades.
Yep.
I agree.
100%. That was a quick one. Rapid fire.
Wait, what?
Got one
Another
more.
one. We got a bonus.
Another one?
We got a bonus. What to expect after a 10% decline from March 28th, 2025? What would you expect after a 10% decline?
After a 10% decline, I expect the market to be higher 6 months later.
Bingo.
A year later.
That's it. That's the show.
I've seen these things before.
Yeah. Let's dive in. Frequency of 10% drops in the S&P 500 within 1 month is uncommon for a 10% drop. Historically, it takes an average of 25 days for the first 10% correction in any 30-day period. And, these dots are there, but this is over from when I was in high school to now, period. Like, this is a long time. So 10% drop, we've got a handful of them, and they do happen. They will happen. They will continue to happen. Even though we're in this crazy bull market, like, they will continue to happen.
I traded in all of these.
Yeah. It's nuts. It's wild when it does happen, because in your mind, you're like, the world is ending. The markets don't matter anymore. Everything's going to zero.
Well, I know we're talking about the frequency of 10% drops, and what I just said is true, but I think the best thing to think about as we go through these slides is sizing, right? Because a 10% drop can turn into a 15 or 20% drop, and that's what we're always scared of. That's why we don't jump all the way in. Sizing.
Yep. And this speaks directly to the year-long trade in MES. Like, you have to be able to withstand any variance. And that's the problem that a lot of people run into, is they believe that there won't be a 10% drop in whatever year they're trading it in. And they size up to account for a lack of a 10% drop, and eventually it's going to happen. So if you know that eventually it's going to happen and you account for it now by staying super small, it's just a totally different world that you're in, especially in the S&P, where it's very predictable in the sense of, like, these things are going to happen, but over time they've always recovered. So if you can account for that, you're in a whole nother ballpark in terms of future trade expectations. Next slide, please. When we analyzed the 30-day window after the first 10% market drop, we found that in 32% of occurrences, the market fell even further. Only 2 occurrences, 11%, saw the price rally all the way back to pre-drop levels, both happening in 2008. Interesting. The average return during the 30-day period was less than 1%. All these findings indicate that the market recovers from these large drops much more slowly than it moves south. So the old adage, escalator up, elevator down.
Yep.
There you have it. It's just hard to time when that elevator is going to drop.
Mm-hmm.
So yeah, interesting to see that within that 30-day window, only 2 occurrences, both in 2008, which just goes to show how wild 2008 was.
Mm-hmm.
Takes a longer time, but the longer you go out on the horizon, the higher the probability that has recovered, because we're sitting at all-time highs or close to it now. Next slide, please. Everything starts to improve when the duration is extended. As we just stated, we find the markets show higher chances of recovery after 2 months, although still only less than half of the events saw a full recovery after 3 months. But still, these are high percentages in terms of if you see a 10% correction, full recovery in 90 days, almost 40%. A full recovery is a big recovery. And if you think about it mathematically, if you have a 10% correction to the downside, that's almost a 20% correction back up from the new price point. Mm-hmm. So that's pretty substantial when you think of opportunity.
Yeah,
sure.
It's what we saw this year. Almost 20% correction downside, more than 40 to 50% higher in a couple months.
Next slide, please. It took less than a month to rally back 50% of the original price. Makes a lot of sense. This is much quicker than expected. There's only one occurrence that it took longer than 6 months to recover 50%, which was in 2022. And that makes sense too, because 2022, between 2020 and 2022 was COVID. And that was the time that I saw extended volatility being heightened. Like that was when VXX, UVXY, the VIX, like all of those things were popping. And we were elevated with 25 to 30% implied volatility. That was the time where the president would take the stand and markets would fly around at 4 o'clock. Like it was crazy times.
Yeah,
it was nuts. I remember literally like me, Nick, and Kevin would get on a Zoom call for those press conferences, crack a beer because everyone was just at home.
Yeah,
we would just watch them and watch the markets go like fly around. It was crazy.
It was wild. I mean, because again, it was all determined on what was going on with COVID, et cetera.
Yep. Last slide, please. Recovery speed, 100%. It took about 3 months to fully recover from all the losses. Partial recovery is more realistic early on, but maintaining some negative delta and selling premium at high IV may help before full recovery occurs. But at the same time, like if you know that the median is 3 months for a full recovery, I'd rather lean bullish in those situations. Like you can still sell premium on both sides for sure. But this is one of those adjustments that I'm personally making in the sense of like, if you believe this to be true going forward, then into these drops, like you probably want to pick up some delta, even just a little bit, or at least have a plan to offset delta to the upside. If you do get that quick recovery, you can keep shifting things higher and trade that new range for sure.
Yeah, I try to pick up longer deltas in these type of situations, at least a month, maybe 2 months out. Because again, it takes some time and you never know. This study was done, says March 28th, 2025. Whole lot going on then. If I could have talked to those people, I'd be like, hold on, just wait for another 2 weeks. But we don't have that ability.
Yeah.
That's why sizing matters.
Indeed. That's it.
That's it.
That's it.
2.
What a time. What a time to be alive. We've got about 24 minutes left on our segment. We're going to take a quick 90-second break. Hopefully that market measures was helpful. But again, it all comes down to understanding opportunities that are in front of you, but most importantly, trading small enough to be able to withstand some of this variance. And at the end of the day, having a plan for the worst case scenario and best case scenario is always going to put you in a better spot when you're trading for the long term, for sure.
Yeah.
But we're going to take a quick break. We're going to be back with Quentin from the trade desk in just a little bit, and then we'll send you off to the theoretical sunset at 10 a.m. But you're listening to Tasty Live. We'll be back in just a second.
Tasty Trade's Money Match event. Unlock 30 days commission-free trading. Plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new Tasty Trade account. Level up your trading experience with active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new Tasty Trade customers.
Having trouble understanding what your trader buddies are saying? Here's what a scalp is. We love those quick profits. A scalp is a trade opened and then closed in a short period of time, usually minutes or hours. A scalp is usually done for a small profit and is typically a very directional position. Scalps are most commonly done with future products because of the liquidity and added leverage they provide. But you gotta be careful, it's not always a profit.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the tastytrade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
Look who's back testing. tastytrade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at tastytrade.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
What's up, Tasty Nation? Welcome back to the show. We've got a packed house today. Yeah. It's a pleasure to see our special guests. Multiple special guests.
One at a time, though. One at a time.
Yeah, one at a time.
I don't think
One at a
everybody's
time.
ready for all of it.
Live from the trade desk. Let's kick it off with Quentin. Quentin,
Wait, hold on. We got it. Yeah, there we go. We got it.
I forgot about the bit. I'm sorry.
I'm gonna mess it up on purpose because we can never do it justice.
I will work on it. We'll work on the intro.
Yeah.
Sorry, Tony.
Yeah.
Actually, not sorry. We're messing it up on purpose.
Yeah.
Yeah,
it's job security for Nicky Bat. But yes, how you doing?
Hey, I'm good. I like that intro, but do you ever sometimes wish we were like Twitch streamers that were just spam the chat for this, spam the chat for that?
No, I don't. I'm too
no,
old.
you don't.
I'm
Okay.
too old for that shit. No, I don't.
I feel like it could be fun, put on a little, because you see these Twitch streamers that are, they're some of the most famous people in the world now. The celebrity is really shifting from movie star to social media personality.
Seen that.
And we've got I Show Speed and whatever. I don't really watch those people.
Yeah.
But they're that's gonna be the new thing.
Is the guy Kai considered a?
Oh yeah, him too.
Twitch
See, I don't really
streamer, or
watch it,
is
so
he-
I don't know all the characters. But yeah, he's
so
your
funny.
Twitch streamer.
He's I don't really watch, but
That's
I Show
what's so
Speed
fun-
is back.
That's what's so funny about it. I wonder about that. Who the hell is watching these dudes? You're not watching it. My son says the same thing. You guys are about the same age, and we were talking about the Pauls or whatever, right? And he was like, "Yeah, that's how they became famous on YouTube," which I knew. He's like, "But I didn't really watch it."
I didn't really watch it. I guess it's people a little bit younger than me.
Yeah.
Maybe that are teenagers now.
Yeah.
Maybe that's what they're watching.
There's
I think-
kids that want to be YouTube stars now. That's their
my
goal.
youngest used to kinda say that.
I said I wanted to be a professional skateboarder sponsored by Sprite. Now these kids are I want to be a Twitch streamer for the rest
You
of my life.
guys have no idea how lucky you had. And look, if I could have played video games for a living, I would have done it. It wasn't a thing when I was coming up. Obviously, it became a thing. I would have definitely done it.
Yeah, wait, we can talk about this actually, the whole generational debate. People say that my generation or whatever isn't hardworking, and people love to talk trash and stuff like that. But I'm we are so hardworking that we can play video games for a living. We can actually do what we like and do that for a living.
Oh yeah.
So whereas the older generation had to go to a job they hated.
True.
Work for the rest of their life and stuff like that. We've got, people playing video games for a living out here. I think they're just jealous.
It's true. It's true. Have you as I'm watching,
Not saying I don't.
Have you
I
ever
don't
watched
do
Mad
that,
Men?
No, I know what it is.
You
but
should
no.
check the show out because it gives you a whole different perspective on, the stuff that people were dealing with at work. You're like, why are they dealing with this? Because they couldn't go anywhere else.
Exactly.
Yeah.
You couldn't go anywhere else.
That's what it is.
You literally couldn't.
The ability to monetize things now, it's endless. Where back in the day, you only had a few options. Your college job fair was probably like Motorola, AT&T, IBM. That's it.
Yeah,
Like, there weren't many offshoots.
Yeah, you have more choices now.
So you're welcome for your choices.
Thank you. You know,
well, there it is.
To give some gratitude, to pay some homage. The older generation paved the way for us youngins. To where we can do that sort of thing. Like, I mean,
I'm glad we landed here.
Like on the trade desk we work, but like over here, look at you guys. You guys are just hanging out all day.
You know what? This is a lot of hard work. Okay, don't let how easy we make it look. Take it down.
Well, didn't make that intro look so easy, but we'll work on that.
This is why this goes back to the Nike thing, because we were like, why is Nike having such a hard time? It's like it's because there's no Michael Jordans anymore. It's all the segmentation of spread out.
That's exactly it.
It's like whatever you want to watch, you have this very specific niche. It's not like everybody's watching the Bulls, on TV right now. It's like nobody watches. Like to your point earlier when you're like public television, I was like, damn, he's watching CBS. it's just not the same.
Yeah.
Yeah, and I find that really interesting actually, because like people are like, AI is gonna like take over, like humans are just like no longer gonna exist and whatever. But I'm like, I think the AI is good because it's gonna make like us seem more human, and like we get rid of the mundane, and like we get to have better human connection.
Yeah, I'm not
stuff like that.
We always adapt. People always adapt. I'm not worried about it at all.
Yeah,
it's this. Sure. The youngest generation is like they don't drink, they don't party.
Yeah,
it's but it's also because they're on their iPads all day. But it all shifts. It all shifts. But there won't be any AI if the cost of silver keeps going up.
Well, yeah. I'm actually surprised silver's only number 2 on the list. Tell us about this.
Yeah, here, let's go through this list here. Top 20 symbols and their IVRs. We've got Tesla, 13, SLV, 90, which was number 1 yesterday, SLV, Meta, 25, GLD, 61, NVIDIA, 5, IBIT, 32, Micron, 39, Google, 26, Palantir, 11, MSTR, 28, Oracle, 38, Intel, 24, Microsoft, 24, AMD, 25, Amazon, 23, TQQQ, 16, Apple, 9, SoFi, 11, Neo, 30, and Netflix, 32. Anything surprising there to you fellas? Seems pretty standard. Neo we haven't seen on the list in a while.
Yeah, Neo. Yeah, you're right. Yeah. Wait, pull that list back up again. Let me see that again.
Yeah, MSTR is like
Neo
always up there.
Kind of surprising.
And I mean, most of the other symbols are
up there.
Heavily traded. Yeah, Neo's the only one. Maybe they had earnings, something like that. I'm not too sure, but
outside of that, I don't know. It's also funny to me. People continue to trade this TQQQ. I don't understand.
People love it.
Yeah, they really do. They really do. The one thing that is I thought was interesting, I totally forgot about this symbol yesterday. I used to trade it years ago, but AGQ, it's 2 times silver. I'm surprised that that's not in the middle.
Yeah, you would think that's. I guess most people are probably using like the /SIL, the micro futures, because /SI is a pretty big product, but SIL micro futures. But that's what some people will use instead of like the NASDAQ futures, TQQQ. So instead of like NQ or MNQ, they'll use the shares of TQQQ because you can size it more proportionally. You're obviously not going to get as much leverage as you would with the futures, but you can size it however you want. As long as you're not holding that TQQQ for a longer duration, because then there's that volatility decay. As long as you're not doing that, perfectly fine product to trade.
Yeah, I would say SLV so far, yesterday was definitely a crescendo day. Like you said, it was number 1 on our list. It was number 3 on the list of, eventually ended the day at number 4, top options. But, I mean, it just tells you there's a lot going on there right now.
Yeah, it's where precious metals is where all the people are flocking to. It's where all the trades are at.
Yeah, especially over the last couple of weeks. But yeah, AGQ was 80 in December. When December started, now it's at 180. So quick.
Yeah.
Before you head out, is there 1 or 2 things that define the year on the trading desk for you?
That is a great question. For me, what I would say is it can be very interesting with like, we see a lot of like, short-term options traders that we see a lot of like 0 DT, and then anything even like within like, the 30 DT is like still pretty like short-term when you're talking about like the overall landscape of things, right? And then I think what I've noticed a lot is like how quickly we forget what happened in April, because that was like, in April, that was like, it was scary. And there was a lot of stuff going on, and that was like, that's sort of like you would think that would define the year on the trade desk. But now that the market's back up, volatility is back to, the lows that we typically see, return back to its average. And so, it's very interesting, like how quickly we forget about some of these crashes.
That was probably the scariest time on trade desk since you've been there,
right? Honestly, I think maybe August of 2024 was scarier because at least the move down, the move down in August was 3 days, due to the yen parity, whatever was going on.
It was a big.
But then at least when we saw for the whole tariff stuff, that happened over a course of a couple of weeks, which is still the moves are I'll talk to people on the margin team that have been in the industry for way longer than I've been alive, 2 times as long as I've been alive. And then they're the moves happen so much quicker now. I don't know if it has to do with I don't know what it has to do with necessarily, whether it's the electronic trading, just new market environment, but they're the moves are a lot quicker than they used to be.
True.
And so, I would say just that's something I think about a little bit. And as the year's closing and I'm reflecting on my portfolio and my own trading, because, I'm a customer before I'm a representative, I'm thinking about my own trading. And I'm just how quickly we forget what happened in April, and that it could happen again, right?
Oh, it will happen again.
Yeah, right.
And it's just maybe not that same narrative, but there will be volatility.
But there will be,
for sure. And to your point, I think 100% the speed at which the market moves is attributed to electronic trading. It's attributed to the fact that you can do whatever you want in a matter of seconds. And it's becoming much more accessible across the board, but you also have a lot more automated trading, that kind of stuff, which emphasizes the moves down and also the recovery back up.
Yeah, and just more market participants.
Yeah.
I would say the biggest lesson that I learned was from April, don't force any trades. That was by far the biggest lesson I've learned personally in my own trading. There's no need to force it if you don't see it, and then just wait until the opportunity presents itself, for sure.
It is.
Sweet. Well,
all right. Thank you very much
so
for having me, fellas.
Yeah. Appreciate you, man.
Absolutely. Appreciate you. E-minis haven't moved. It's all just the precious metals. Bitcoin actually catching a bit here, up 1,900. But we do have yet another special
I hope that's annoying. I really do.
It is.
Glenn, how you doing?
Good. How are you guys?
Good.
Thanks for
Is it
having
a new
me.
sweater?
It's not, but I'm just coming back from my European vacation, and this felt the most, keeping.
Yeah, you guys can play a ooh for that. How are things for you, après ski?
Après ski hit it hard. Oh my goodness.
Oh, I see.
I don't think they've ever. I don't think they've ever seen anything like that.
Oh, okay.
Here we go. It's coming up. It's coming up. Hell yeah, that's what I'm talking about.
Shout out, Mikos. Had the G Money shirt in France.
All right. Okay.
Hitting the slopes.
Love to see it.
Ton of fun. Skied 5 days. Legs are still cooked. Nobody got hurt though.
That's all that matters. You're good. You're good. What is this little heart thing? What is this?
Just like a little sign.
Is the name of the mountain? Heart
Just
Mountain?
a sign.
Yeah.
Where were you? Where were you?
I was in Val d'Isère, France. So right on the border between France and Italy.
Nice. That's awesome.
Looks like a beautiful day.
It was a lot of sun, not a ton of snow, but enough for me. I stick to the groomers,
Yep.
on piste, as they say. No off piste for me.
The groomers are nice, nice casual way to spend a day.
Exactly.
Yeah.
Good holidays for you guys.
I haven't been skiing in 20 years. I need to go skiing.
Gotta get out there.
A long ass time.
Some fresh air. It's feel the
nice.
wind in your hair.
Yeah.
Oh.
Yeah, I know.
Yeah, it was pretty cold, so helmet stayed on, hood stayed on.
Yeah, I'm sure it's. What was the temperature out there?
-1 degree Celsius.
Oh, perfect. So about 25 Fahrenheit, something like that.
Yeah, no, not bad at all on the base, but once you get up there, wind really starts cooking. Feels like Chicago today. It's so cold here.
How many crepes did you have?
Crepes? I had no crepes, but I had a ton of chocolate croissants. Oh my god. You had to tear me away from those. Yeah, very good.
I can tell you had a bunch.
Yeah. Now we're back.
You're like, yeah. Gain some pounds, you know what I'm saying?
I did gain a few lbs. but
I'm just messing with you.
That's
but
what
you know I love you,
the
man.
New Year's resolution is for. Get back in the gym. Start to
right.
look like Q.
Can't wait.
Start moving 500 pounds around.
Yeah.
But yeah, long story short was that it was very expensive for me over there because the Swiss franc is still at its recent highs. The euro as well stuck around above 117, though a little bit of a dollar comeback today. As we know, last 2 weeks of the year, very thin, low volatility environment, a lot of chop going around for these dollar pairs especially, but a reassuring sign today. Yesterday, coming into the week, we had a little bit of dollar strength that looked kind of like a classic risk-off move, but that immediately bought up, and the dollar finished lower on the day against all majors. So that was a disappointing sign for myself, or that even when equities finish down, the dollar really can't catch a bid. But now we're looking at the euro, looking at these commodity currencies as well, that they're filling that gap up to pressed just an hour ago on some fresh highs for the dollar for the week, which doesn't mean much, but it's an important time to see if we continue to get this small but consistent tight range here, dollar bouncing around back and forth. From a chart perspective, it's most interesting to look at these Australian dollar and New Zealand dollar pairs because they were the movers of yesterday. Biggest move to the US dollar side before reversing, but now they're starting to come off of their recent highs. Australian dollar is sitting around 67 cents here, and last week when it pressed into those highs dating back all the way to October of last year. So second down day in a row for this Australian dollar US dollar pair. We'll see if there's a little bit more momentum to fill that range, or if it's just stalling momentum in this low liquidity environment. On the horizon, today we've got FOMC minutes in a few hours here, I believe 3 hours. That, probably not interesting, but it's all we've got in terms of economic events. So we'll see if any details traders latch onto as it pertains to the divided Fed and what they might do in January, March, and onward. That's on the radar. We'll see if that spikes any drift in prices. And then I'm looking at tomorrow to be an actually pretty interesting day, not for any sort of crazy tradable opportunity, but it is always very interesting conceptually for me to look at year-end flows, especially in these currency markets, because you have a bunch of institutional traders, companies, big funds of funds that all have their own rules with rebalancing that they are beholden to no matter what the market conditions are. And it's a good chance to take a year in review, and we'll see some mechanical movements that might result in some unique prices, some drifting, some sustained momentum that might look weird and not really on any sort of fundamental driver. So something definitely to be wary of if you're looking to trade in these thin conditions. Just scalp a few points of movement. It might be there tomorrow. I'll be looking around 10, 11 a.m. Eastern Central Time, just for, close of business in the UK, the end of that kind of overlap in trading sessions, just to see, if there are any funky moves. I think it's more of a wait and watch, but it's one of those things where conceptually, it's all there. You kind of know what could happen, but you have no idea the information about who actually does have to step in. So we'll see it tomorrow, but the pairs I'm looking at for that is the euro dollar, pound dollar, and the US dollar Japanese yen. Looking at, you can try and speculate, what kind of assets all of these major players have exposure to, but just looking at indices this year, you're looking at the outperformer being Japanese stocks. And so I think that combined with, we had the European stocks, London stocks, pretty much mirroring US this year, around 17%. but we did have the Japanese Nikkei 225, that outperforming to the tune of 21%, combined with a relatively unchanged dollar-yen market, presents, you don't know if it'll be U.S. funds that have to sell more yen because they accumulated more yen exposure in those Japanese stocks, or you don't know if it's Japanese players that actually have to step in and buy more yen. But regardless, that kind of backdrop against a historically weak yen could spell some drifting price movement over the next couple days there. In terms of euro dollar, pound dollar, I'd be surprised if it's a substantial drift in either direction, just because a lot of that with the currency movements could offset. But that's what I'm looking at over the next couple days in the foreign exchange department.
Love it. Yeah, I've got this long dollar franc position that is coming in a little bit today, but someone in the YouTube chat was looking at some positive carry trade ideas. I would imagine just being long the dollar in most fashions is going to yield probably a positive ask. But is there anything that stands out to you in that sense?
I mean, you guys know it's
10 o'clock. Sorry. Yeah, everything holding up there in terms of rate differentials, nothing crazy. Looking at that dollar, Swiss franc primarily, dollar yen as well, but keep an eye on the holiday rolls as we'll get some big day rolls over the weekend and over the holidays.
Sweet. Well, thank you, Glenn.
Thank you, guys. Sorry for talking so long. Sorry,
It's gonna be
Liz.
okay.
Come on another show. We could do it again sometime.
Yeah.
All right.
Yeah.
See you guys tomorrow.
Thanks for tuning in. Stay tuned on Tasty Live. We're going to take a little 90-second break. We'll be back in just a little bit. Appreciate y'all. We'll see you soon.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Tasty Trade's Money Match event. Unlock 30 days commission-free trading. Plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new Tasty Trade account. Level up your trading experience with active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new Tasty Trade customers.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Hey everybody, we're live from the SPX pit. I'm Lily Andrews. This is my mom, Jenny Andrews. This is Liz Deerking, and they're about to have a great show for you guys.
Yay! Thank you very much, Lily Andrews. You did a wonderful job. Everybody who has been on the show for a long time knows that Lily is Jenny's daughter, and she's been on the show multiple times before this.
Well, long ago. They filmed something. The kids filmed something.
Yes.
But I don't think she's been on the show since.
You don't think so?
No, I don't
need to bring her back more often, ladies and gentlemen.
She did a great job. She did a great job doing the intro today. It's fun having. Bring your daughter to work day.
It is. It was fun to have her on the train. She does such a good job. We're very, very proud of her. I always say I feel like she's my daughter as well.
Okay, so Lily has blonde hair and is tall. Your daughter's tall, but dark hair.
Yeah.
And Liz used to think that they somehow accidentally got swapped when they were little.
They did. They got swapped. Not exactly sure how, but no, she did a great job. We're so happy to have her with us.
She did a wonderful
is
job.
One of the smartest, most talented children that I know, and I'm proud to have raised her.
It's nice having the kids home for break, and it was fun having her on the train with us today, and being here on the eve of the eve when apparently everyone else has real plans.
The eve of the eve, Jenny just got informed that it's one of the biggest party nights of the year. So that being said, I've already requested Lily Andrews sit in for the morning show tomorrow, because if I go on the eve of the eve, she's going to need a co-host.
I'm glad you brought that up. Tomorrow, Wednesday, December 31st, last day of the year, we are hosting the morning show. So I know it's Wednesday. We'll have What's Your Assumption? Send your assumptions in. John, I'm sure, has their card somewhere.
The good news is we're also on last call, so if you didn't hear us say send your assumptions in for What's Your Assumption, we will also be sending them in. We'll also be asking for them again.
Yeah.
So, but we're going to have a good show. So I'm excited that we actually have a little bit more time than our 1 hour show on the last day, because we're going to talk about pros and cons, what worked, what didn't work. We're going to have some fun, and it's going to be a good show.
Oh, yeah. The show the last day of the year, easiest show. We filled 3 hours. That's nothing.
It's true.
3 hours is nothing when can talk about best trades of the year, worst trades of the year, what we're doing going forward, changes we're making, what's going on in the market. And we have a second special guest today, because tomorrow is the last trading day of the year. There's a lot of stuff going on, and Hollywood's going to come on and fill us in on what to expect on the last trading day of the year.
Yeah, it is kind of nice that we have the insider talking to a lot of these guys on the floor. He's going to come in. We've got the microphone. Lily was placeholding for him to make sure they did the mic check. Everything's going to be ready whenever it calms down. It's pretty quiet down here right now. I've seen Spoos, when we walked on, Spoos were down 13.5, and now they're almost
almost unchanged. So it's kind of, you want to pop in the platform?
Let's do it.
Let's pop in the platform. We were on the train together on the open, 8:30. We both did a couple calendars, and let's take a look at those. Do you want to?
Sure. You're gonna have to give me the strikes, because I'm in our account.
Okay, so in SPX, we did the 6910 calendar, and we paid I want to say like 820.
820 for it. Now it's worth 1025.
No way.
Yes. So we wound up taking ours off for a little bit, but it came right back to it. So it's trading with a calendar. You want it to go to it, not through it, and it went to it. We took it off, and it went way beneath it, and now it's back to it.
I was shocked by the 10 something, because we both took it off for like a $100 win.
Yeah.
I've been taking these calendars off. I lowered my bar the other day 10%.
No, but when you think about this, Jenny, when we walked in, Spoos were down 13. That calendar wouldn't have looked as good.
Right.
Now that it came right back to being almost unchanged, so 6910, that's when it should look good.
And we were hoping for a rally, so we also put on the 6925, and we paid $6.15 for that. So
it does move the strikes together.
So 69.25, we paid $6.15 for this one, and it's 7.30. So this one's up about 100.
This is the other one where you need these calendars to go. You'll make more money with it if it goes to the strike. So we're back to, this would have been a loss when we
I've been
walked
wanting tests on these calendars. There's some actual behind the scenes work that needs to be done on the back tester for these 0-day, 1-day calendars to get a little more info, a little more in depth into certain things that are tougher to back test than others.
They are. So we're
there's
gonna
so much that was put into the 0 DTE for back testing, because that's what everyone's back testing. Not as much as calendars.
With the 1 DTE.
Yes.
I mean, when you think about it, everything's going to have parameters that are filled in there. My request, and if I say it live on air, it's got to happen. My request is to have Jenny do some back testing for me live on air tomorrow.
Oh, sure. You know I love the back tester.
Yeah.
Bring it.
And once again, what I like about us and doing it live is, hey, I might not like the results.
Oh, there was one. There was a day, I want to say, I don't know, maybe Data was on with us doing the back testing.
Oh, we were live in the studio.
We were live in the studio, and we were giving him symbols to back test. I was like, hey, I've been doing this trade. Let's test it. And I gave him the exact trade I was doing, and the results were
awful.
Terrible. I was like, all right, bad idea.
But I think that's more realistic than every time we back test a trade. It's like, this is perfect.
Right.
You're going to make money.
Yeah. So it is a fun tool to have.
The other fun thing about tomorrow, Jenny, is that we can do our SPX trades live, because we do them at either 8:30 or 9 o'clock, which we are not live on. We can also trade pre-market, which I like to do, natural gas before the market, natural gas, silver futures. You can do all that stuff before the market.
everything before the market. So we'll be busy trading. I've been doing my calendar every day at 8:30. Tomorrow it's not. I don't know how it's going to work because tomorrow is New Year's Eve and the next day is not a trading day. So it's a closed market. So you're not having like
it's like the ones we do over the weekend.
Yeah. It would be like doing one over the weekend.
Yeah. And we'll take a look at that. It is very quiet down here today.
They're all ready and waiting and eagerly listening for the best of 2025 Part 2, because we have that today.
Oh, we do. In SPX Trading, Best of 2025 Part 2. We got a sneak peek into it yesterday. My favorite study is on here, by the way. Not yesterday. We got a sneak peek last week.
Yeah.
But my favorite study is on here.
Right. So we're going to look at the best of these 0DTE SPX trades, and that's Part 2. That's coming today. We're also taking live tweets. Here, you can pull up Twitter. Send us a tweet, include the hashtag LAZJNY. That's what we're looking at today. And we have Arun coming in, which Arun, Happy New Year. Happy to see you. He's a long-time listener.
Long-time tweeter, not first-time tweeter.
Long-time listener, long-time tweeter, but we haven't seen him in a while. So Arun, good to see you. And look what he's talking about.
ASTS?
ASTS. Oh, well, he says, very juicy premium. It's something I've never looked at.
Okay, any way to trade this underlying? Thoughts on buying 100 shares and selling at the money calls and puts, both, question mark. Don't know why I don't like iron condors on this one. Okay. Let's take a look at that. We'll look at Arun's before we go to our study, and then we'll pop back and forth into Twitter.
ASTS.
ASTS, which is Space Mobile, AST Space Mobile. So he's talking about buying shares and selling both, which it's something that we talked about.
And puts. Now, I would, at this point, move out to February. We're moving from Jan to Feb. So February has 52 days. Going out to February, if you didn't buy, you don't even have to buy this stock.
No, but then it changes the trade. If you don't buy the stock, you
could sell an out of the money put in and in the money put.
You could ladder the puts, but to Arun's point, this is the trade that he's talking about: is buying stock and selling the call and selling the put against it. It's using $4,900 to buy the stock, but you can make $2,815.
But let's look at the synthetic. So Arun might want to have the stock, and that's fine. But let's look at the synthetic. So if you buy the stock, hear what Liz has: buying 100 shares, selling 35 delta call, and you've got a 15 delta put.
I just went to the expected move for the cycle. So I'm not looking at deltas.
You've got 55 and 95, and that's using almost $5,000. If you go to the analysis page, you can see the P&L. We could replicate it
using
maybe,
less capital.
I don't know. I don't know how these options
hold on one second. Here's what I want to show. You were saying that you looked at the deltas, and I'm glad you did. When you look at this is the expected move for the cycle. So this is a lot of call skew in it, because your 95 is $5 and your 55 is $2. That's a lot of call skew in there.
Right. So they're equal distance away. You've got $20 down and $20 up, but you've got $240 on the put and $550 on the call.
Now, what I was going to say is he says he doesn't like strangles in this product, and I kind of agree with him, because I would be, if you're getting that much premium, this has got a lot of call skew in it. I would be more nervous about selling strangles than I would be if you have the stock with it.
Right, I know, and I wasn't going to say sell strangle without the stock. I was going to say eliminate the stock and just sell. You can do the synthetic covered call with the 95 put instead of the stock and the. So here you have.
We're just showing both. I'm going to go through what Jenny wants, but this has the actual stock with it. If you owned the stock, we were talking about this yesterday, which is why I think Arun brought it up, because we were saying sometimes if we're long the stock with the Wheel of Fortune, we'll sell both, and that's.
But
what this
usually
is.
with the wheel, we get in with short puts. Okay, so go back to the table page and let's just see how our buying power changes. Here we're using $5,000. Will our buying power change if we sell that 55 put and sell that 95 put?
More.
No, it's still. So some of these, and now then it makes sense to buy the stock. Then it makes sense to buy the stock. There's no margin relief. There's not. Is this cash secured?
No.
I mean, but there's no more margin relief on the options than the stock, and this is just a higher margin stock right now. What I would probably do here if I wanted to be aggressive.
I like this, Arun.
I do like this, but I might just sell 275 puts for $10.50 each.
You could.
$2,000 that way.
That's going to be, I think, a little bit more expensive, right? It's $7,000.
Yeah.
That's the only reason I was saying that. It's $7,000 and less profit potential because it was $2,800.
Yeah.
But it's interesting, and I like it, Arun. We appreciate it. A little rich for our blood in this account.
Well,
press the button on it.
To keep an eye on. I get why he's saying he didn't like an iron condor here, because this is priced to move. But we could do. You could do like a buffer where we buy something, or we could just do a spread. just to keep an eye on this.
Well, buffer's bullish.
Or just do a put spread. Just do the 60-50 put spread. What are we going to get on that?
I don't like it because you've got so much call skew. You've got so much call skew in here. I appreciate the look of Rune. I really, truly do. And to be honest with you, I might follow you into this in my account.
I'm going to probably get in and sell a put in here.
The puts aren't bad, but they're just low premium. When you look at this, you're getting $2 and putting up 17. Great. It's fine.
Hey, I'd rather sell that $2.50 put than the $5 call.
Oh, yeah, I wouldn't touch the calls with a 10-foot pole unless I had the stock like a Rune.
Take a look at the chart. Let's see what Space Mobile's been doing. It's, price to move, and it has been moving, right? So from this year, it's gone from like 10 to 75. What was the low in May? May, it was, 20.
Yeah.
So it's a mover. It's a mover.
Yes, we appreciate the look, Arun. I like it. Okay, should we go back to Twitter or should we go to the study? Let's go to the study.
Yeah, let's do the study because this is a good one. It's a good one. Best of 2025 Zero DTEs Part 2.
And whenever we talk Zero DTEs, we are talking SPX. Only because that's where the study has been focusing. There's lots of things that have zero DTE options. SPX, they are European exercised or European settled, which means you can just let them go into perpetuity, which that's what I like about them. That's European exercise.
Oh, European exercise.
It's cash settled, right?
Well, no, I don't know. I really don't know the difference between all the different European or American. I just know they're cash. All I know about SPX is they're cash settled.
I believe that's European. That's neither here nor there. But that's exactly why, because you can let them go.
Okay, so you're going to have a handful of studies in today's study. So it's the best of.
Yep, there's two.
Turning Zero DTE profit targets. And this was from back in June.
And
tuning.
Yeah, I was like, I don't want to correct you, but it's tuning. Meaning just kind of tweaking profits. So this is from June, and this is something that, did we do this one on the trading floor? In June? Probably.
Yeah, we were here in June. We've been here almost over 2 years.
Yeah.
Was it 2 years in August? Or 1 year in August?
No, two.
Two years. Yeah, we've been here a while.
Okay. In fast-moving, high-risk, zero DTE trades, fine-tuning our approach can meaningfully impact performance. This study examines how different aggressive profit targets affect outcomes.
Okay, so here's the study setup. Sold zero DTE premium at 9 a.m.
Which means
each day.
That's something that we had established prior to this. That's why it's 9 a.m., give or take 5 minutes.
And then strategies, $20 wide iron condor using short 40 delta or 20 delta strikes, or $10 wide iron flies.
Yes, this was one of my favorites.
This one
was, and then
let's like the iron flies.
And then it sprung board into something else.
Yeah.
Okay.
With the next one.
The winners are closed at 10, 20, and 25% of max profits, and losers were allowed to expire. Now, that is something that we have thwarted since then as well.
Of like close at noon. If it doesn't work out, close at noon.
Yeah.
Close at noon.
Okay.
So that's why I'm curious. I wonder how they decided on which are the best of.
Well, it's interesting. I think let's go through it. Okay, so this is iron flies, which is $10 wide wings, and then they give you the profit targets. Now, I'm going to show, only because we can do this. You're talking an iron fly. I'm going to go in SPX.
Yeah.
$10 wide wings. So, now granted, this is at 9 o'clock. So...
Yeah, but the iron fly...
That's your iron fly. $6. At this time.
Now, you separated this short strikes.
And I even got more. Like, look at this. You're gonna get more if you keep them together. 720.
Right. So like a typical, like an actual iron fly is the same strike. It's just iron fly is a butterfly, but with calls and puts instead of all calls or all puts.
So this is what I used to do in my account after I saw this study. I would separate them by a minute amount and take this in. So this is technically your iron fly. So I just want to show.
So you started doing this for a while, and do you still do them?
No, I went to the straight put spreads. I went to number 2 of our studies. But you'll see why. The drawdown here is less though, so maybe I'll go back.
The drawdown is less.
So look at this. Your conditional value at risk on the bottom, whether you're 10, 20, 25, or no management, your conditional value at risk is all the same. It's
a very low risk trade. You're doing a $10 wide and you're collecting $6 or $7. That's why the C-bar is very low. And we did start doing these because we saw that 20% profit target. Your mean P&L is $73.
That's pretty good.
Yeah.
Now, here's where your problem is. This is the other thing that Jacob changed going forward is you look at this 51% win rate, your mean P&L, that's your average P&L, meaning everything that's in there, every win and every loss. Because your drawdowns are so low, it's 51% will still give you 73.
Still a positive P&L. With no management, you were down $43, and I think, again, the management is closed at noon.
Well, you're right. So that's why going forward we eliminated that no management. But it's not bad.
I mean, the results look. What's not great is the win percent, but the mean P&L looks good.
Yeah, when you have such a low drawdown, if you're taking so say you get. If your conditional value at risk is 250, that means you're collecting 750, right?
Right. Yeah. So
750. So if you're taking 20%, that's $150.
So you're going to have, and that's right, half of them are losers, but so you're losing that, you're making $150 on 20%, but you're losing half of them.
Yeah. So that's pretty interesting. Okay, then now we've got.
It kind of makes me want to go back to those.
I know.
Right?
Well, because your drawdown is so low.
I know.
It's easier than the other study we had was how many times it took to make back after you had a full loss.
Because if you have, let's say you're doing a wider put spread and you're collecting $2, but your risk is, $1,000 or something. You've got one loss. You lose quite a bit. It takes you so many wins to make that loss.
And that's why we're going to jump into this one. So 40 delta, iron condors, $20 wide wings. Now I wanted to show how close that was. So keep in mind. That's almost what I was doing here.
Because like yesterday, I did a $10 wide put spread. On a $10 wide, I got $1.60. So I had, $840 in risk on $1.60. And if I keep 50% of that, all I'm making is $80. And if I have one loss where I lose the $840, it takes 10 wins. 50% to make up one loss.
Yes, which is very similar to this.
That's what makes these iron flies appealing.
So this was the 40 delta, which they're saying is an iron condor, but that was when I separated it. It's still a 40 delta here. 40 delta, $20 wide. Your risk here is $1,600. Whoops, sorry.
That's at this time. If you put these on at 9 a.m., you're collecting more.
And you can see your conditional value at risk.
Yeah.
So it's going to be a lot more than it was
You're collecting closer to $8.
You're collecting $8, but it's $20 wings. So your conditional value at risk is about $1,000. In my opinion, look at how much the mean P&L has gone down.
Right, because one or two big losses, it takes so long to make that back.
I'm glad they brought this to our attention.
We're going to in 2026, so it's been tough to keep track of SPX when we've had lots of SPX trades and didn't focus on just a certain strategy. But in 2026, when we go to the clean zero SPX P&L, we talked about in one account maybe just do this strategy, in one account maybe just do this strategy, in this account do this, and keep track of what's having better.
That's my plan.
Yeah.
That's my
what's
plan.
having better success.
Okay. So then in this one, I like the iron fly better because of the drawdown. I'm going to go to the next one. So the takeaways. Over the last 2 years, selling 0DTX SPX premium has been highly profitable, particularly for traders who secure profits quickly.
Okay. All right, no single profit target emerged as the best.
Meaning 20, 10, 25. Yeah. That's kind of choose your poison.
Yeah, they all looked okay, except letting them go till the end of the day.
Yeah, don't do that.
And 10% targets produced the highest win rates and strongest performance for 40 Delta Iron Condors, converting nearly 90% of trades into winners. So a higher percentage of win rate.
Let me go back to that.
If you do the 10%.
Oh, they're looking at this.
Yeah.
So they're looking at your win rate.
Highest win rate, highest mean P&L. That's the 40 Delta.
But if you go back to highest win rate, highest mean P&L.
It wasn't the iron flies. It was on the 40 Delta.
Yes, I get it.
Breaking news. What's going on?
No, it's just I want to make sure the kids are okay. He's skiing.
Oh, skiing. Oh, maybe he'll run into Vinny Batista. Because Vinny Batista just skis.
Is he at Alpine?
And we've got, okay, so I'm glad we finished this one because we have another special guest.
Slow clap in.
All right, Hollywood, welcome.
I wouldn't say special, but.
Raise the camera, raise the camera.
You're special to us.
How tall are you?
6'6".
6'6".
Yeah.
This is why I have a kinship with you. You're the same size as my son.
Is he 6'6",
He's 6'6",
really?
yeah.
Yeah, it's You learn to adapt. Let's put it that way.
And so it gets to the point where the only thing that's helpful with the height is if you get any taller, then it's just more uncomfortable in airplane seats.
Oh, airplane seats are horrible. Basement parties, like I referred to earlier. I think I have permanent calluses on my head from hitting girders and basements walking around.
But I will tell you, he is very helpful at getting down Christmas decorations and things from high places.
Unfortunately, I am too. And I stared at him when I left today, and I know I have to take them down, and that'll be my job.
I leave mine till the end of January.
I think things are purposely put up high, or I'm told to put them up high, so I have to take them down.
100%.
I think that's a plan, right?
For sure.
So what's up, ladies?
Nothing. This is our last day on the floor in 2025. In 2025.
Oh, really?
We'll be here.
I heard you had I heard you had an early celebrity guest, right?
We did.
My daughter,
Yeah.
My daughter was here.
It was the best. It was the best intro ever.
Best ever.
Best intro.
That's
best
awesome.
Intro ever.
She learns from you, right?
She's better than I am. Yeah. So it's nice having you on. Tomorrow's the last trading day of the year.
Yes.
We're doing the morning. We're not here tomorrow because we're doing the morning show for our network because we have so many people on vacation.
Okay.
But what can people expect on these last couple trading days of the year?
It's just like all the big banks and everyone are closing out their positions, so they want to mark them at the end of the year. So I would think we get a little bit of a rally, but as we see over the last 3 weeks, we've rallied quite a bit. You know what I mean? So it's like the end of the year. I mean, if they're happy with where they're sitting at the end of the year, they just close them out, and it's not big day, but there's usually a big trade, a decent quarterly trade that goes on at the end of the year. It's
But it could happen at any time. I want to be clear about this. So the big trade could happen at any time tomorrow. It's not as if it's going to be the last 5 minutes, the last.
Everyone's anticipating it honestly around 1 o'clock.
1 o'clock
today.
Around 1 o'clock tomorrow.
Tomorrow.
Yeah, 1 o'clock
so
tomorrow.
end of quarter, end of quarter, end of month, end of year.
Yeah.
It's a big trade that comes in
It's
every
a put
year.
spread versus a call. No, they do it like quarterly.
Okay.
It just happens to be these quarterly, which I would think a lot more significance now because it's a put spread versus a call 35,000 times. Rough idea. These quarterly. Basically 53.10, 62.90 put spread versus a
53.10, 62. Now, is the customer buying the put spread? Or
customer bought the put spread and sold the call.
Really?
Bought put spread, sold the call. And this was at the end of September quarterly, so this position's been on.
So they're just rolling it.
Yeah, what they'll do, they'll roll it to March. Tomorrow.
And when they roll it to new strikes?
Yeah, whatever they decide, That's the anticipation. Everyone's anticipating what they're going to do, which way they're going to go with it.
And you said about 35,000?
Right now it's sitting, I think it's at 35,000. From what I remember. From what I remember, it was 53.10, 62.90, these quarterly put spread versus the 69 double call.
So when 35,000 come through,
there's 30,000 on the 36
how
line,
much of that gets filled in the pit? Do you think
the whole thing?
The whole. So
the whole thing.
These traders take down 35,000.
They want to take down the whole trade. I think the bank themselves will take 40% of it, which they're allowed to do, and then the traders will take the rest of the trade.
Okay, this is a great question, and like I said, if you don't feel comfortable answering, you don't ever have to answer.
Yeah.
Like that goes without saying. But so that is what I think, in my mind, is the greatest part about an open outcry, because they're going to get a better fill by having you guys take down the trade than having electronic, because they would just blow through everything, and they would get an awful fill.
There you
People
go.
ask all the time why this place still exists, and that is why. Because you guys give them a better fill.
That is a great point because, you come in with a 35,000 lot. On your screen markets, it'll be a little bit tighter, but what are you going to get done? 100, 200, 1,000 maybe? And then it keeps moving. Once they know where you're going electronically on the screens are so smart. Once the pressure comes one way, they'll back up, where this trade will get done in the crowd in 30 seconds and be done. 35,000 contracts in the crowd will be done.
And that's what I want people to realize is these guys are actually doing a good service.
Right.
Good Samaritans back there getting. I mean, I'm being serious.
I know. That's why I said
That's
35,000. 35,000 contracts are going to get filled here on the floor from these guys standing behind you.
There's no doubt. I mean, like during the course of a normal day, a customer will be on the phone and say a market is $5 bid at 5.5, and it'll say the screens are 5 quarter, 5.35. Yeah, they probably are, but you know what the size is? 2x4.
Yeah.
You know what I mean? So this guy wants to get 1,000 done. Match the screens. Well, we don't want to match the screens. That's an electronic market that's going to disappear right after they trade, and then it's going to be a higher offer, a higher bid. You know what I mean? So getting 35,000 contracts done in less than a minute in this crowd is impressive, and and everybody's just waiting to see where it comes into the crowd. There's a bunch of different brokerage groups, and everybody tries to anticipate and have all their traders near that trade. So that'll be the talk tomorrow.
So the pit's a busy spot, and we were talking earlier with one of the traders that there are a handful of firms all hiring for floor positions, bringing more traders.
Looking more trader, right?
Can I show for a second, Doug? I want
Sure.
to show, you stay right there. I'm just going to show the viewers what we're talking about, bid size and the ask size. So I just went to the at the money, just
right.
it's easier for our viewers to see.
Oh,
So
if I
go to the 6900, you can see the bid and the ask, but here's the bid size and the ask size. Right now, that's your market, and it's very tight, but it's 2 by 92. So when you're taking down that much size, I just went the at the moneys, they're the most actively traded.
Yeah, exactly, right.
When you realize, when people actually see this, that's out there for everybody to see. That's the bid size and the ask size, that you can do that price. And you're as an
Yeah, so a broker comes in and says, I have 2,000 to do. Okay, you get your 92 done. Where are you going to get it? But at least the market makers in the crowd will be maybe a little bit off that offer, but you're going to get your 1,000 or 2,000 done.
Correct.
Be done with the trade, move on. Especially if it has some delta to it, the trade's going to move. You know what I mean? So that's like I've heard it since I've been down here, and I mean I love this place, and I kind of grew up here. But my point, we don't have to be nostalgic. But whenever I hear the electronic trading, there's a reason we're still down here, because banks that come in here and try to do size, or customers that try to do size, they know the deal. They might complain about the screen market, match the market. That's a little play they do because they want you to, but they know they're going to get filled. They know they're going to get a decent price. You know what I mean?
Well, kudos to you and the floor, and it's been around for how many years now?
What, 74?
We just had an anniversary of the SIBO.
74.
74.
74, yeah.
SIBO started 74.
Started in 74.
Started in 74 on
Yeah.
the 4th floor of the Board of Trade, and then it moved up here, I think in 76 or 77. On this actual floor we're standing on, which to me is bizarre. This is where the
it is weird. It is weird to be on
this was
this
the
floor.
CBOE floor. This floor, 7th floor, we're standing on right now, modern version, but this is where I started my career down here, walking up those
started
stairs
here
over
when it was here?
on this floor. I don't want to admit it, but I did. On the 7th floor.
Live, he just admitted it. ladies and gentlemen.
I shouldn't have, but I just admitted it. One more trade.
Okay, hit us.
Okay, yeah. Another busy.
April $98 calls, paper bought 20,000 for a premium of about 15 cents today.
So
April $98 call, little call.
$98 call.
April
so
$98 call. Yeah, $98 call, right? So 3,000 out of the money in April. Yeah.
3,000 out of the money.
Yeah, a little premium, like 15-cent premium, but
Holy
do you see it? Yeah, it's something. Yeah. I think that was like 15 to 20,000
pull it
somewhere.
up.
Wait, no, because there's a bunch of different April cycles. It's going to take me a minute.
April 98 call. I just saw that earlier.
Okay, it's got to be this one.
Yeah, you'll have to look at the volume.
April 98.
9,800.
$98 call, 15-cent premium.
I have 96, but yeah, you're right. You're right there in the premium. It must be one of the other
Oh,
April
did you find
cycles.
it?
No, it must be one of the other April cycles.
Yeah, right. But I mean, it's a 15-cent call, and it's.
And how many did they buy?
I heard near 20,000, maybe.
20,000?
Yeah, maybe 20,000. So for 15 cents, you're taking a shot.
Well, vol's low,
yeah.
VIX is low.
Exactly.
If someone thinks
Yeah.
the market's going to pop, it doesn't need to go up that high. You can make money on it.
There you go. You go. So, hey, this place is still happening. You guys have a great day. I got to run.
Thank you very much. Thanks for joining us. We appreciate you.
I hope it went well.
I can take the mic from you.
Got the mic?
I thought you were going to shake your hand.
I thought, you did the old fake shake hand thing. The fake shake hand.
No, my favorite is because Jenny always talks like this with her hands.
Oh,
and
your
so your
brother.
your brother just started slapping her hands all the time.
Yeah, she had her hand out. I'm like,
I'm in charge of the mic.
She did not want to shake my hand.
I'm in charge of the mic.
You guys have a great
Goodbye. Thank you.
I didn't want to slacken my role of, and I didn't want another water to get knocked over. I didn't want him to set down the mic and. Oh, so we've had a pretty busy show today.
So he's a wealth of information. I'm really glad we made that point because we get that all the time. Like, oh, what is the SPX? Why is it still there? And that's why I think floors are popping up all over because they are doing a service. And I think the pendulum almost swung too far in the opposite direction with the electronic.
With the electronic trading, and now floors are making a comeback. They really are making a comeback.
Yes.
So it is. I'm glad he brought that up because I think a lot of our viewers out there don't realize what's really going on down here and why these traders are needed.
I think that is something that is very lacking, and I don't think people that aren't old floor traders understand that.
why they're here,
Why 30,000
what
means
the
a lot.
value is of these market makers standing here, and how they do put themselves out on the line when they're filling a 35,000 contract order.
I mean, I'm gonna go back into April, but I'm gonna switch. Hold on, I'm just gonna go to a random April one.
I'm gonna go into
switch
the platform.
it to bid size and ask size again, and I want to show because I think this is probably our best point from today. Look at this. So they're talking about April contracts. I just have the ask size and the bid size, so that's what you can see right here. These are small numbers. They're talking about April orders coming in, and their size is 33 by 7, 78 by 25. That's all that you can get filled at those prices. And so somebody who's coming in with something that they want done, you don't mind having your price shifted a little bit to take down that size.
I'm trying to search for.
I was searching, but there's
I found it.
There's three April cycles.
Okay, I found it. So this is what, and it had to be the quarterly because the other cycles don't go up that high.
Am I going implied volatility? I'm going to go open interest.
Just go to volume. Go to today's volume.
Okay, and it's the quarterly.
It's the April quarter, the morning, the AM.
AM, okay.
And because the other cycles don't have strikes this high, like 9,800. So you see
There's
that?
96. Oh, yeah, 9,800. There you go.
Yeah, there they are.
17,000.
17,000. And open interest before this was only 70. So it's a new trade, and the customer bought 17,000 of these 9,800 April calls. And you see the market, 15 cents.
We got a slow clap and buy because we found it.
We found it. Here they are.
To tell you,
oh.
is this on still?
Oh, here, I can turn it on. I can turn it on. There you go.
I just want to tell your viewers, Happy New Year, and you two especially, you do a great job. Happy New Year, really. You guys do a great job. Happy New Year.
Thank you.
He is on the payroll. No, that was fun. I'm glad we found that. That's
Yeah, okay, so there it is, 17,000 of those.
Yeah.
Now, what did they trade for? He said 15 cents?
Yeah.
15 cents. So I'm going to bust out my calculator just because I'm not doing any math today. So we've got $15 times 17,000.
Yeah, you can let the one go.
They spent 250,000. That's actually not that bad. 250,000 to have 17,000 of those calls. If we have a rally, if we have a big rally, those calls could be 40 cents, 50 cents.
Here, take a look at this. But to Jenny's point, you don't even have to have a rally that high. If it goes to 84, if we get a little bit of a rally,
a little bit
they're
of
gonna
pop. You pay 15 cents for these calls and you sell them out for 30 or 40, you doubled your money.
Yep.
On a little pop because vol's so low. So if I go to implied volatility.
I'll change it to implied
let me
volatility.
find it.
I can change mine too. Just look at mine. So
they're at 19. They're 19. That 1020.
But
now a 10 bid just came in. Do you see that?
Yeah, but do you see what's happening? The implied volatility is probably higher a little bit because of that.
Yeah. Oh, it is. If you go down a little bit, this 13, 14, 15, they probably boosted that a little after selling 17,000.
Yeah, then you got to boost the ones around it too. You just can't be like that line.
So
that was pretty interesting.
Yeah. Someone thinks there's going to be a rally in the alley.
Yeah. Yes, they do.
But it's not that big of an 250,000.
That was Jenny.
You know what I'm saying? It's not like, I thought it was going to be more. 50.
But it's still, but you see a lot more of that. You see a lot of the bigger size and bigger things and bigger hedges and bigger anything in this pit. So it is kind of interesting.
15-cent calls.
Wow.
Again, 107 days, they'll probably expire worthless. But that doesn't mean that they couldn't go up in value between now and then.
The risk on selling those is something that I can't.
You have to just hold on for 107. Those are ones where it's like, I just got to get to 107 days and those are going to roll off.
Yeah.
And hope for the best.
Okay, so that was a pretty interesting segment.
Yeah. All right, now we got to get back into best of.
Okay, let's hop back into best of. So we had finished this one. So Ironflies, accepting a lower win rate will capture more credit, led to better overall results. That is the sentence. That last sentence is why I like this. Ironflies, accepting a lower win rate to capture more credit, led to better overall results.
I don't know what I'm going to do in 20.
Well, I know what I'm going to do in one of my accounts.
I might.
Well, okay, hold on. Because remember, I've been morphing everything, and I've been taking the put spreads, then iron flying it off.
Yeah, but.
Yeah. I just went like this.
And I don't mind doing different trades at different times. So like throwing on that calendar at 8:30.
But you got to keep them in different accounts.
Well, I don't, like in my account now, I've been throwing on the calendar at 8:30 and then around 9:15 selling the put spreads.
Yeah.
So maybe I want to do the calendar, but a calendar and an iron fly are very similar, very similar. So if I'm doing a calendar at 8:30 and taking 10%, That's not much different than the iron fly.
That's not. It's
it's
the same trade. It's the same trade.
So,
all right, let's go to the next one. Moving forward, impatient bulls selling 0 DTE put spreads. I will tell you.
October 16, 2025. I'm gonna put. You know what? I'm gonna put this on my calendar.
I will tell you that this one. We did this. It got pushed out to YouTube, and it was our #1 YouTube clip.
October 16th.
Ever.
So on the year mark. And guess what? Were we in Disney? Were we in Munich?
They redid this because it was that popular. Because this was our #1 YouTube push out. Watch this. Impatient bulls selling 0 DTE put spreads.
I was going to put it on the calendar. And so, in a year, we could celebrate its anniversary. But I think
this was done before.
Yeah.
We did it before then, and this is the boys doing it.
Because I'm pretty sure we were in Germany.
We've done the study. Okay, hold on. It's just the date is wrong. As markets continue to rally, traders may wonder what happens when we take a directional stance. This section analyzes how different approaches to selling daily 0 DTE SPX put spreads have performed.
Okay, study setup. Here we go. Sold 1 put spread daily using the at the money. What?
Short strike. That's it. I'm just saying one.
I didn't know what this.
Bold.
I was using the at the money short strike.
They compared multiple long strike widths. And then entry time, same
thing.
9
a.m. Trades were closed 10 or 25% max profit.
This is, like I said, this is our #1 YouTube clip. Remember, this is the one that got 9,000 views in like 2 days.
I wonder how many views it has now.
It's got a lot. We'd have to find it again. Okay.
All right. So here we go. The just out of the money put. Just out of the money, just at the money put, right?
So look at this. This one says opened at open.
Open at open, and the next slide will say, I think, open at 9.
Yes. Okay. So opened at open.
So on the open. Win rate high enough, right? Average P&L all positive. Max drawdown.
This is where it says, and I'm gonna remember. I'm gonna probably butcher this, but this is if you entered at a very unlucky time. If you remember, he changed it to not conditional value at risk, because if you have a $10 wide, your conditional value at risk is only X.
Like $600 to $100. But yeah, if you had multiple, like 3 losses in a row or something like that.
Yes, the maximum of all the losses together.
I don't like the $30 wide or the $25 wide or the $20 wide with the $9,000 drawdown.
That's what I'm saying. I landed on, and now I'm going to go to the...
Now open at 9 a.m. What turns better? Okay, so go 9 a.m. We've got 50, 63, 77. Go back one. 45, 56. So better average P&L at 9 a.m. Better average P&L at 9 a.m.
Better average P&L at 9 a.m. But I landed on the $10 wide.
We're not moving today. Like Jack Tucker's got to be making. Hopefully today could be another day of making bank because we're not moving today. SPOOs have sat between like down 5, unchanged, up 5, down 5, unchanged.
No, we walked in. They were down 14.
Yeah, but that's nothing.
Yeah,
that's nothing. Like, it's just another day of not moving.
Everybody's just waiting. Okay.
Who knows? I don't know what the rest of the day will bring, but seems like another slow day.
I think maybe tomorrow, if we could do some homework, or if we could ask the research team, I'd like to get to the point why we did just put spreads, because they broke apart the calls and the puts for us. Remember Jacob broke it apart, the calls and the puts?
And you could see where most of your profit was coming from, and most of the profit was coming from the put spreads, and sometimes the call spreads hurt you.
They were detrimental, correct.
Yeah. And again, people might say, well, we're in a bull market. I like one-sided. I like one-sided because a quick little move and you get out. Like yesterday.
Yesterday is a perfect example.
We both got out. We had on various SPX
and
trades.
TP got out too.
We all got out. We all got out. Like by the time I got home, I opened my account and it was gone.
So that's where I think we need to be a little bit clear on what we're saying when we do this. We have a put spread in, yes. So on a bull market, you can get out, yes. But this kind of sprung forward off of one study that Jajun did for us a long time ago, saying that there are greater 5-minute up bars. That doesn't mean it's going to be an up day.
It doesn't have to be.
It could be a down day. It's just an up bar within a down day.
It doesn't have to be a green day. So you can go back in time and look, how many green days do we have? How many red days do we have? You can put on just a put spread, and you could see the win rate 87% of the time.
We don't have 87%.
We don't have 87% green days. It doesn't have to be a green day to get out of that put spread.
No, and I think that's where I think we need to, I want to hang my hat in 2026, is because it doesn't have to, I want to be very consistent with this. It doesn't, I can't be like, oh, I'm going to time the market. And I think that was my downfall in 2025, being like, ooh, I think we're going to go down from here. I don't know anything.
Here's what I've learned every year it's the same. I don't know what way the market's going. Like, that's what I know. I don't know what way the market's market's going.
And so with the SPX, it almost takes your whole thing and shrinks it into the entire width of the trade in one day.
In one day. I know. And every time we think, anytime we think, oh, we are going to get long because I think tomorrow we're going up, or we're going to get short because I think we're going down this afternoon, those really don't work out.
No. And so I'm glad you brought up yesterday's, because we both put these on. We both put a very tight, which we saw, a tight GTC in. So this is 25%, 20% profit, all that. And we both got out, and it was a red day.
Yeah, right. And it was a red day. And we both got out. So for people to say, this worked because we're in a bull market, it doesn't matter. You don't have to have a green day to get out of this trade. Yeah. I don't think that matters. We could have a bear market, and this could still work out.
Yeah, we can. Okay, so here's the takeaways. During the study period, SPX rose from 38.35 to 66.44, contributing to strong results for daily put spreads. Okay. Once again, yes, that is true. These are all facts. But if you're taking such a small percentage, you just need what Jajun has said is a greater 5-minute up bar than 5-minute down bar.
Right. We should bring that study back.
Yes.
Best of.
Yes. Okay, go ahead. Sorry.
No. Higher profit targets captured more total P&L, but increased exposure to larger drawdowns, especially with wider spreads. I know. I shy away from the wider spreads.
That's
Usually
why,
when I'm doing my put spreads, they're $10 or $15 wide. They're not.
I like to bring them. You're a little bit farther away. I like
give
those.
myself a little bit of
I
room.
like the $10 wide at the money.
I give myself a little bit of room.
But here, there is no meaningful performance differences between entering trades at market open versus 9 a.m. I like the 9 a.m.
Hey, you look at 9 a.m. and the average P&L is a little bit higher in every category, a little bit higher.
And that's tuning profits.
Yeah. But that was a good one, and I'm glad we brought it back. I like having the best of.
I did too.
10:44. We've got about 10 more minutes.
So is there anything we want to do in our account? We've traded nothing today.
I was just going to say, I haven't pushed anything out.
So let's take a look at IBIT, because IBIT is, we have 62% profit. I say we close this and put on a new one next week.
Oh, yeah. So we've got 1 day to go. Sure. Take off our IBIT Jade Lizard. Go back again, because Oh, that was close. This one was very close, and it hasn't moved. This is just showing you how Bitcoin hasn't moved. For 8 days, we've had this on, and it's trading exactly where it was when we put this on 8 days ago.
Yes, it is.
So we made $75 on this. Take that off, and let's put a new one on, and that will be like a 10-day trade.
So
a 9 or 10-day trade.
We don't want to go to the Friday.
No, we got to go to the 10-day.
Are we going to be? We'll be back. Okay, good.
Yeah.
So this is something where we take the
just these weekly Jade Lizards. Honestly,
this is like a backwards Jade Lizard, because we want to buy something in here. Not a backwards. I put it in backwards mentally.
And we're not getting 30 cents on the call spread, which.
No, this is only to buy something. That's why it's almost like a naked put. So I'm selling the 52.5, 53.5 call spread to go down and buy the 45.5 put. And then I decide what put I want to sell. So I'm actually going to get aggressive. Do you care? I'm going to sell a 50.
No, that's what we did last time.
Perfect.
But did you buy something? Oh yeah, because we were only using $334.
Yeah, that's why we use the call spread to buy that put.
So we were talking about Bitcoin this morning on the train, and if it's just going to sit here, and who knows what it's going to do, but if it's just going to sit here, we need to get some premium selling around. We can't just sit and hold it.
You gotta do something.
I have been selling weekly calls against my IBIT. I think we need something, and this has been a nice premium selling strategy if it's just going to sit here, and you could do this around your crypto, and if it runs up, you don't have risk to the upside.
Yeah.
So you could do something like this around your crypto.
The problem is your double downside.
You're doubling down.
Double downside. Maybe you reduce your size and then do this around the crypto. It's not bad. I wanted to, because we are kind of running out of time. I saw it.
Or have risk on have risk on some of the calls until your size gets reduced.
So your size gets reduced.
And then.
Yeah.
All right, so I'm getting everything pushed out on the follow page.
Okay, so I popped into Twitter to make sure that we get to everybody. We've got Ajit coming in, which is awesome.
Microsoft.
He's got a Microsoft Strangle. So he's the February expiration, $32 move.
Okay.
He gives us the earnings dates, the IVR, the IVP. He gives everything through here.
So let's go in the platform.
I just want to see if we get to everybody.
No, we got to Arun. So we'll go in the platform, look at Microsoft, and we can't do a Strangle, but we could do an Iron Condor.
We can.
Let's take a look at rank though, and see.
He's got the rank on there. It was pretty good. Oh, sorry. Microsoft. It's got a 24 rank.
Yeah, not bad.
Okay, he's in February.
Well, you're crossing earnings.
Yeah.
You're crossing earnings.
Yes. That's a root. This is not a rune. This is a jeet. So a jeet does trade like this, and that's totally fine. I don't usually trade neutral crossing over earnings.
Do you want to just sell a put spread?
Yeah, let's go through his trade, and then we'll kind of walk through ours.
Okay.
What were his strikes?
Well, his was a strangle.
I know, what were his strikes?
His was a strangle. Let me pull it up and see his strikes. He had the, let's see his strikes here. Where is
They're
he?
up there. It's in the description.
Oh, 445 put.
445 put.
And the 540 call. So
And a
you're like $100 wide between your shorts. Not bad. Getting 860, not bad using 5,000. Nothing looks bad about this trade.
So, and Ajit is pretty mechanical. So he's starting, it's a 16 delta strangle. It's pretty mechanical.
Yeah. And who knows, like 2026 could be a year where we just sit and do nothing. It might be.
It very well could be, but take a look at this, which is what we're used to seeing. I'm sorry, I shouldn't say it used to seeing now, but typically you see a 16 delta call is $3.70, and a 16 delta put is more.
That's
lately,
normal skew.
Yeah, normal skew, but lately we've been seeing the flip.
Flip side, where more products have call skew. And
Just like an ASTS with a rune.
Right, and if you look at the year, we did have a handful of products that just went crazy, had crazy up moves, and that's causing this call skew everywhere.
Yeah, it really
But
is.
Microsoft has some normal skew here.
So this isn't bad, and this is where Ajit is. I like it.
Well, let's see. So we're at
You're getting over a 10%
490.
return on capital.
You're $50 up. Yeah, and $50 down.
Yeah. Ish, right. There's
yeah.
the delta and the delta. Okay, but to Jenny's point, if we wanted to do something and sell premium in here,
Let's just sell a put spread. Let's just do a very cut and dry $10 wide for $3.
Deal.
Cut and $10 wide for a third of the width. You have to bring it up. You probably need to go to the 70.
Okay, so I'm going to keep moving the strikes up until we find
we get to $3.
I don't like it.
That's our only. Here, naked options give you much better, higher win rate, higher profit potential, higher percentage, like all of that. When you have to define your risk, this is why I usually will switch to lower price products so I can put naked options on and not have to bring my put spread up so high to get a third of the width. But this is a low risk trade where if Microsoft drops down and is trading in the middle of that, we're not going to be out that much. It's the only way to do it with a smaller account where you have to define your risk.
I will ship it. I don't like it, but what do I know? Do you know what I mean?
Yeah, we're right. We're done guessing which way things are moving.
I didn't like it. I was shaking as I was pressing the button.
It's fine. We're getting that's the whole point of getting a third of the width. We're getting $300 on a $10 wide. Max loss is $700. But if it gets to the middle of that spread, if we're at the 21-day mark and we could close it for a loss, it's not going to be a full loss.
I just want to put a GTC in
unless we have a massive move down.
Do you know what else well, we can talk about this more tomorrow, but do you know what else I want to do this year? I want to be very mechanical because I don't know anything. I want to stick with liquid products. I know we're going to go through this again. Liquid products, be mechanical, and then I'm also going to make sure, because I think in the beginning of the year we're very good about this, and I think we let it lapse at the end, GTCs.
Oh, GTCs for sure.
Because and a lot of times we'll put them in. I just put a GTC in for this.
Yeah.
That's one of the things that I love having in. It is, it's great to have in, and it's something that I don't do all the time.
GTC is definitely. It's funny, and I'll have to. I was searching for something. Yeah, I lost something. I needed something for the cruise, and I was searching for it. And I found a paper from April of I listed down this stock. Allocate this much money. This stock, allocate this much money. It was a list of stocks and how much money I wanted allocated to each stock. And that was supposed to be my year plan. And guess what? How much of that is left in my account?
None. No. Oklo is still in your account. And I know
Oklo and Intel, they're the only ones from that list still in my account.
Yeah.
And it was crazy to think that was the plan I made. And at some point, it's not there anymore.
Well, I mean, and I do think this industry is a little bit different in the fact that it's good to have the plan, but the market gives you what it gives you.
Right, yes.
So you're not just going to be like, well, I'm just going to keep buying this.
And honestly, when vol changes and if you're not getting premium in something,
It doesn't
you're
make
not
any
trading
sense.
it anymore. If we're not getting enough premium in something, we stop trading it.
Yeah, I agree. We're vol chasers.
Okay, so 4 minutes to go. Do we? Intel's having a little bit of a move up $1.28. I just want to take. Oh gosh, let's put on a real Intel position. This was one of those big order came through, big open interest. Let's actually put on a real Intel position so we could.
One of these was big
looking
open
at.
interest. The 40-30 put spread was not.
No, the whole thing was one big trade one day, but I think part of it's closed. This went on 63 days ago when it was a big, went up on the unusual option activity, this whole trade.
Okay.
And
And we need to move the put spread. We have under 17 days left. No matter what.
What?
No matter what, we need to move that put spread. Here, I'm going to go into this.
You know what? If you want to just take that put spread off, it's not that much. The put spread's not that much of a loss.
We can take off all of them.
No, just leave the calls, right?
Let me look. What are we losing again?
The calls are worthless. The put spread's only a $40 loss, $38 loss.
Okay. So then let's close the put spread, and we'll put on something else.
And then Frank the Great just let us know that a big butterfly just traded in Intel.
Ooh. What strikes?
I don't know. I don't know. I don't know what cycle. I don't know what strikes. But it is having a little bit of a boost today. I don't care if you leave that trade or the 30-40.
Well, let's put another trade on in the puts.
What is it worth right now?
272, and it's gone. So
All right, so let's put on a regular Feb position. Just do a Jade Lizard. Like, it's a perfect Jade Lizard candidate.
So Jade Lizard is selling a call spread, getting 18 cents. You got to bring
and take a look at the buying power for a Jade Lizard.
Ooh.
Yeah.
So we're not collecting exactly over. I'm collecting 99
You're
cents. I
close.
can bring it up one, but I might as well just sell the 33.
Yeah, I mean, look at the buying power, $400. Not bad at all.
No, I like that. I like that a lot.
Okay, so push that. I'll get that pushed out. Oh, 37.50 is the center strike for the butterfly. So big. Let me see if I can figure this out. We've got volume up.
What
today?
Cycle? It was today's. Hold on, I'll go.
No,
to it in a second.
It's not today.
What was it?
Oh, I don't know. I don't know. Frank just said a big butterfly, 37.50 center strike. I don't know how far out they went.
Well, I mean, if you're in the 3-day, there's
nothing.
there's
37.50.
a decent amount of volume.
Oh, it could be. But where's? I don't know how wide it was. We don't know all the details, but we do know a big butterfly traded in Intel.
A big butterfly. Could be a big
All right.
lizard.
Anything else? Did we get filled on that Intel Jade Lizard?
Yes.
Okay, I'll get that pushed out to the follow page.
Nothing else needs to be managed, and we can manage it today on last call as well. Okay.
Oh, right. Tune in. Last call. We're on. I don't know. There are obviously no earnings going on. Not sure what's going on today, but we'll be. You can tune in and watch paint dry with us.
Oh, I've got a teaser. The cherry bomb cherry picks. Is it cherry picks?
Cherry picks?
The cherry picks that is coming out today is going to be really good.
Oh, you talked to the source himself.
I talked to a source.
Nice.
I spoke to a source for about 30 minutes yesterday.
That makes sense. All right, everybody. Thanks for tuning in. And Liz, thanks for running everything today.
No problem. I'm glad you reminded me about last call. You need to keep reminding
And
me.
shout
Otherwise, I've got Lily Andrews who can sit in my spot.
Yeah,
She
shout
did
out
such
to
a
our
good job.
guests today, Lily and Hollywood. All right, everyone. Thanks for watching. Remember to trade small, trade often.
Laugh with us, learn with us, and watch Liz and Jenny show.
We'll see you on last call.
What's up, Tasty Nation? Welcome back to the show. This is Options Trading Concepts Live. My name is Mike. I'm here with Jamal. Hello. And it is a fantastic little Monday we've got here. Got a couple days before the new year and another short week here in the markets and a lot of inactivity, we'll say. Market hasn't really moved since the open.
Yeah. I mean, not surprised. It's December 29th. It's a couple of days before the end of the year. This is kind of usually how things go. I think the only reason we're down is because we just had so many days in a row that we were up. You can see volatility is barely moving here. This is kind of what you would expect with a couple of days to go before the end of the year.
Yeah. 2.5 point range in SPY today. 42-point range in the E-mini futures. But yeah, to Jamal's point, just not a lot of volume here. We are sitting at 500,000 E-mini contracts. If we look at SPY, 21 million. If we look at the Qs, 16. IBIT 17. So yeah, these are lower numbers, and we're seeing kind of a muted trading day, at least to start. Speaking of muted, if you're wondering if we color coordinated today, wearing our gray sweatshirts, the answer is technically we did not, but we do have this new show that we're doing every single day. The markets are open, and sometimes you just start to wear the same clothes, say the same things, think the same thing. Yeah,
It just happens. It just happens. Yeah.
It's cute.
It is. One thing that does have volume, GLD and SLV. Holy cow.
Mm-hmm.
I mean, we're not surprised, right?
No.
Yeah. Especially after the move the other day. That was like kind of it. And there was just so many different things that showed up over the weekend that kind of gave you the idea that some selling was probably about to take place soon. I mean, this is exactly what we were looking for. This is the exact thing that we were talking about and expecting at some point. Sometimes too far is just too far, man. Like, come on. I mean, at some point, look, I love this type of thing. I'm not shit talking. I'd actually love this type of thing. This is how markets are supposed to work. If silver kept going up all the way to 100, I would be like, something's broken.
Yeah.
Seriously. I think you got to have these pauses and these pullbacks. And the only question that remains, is this going to be a multiple day pullback? I was looking at the weekly chart of silver in October when they did that. It was like kind of 2 weeks where it was a little bit stagnant or kind of pulled back. So I think that's the one thing I'm wondering now. I mean, sure, we're going to see some short-term bounces here and there. Hell, we might even see a racist move tomorrow. Who knows? But I think basically what you're seeing here, it's on warning. The great Tony Batista tweeted over the weekend about how they raise margins. It's absolutely true. As soon as they raise margins, you know something's about to change in a product. So just know that going forward. When you see something doing what they're doing like this, especially futures products, and they raise margins, something's about to change because some people are getting squeezed. Some people are going to automatically have to sell. This is kind of how it goes. But I like seeing this because this is a two-sided market, and this is kind of what you want to see.
Yeah, and I think this speaks to not only the crazy rally we saw in platinum and silver specifically, but also we've said this too. Like when you have these holiday weeks where there's not a lot of activity, if there's one-sided trading happening in this illiquid, lack of activity market, like that, this is when you can see the really big moves. Like platinum down 14% could be a fund forced to sell or shorts coming in a huge way without much counterparty action.
Yeah.
Like this could easily be emphasized, we'll say. Like you can still see huge moves, and it's not surprising to see after a big run up like this a sell-off, but this move could be more magnified because we're sitting here on Monday on a holiday week coming out of the Christmas holiday. Just not a lot of activity going on. But if you have these specific pockets of activity where there's one-sided selling or one-sided buying, you can see it really emphasized here. So I think it all plays into, the craziness of somewhat illiquid markets around these holidays when you have these situations that have happened and now they're kind of reversing here. But yeah, this is a huge bar for one day, especially considering it was higher today. Same with silver, higher to open, and now we're selling off more than 10 points. Like that's a crazy range.
I know these are probably the only things to trade this week. I mean, I don't know, because I don't know how much I want to do on a 30-point pullback and SPOOs right here. I mean, again, that you always want to go where the volume is, and right now it's going to be in the metals. It has been. I mean, let's be honest. It's been like that for a while.
Yeah. Question from the YouTube chat. Would you get into silver, gold, or platinum now? I personally wouldn't. I think that we played for this to the downside. Like I have this silver put diagonal spread, so I'm already in it. The 65.55 long the March, short the Feb, right at the money, basically a scratch. It was taking heat into the continued rally last week for sure. But yeah, I'm in it already, so I'm not going to add more, but this is what we were playing for ultimately. So I would like to see a continuation here. And given the huge percentage to the precious metals, when you look at all the futures to the downside, there's corn, there's Soybeans, wheat, all down like 1%, and then it jumps to gold, silver, platinum, all down over 5%, silver 7%, platinum whopping 14% to the downside. So, I mean, these are tough markets to get into now if you're not already in, but if you are, I would just say stick to defined risk, keep it real small. You're going to see big front-loaded implied volatility, especially when you look at the silver futures and gold futures, like 29 days out, 67% implied volatility. All the further cycles are at 60. So you're seeing a ton, and look at this, an 11-point implied move for the 30-day cycle relative to an 11-point move in the 60-day cycle. So regardless of your directional assumption, you're going to be able to reduce cost basis pretty aggressively here. And you're seeing that kind of permeate through the ETFs as well, SLV, GLD. So yeah, I think defined risk, keeping it small, that's where I'd go, especially in GLD, where you are actually seeing a little bit of an uptick in implied volatility in GLD. We were looking at this, it was like 20% last week, but now you're seeing 5% moves in this product. Like at some point it has to give, and there has to be an implied volatility increase. And we're seeing it a little bit now in GLD. SLV, much higher implied volatility. We got an IV rank of 88, and now we're looking at 75% implied volatility for Jan, which is the biggest number I've seen in silver in terms of implied volatility.
I think that's definitely the way to go. Like define risk if you're going to do it. It's always interesting, right? Like how people are tripping over themselves when I don't know, SLV, since we're looking at SLV is 70, but they're a little scared to jump in at these levels, right? I mean, that's kind of how it goes. I think you just got to be defined risk, and I would say the January options are obviously cheaper than if you want to go to February. Normally you want some duration, but I think January is going to get wild. I think in silver for some reason. I wouldn't be surprised, especially after the year that it's had. I think this Jan options are going to be wild over the next couple of weeks.
Yeah, and you can see that you have over a 10% implied volatility differential. If you look at Jan, 18 days out, 75% IV, 8-point move projected. And then you look at Feb, which has more than 3 times the amount of time, and you're looking at an 11-point move with a 63% implied volatility. So lots of cost basis reduction to be had there. I'm happy with the one I've got, long March, short Feb. But yeah, going into Jan with the short option and then inventorying Delta in Feb or March, you're going to be able to reduce cost basis aggressively there and take advantage of that heightened IV. But you still have to be right directionally if you're going that route. But yeah, Ryan is out today, so no official crypto update, but it's good timing because crypto is completely flat today. Down 10 points. I don't know the last time I saw it down such a small number by the time we start the show at 11, but ETH too, just sitting flat here. Not much going on. We've had a somewhat of a decent intraday range here, 150 points in ETH, but sitting flat there. And then Bitcoin, similar story, 4K range, which is pretty big, but still the last 3 trading days have been just absolutely flat, which is always interesting.
Yeah, so. It is. I wonder if it's finally kind of just consolidating and maybe going to start to bounce again. It has been it's been a rough end of the year for Bitcoin, honestly. But it's not ugly. It's just been kind of rough, and it's a little bit different than what we're used to seeing from these asset class. So I think honestly, this is probably a good time for them to do this because they can start the year off with a bang, probably.
Yeah, coiling here, as we like to say.
Yeah, exactly.
Looking at the follow page, I did post a trade this morning. So I've got the Celsius. I had a long call that was remaining from a call diagonal spread, and I just closed it. There's 18 days left. Long call was up 27 cents into a small rally today. So I was just like, I just got to remove this risk. There's no reason to hold this. So that was a tiny winner. And then last week, got into the put diagonal spread in SLV. And then SPX threw on that 100-point wide butterfly for $500 to the downside. So just in case we see a continuation to the downside, that SPX butterfly is going to be a decent hedge. It's up 50 cents right now. I've got this iron condor on 6,500, 7,100 shorts. That's working out nicely, up $220. And we're sitting right in the middle of that range. So there's only $110 left. I've made 220. So I'm at 70% profit here. I'll look to close this probably today. And then this one, 2 days left, sitting at 6,800. I can absorb another 100 points to the downside. But the upside's still in play. I mean, we're 50 points out from filling this 5-point wide vertical spread. So I think I'm going to leave this one on. And if worse comes to worse and we sell off towards 6,800, it'll be good for the butterfly hedge. But I can always just roll this put spread out to the next month and just sit there with a 10-point wide spread.
Nice.
So I think only thing to do in this portfolio is to just close this iron condor here. I've made 210, can only make 120. Crazy stuff can happen. And this has $700 of risk. So I've got $700 of risk with only $100 more to make. I think we're looking good for this one. So let's work that. And yeah, the SLV trade again, got the downside diagonal 65.55. So I want to see more here. But if we do get another 5 points, if we get another 5 points, this will be a $100 winner, and I'll just take it off.
Yeah, all I really did late last week was remember the butterfly, the call butterfly, 69.50, 7K, 70.50. I was like, man. I mean, I bought this thing for $400. Shout out to the chat, by the way. And I was up 600. And I was like, I gotta close this thing. I mean, I just envisioned a day like today, and it was just gonna zap all the energy out of it, which sure enough it would have. So glad I closed that. So I closed that last week. And then SLV, the only thing I ever did was buy a put. I couldn't really remember. I was like undecided. I decided to just buy a put, the 65 strike. After the big move on last Friday, I was like, I'm gonna roll this thing. So I put more delta on it. So I had the 75 put. So that's currently the position. Pretty in the money. I don't know what I'm gonna do yet. It's funny that somebody asked today, would you get long silver here? Well, for me, it's a really good question, considering I have this long put. I might find some type of long delta trade to do with it down here. Considering that it's Feb, I'm not in a rush because, again, last time I looked, I mean, usually these things, they go for like a week and change. So I don't know. I'm trying to decide. We'll see. I mean, I know full well that if I don't do anything, this is probably going to bounce back tomorrow. Whatever. Again, I got Feb put. I think we're about to see a lot more volatile metals. So I feel like I have a little bit of time on my side here to decide what I want to do. Yeah, and I think regardless of whether you're playing for a continuation or a reversal in the other direction, like for me, I think this move in platinum is so big that this screams like something's going on with some fund. 13% move. Enormous. On not much news, we'll say. Like there's nothing that's seismically shifting. Like when you look at copper, this was different. This move to the downside was because of a difference in how it would be used and like the taxation of it. So that this is a sort of a different story. This is like rocket ship straight up from 1,500 to 2,500 and then tries to go higher and then just like liquidation to the downside. So like, what is that? I think we'll get more info on that as time passes. But for me, I think platinum's a scarier endeavor to dive into, but silver a little less so. With the 7% is still a huge move. Don't get me wrong, but regardless, silver you have SLV, you can go with options there. GLD, you can go with GLD there for options, and I would just say stick to find risk. Like you can reduce basis so aggressively with this Jan cycle. I would just go short Jan or somewhere around here, and then long Feb, long March if you're doing a diagonal or calendar spread. I think that makes the most sense. All of the conspiracy theorists, we're all on Twitter this weekend talking about, China is limiting silver and all the. I mean, all of the theories you can imagine were coming out. I don't know what's true. I'm not really sure, but it's so interesting how these things come out at these levels. They didn't come out when it was trading, 60 and 65 and 70, but all of a sudden, once it's like almost $80, all of those things come out. You just knew it was going to turn around at some point. So I think it's going to make for an interesting trade over the next couple of weeks. I don't know if I'm at a point where I'm selling vol in these yet, honestly. I just think they're going to move around a little bit too much.
Yeah. Yeah, and still like GLD, still we're seeing big moves, but 27% IV is not that much. Like that's why I think you have to go defined risk, pair it with the long option. Like even this, a downside 400 385 diagonal spread is only $10, and you're reducing the basis on the long option by $350 for 18 days. That's a big number. Like it's rare that you see that much premium priced into such a near-term cycle in something like GLD. SLV, on the other hand, SLV, 75% IV. Now we're getting to a world where like the implied volatility is pretty high in silver, and that's reflected in the IV rank, of course. But at least with silver, it's a $65 product instead of a $400 product. So if you really wanted to sell premium in silver, like now it's actually looking pretty good.
I know. Actually, I'm looking right now as I say that. I'm like, you know what? I actually could sell some vol right now because this put has gone in my direction. I might actually do that. It actually might really make sense in Jan for me to do that. And
yeah, because Jan 18 days out, just a classic 60, 75 strangle. I just pulled up strikes that are just like out of the money, near the expected move. $700 in buying power, $300 in premium. And if silver just chops for a day or two, like you could see this premium get cut in half easily. But this doesn't come without risk. Like you're seeing these moves today, like 5-point move in either direction is still a very big move. So still not for the faint of heart, but we haven't seen this sort of premium priced into such a near-term cycle in quite some time. But again, I'm in it already to the downside. So I'm just going to leave it at that. But I think if you're looking to sell premium, I think SLV is where I would go. But I still like the idea of defined risk just because you're seeing such a huge implied move in January relative to February and March. Like the fact they're seeing an 8-point move in an 18-day cycle and a 13-point move in an 80-day cycle, that's pretty crazy.
Yeah, it really is. Yeah, I think I'm going to sell a strangle in here. Working it now. Yeah.
Jan one?
Mm-hmm.
Yeah.
Yeah.
Yeah, it's like a pure IV play, honestly.
Yeah, it is.
18 days is not that long of time, and especially with this week being a shortened week, if silver chops around and settles down a little bit, you could see that IV get crushed for sure. And you're seeing a 10% increase over the last 5 days in implied volatility. So all things are looking pretty juicy there. If you want to join us on the YouTube channel, we're streaming live there. We're answering questions there. Just head over to tastylive. You'll see this video streaming front and center. I've got the Refer a Friend program pinned to the top of the YouTube chat. Another easy talking point if you're seeing family members or friends for New Year's Eve. But if you have a friend open an account with your referral code, you both get $100 if they meet the qualifications, $2,000 initial deposit. But check it out, tastytrade.com/referral. That's pinned at the top of the chat. Let's see, what else we got? Would you do a target calendar spread? 103, 105, 1853.
We talking about target?
The bullseye. Trying to claw back.
Yeah, it's been trying for a while. Jeez. I mean, no.
103, 105.
Target.
I mean, it's small. It's small enough to where it's... If you are...
Wait, what are they doing?
103, 105.
Oh, 103.
I think you got to go... I think you're going 105.
I mean,
103 doesn't work.
It's not like a question of whether the trade is good. That's actually not even the question. Honestly, I have a hard time believing Target's going to bounce back. That's really what we're asking here. But yeah, the trade is a good trade, I would say. I mean, it's worthwhile doing.
That's fine. I think if you're trying to play for an upside bounce, you're collecting a good amount of premium, selling the 105 for 90 cents against your 250 cost for the Feb 105, and it's $1.50. But you have to temper expectations here. Like if you do get that move to 105, you're looking at like a 75-cent winner, nothing crazy.
Right.
I mean, against the debit paid, it's a great win, 50% of the debit paid, but that's kind of what you're looking for. If you want more, I think you got to diagonalize it and go like the 100 call in Feb and sell the 105 in Jan for $3. Now you've got a $200 max profit if you get a similar move. So obviously twice as risky in terms of debit paid, but that's the adjustment I would make if you are trying to place a bullish trade in target. It just depends on what your risk tolerance is. Brian, hope you had a good Christmas as well. Year-long SPY trade doing well so far. Yeah, it's almost up 50%, which is interesting. I looked today just to see like what kind of adjustments could I make if I made an adjustment. I'm going to hold on to this a little bit longer just because we're right in the middle of the range. Still not testing the upside, especially with this downside move today. And 50% is closer to $230. So another 50 cents, and then I'll look at managing it. But I did pull this up. I was looking at buying the 32-day back and rolling to the end of month, Feb 27, 60-day cycle, and just shifting it up slightly on the upside. So going to a similar 6,600 or 6,700 put, but going to the 7,200 as opposed to the 71, and just shifting it slightly more bullish into this little sell-off here. And you can pick up another almost $300 with that adjustment. If you roll to the same exact strikes and you just go 6,600, 7,100, you're picking up 350, but you're leaning a little short in that situation, which again is not something I want to do in this market. Just long term, I think we'll be up and to the right into next year as well, until something changes with implied volatility or the landscape of the markets. But yeah, I don't need to make this move just yet. I think if we get to 50% or past 50% this week or next week, I think that's when I'll make the adjustment, go into a low 50-day cycle in Feb. And I'll probably do this, just move it up 100 points on each side and still pick up a nice credit.
Market's ticking a little lower here.
Yeah.
What are they trying to do on a quiet day? Interesting.
Trying to scare us.
Yeah, trying to scare the children.
Yep. Crude. Nice move here.
Yeah.
So I have this long call contract with a call ratio on top of it.
You got the same.
Yep, you got the same thing. I think you're slightly higher, right?
Slightly higher.
So yeah, this was just a hedge. We were taking some heat on the long contract, rolled it out to the new contract, which is why the P&L open reset. But really, my basis is at 57. This will be a $200 net winner if we stay above 57 over the next couple of weeks. So looking good there. And I was looking at closing this potentially, but then I looked at the extrinsic value remaining. There's still $150 to get out of this position with the 57 shorts holding on to a lot of value. So this position I will just let go, and we'll see if we stay above 57 over the next week or so. But once this dwindles down to like 50 cents or something like that, then I'll close it. SanDisk, short iron condor, 18 days.
SanDisk.
SanDisk Corp. The old floppy disks. Short iron condor, 18 days.
These markets are a little wide.
Yeah.
$1 and change. Good
That's
Lord.
tough.
These options trade by appointment.
Yeah, this is tough just because, to Jamal's point, like this standard iron condor that you would expect to be a little more liquid is not. And even if we go to the highest open interest strikes, 280, 290, or the 270, 280, if you're just going by the numbers here, and then the 200, 190, or the 210, 200, like regardless of how you slice it, you're still looking at a $400 bid-ask spread. So I think it's tough. I think the one caveat is it's 18 days. So if you get in, you're likely holding this. I was just filled on that SPX Iron Condor. So I'll post that to the follow page, closing that position for like 70% profit. But yeah, this one, bid-ask spread's a little wide. You're going to have to hold this closer to expiration to where these become like zero bid to get rid of the issue with the bid-ask spread. But yeah, I think that I'm out on this one for that reason.
Yeah, you'll get eaten up on the way in and probably on the way out too, actually, bid-ask wise.
Yeah. Silver's been in a deficit for 5 years. Huge Chinese ETF buying, 60% above net asset value recently. We'll see.
Sure.
I mean, like silver is moving, gold's moving, but the platinum move is most interesting to me in terms of like what happened here, especially because we opened higher. Like we opened at 25.45, which was higher than the previous close on Friday. And we have dropped 400 points. So something must have happened.
Yeah, something else, man.
Huh?
Big moves, big moves.
Smack Lovin', AEM, Iron Condor.
God, I haven't looked at this name forever. I mean, the names that I'm like hearing about again with this gold and silver thing, AEM, I remember this name from so long ago. AGQ is like a 2x silver thing. That's going nuts today, of course. Like I totally forgot about AGQ. I forgot it existed. We used to trade it so heavy. It's untradeable now, honestly. But anyway, AEM.
AEM.
Iron Condor, they said? Butterfly? What?
Iron Condor. Short the Feb 155-200 strikes and get 10-point wide wings. Feb is in the earning cycle, it looks like. It looks like it's pretty undecided where it is actually. But they're pricing it in to be in this Feb 6th, Feb 20th range with a little bit of a IV spike. 42% is a jump up from the 40s you see prior. So I would expect earnings to be around here, which isn't something I love to do with Iron Condors because you're just holding risk without the decay until you actually get that announcement. But the 155-200, 10 points wide. This is going to be another liquidity issue. The 200-210, you can see the 210 is $1 wide. The 200 is 40 cents wide. And then the 145 is a little bit illiquid too, 50 cents wide and then 50 cents wide. So with all of those combined, you have a $2 wide bid-ask spread and another situation where you're going to be at the mercy of the slippage here, getting in and out. So I think this one's another pass for me just because I don't like putting Iron Condors on in earning cycles because, again, you're just holding risk without a lot of profit potential until the announcement happens. But the bid-ask spread issue here is a real thing.
The earnings cycle is an issue for sure, and the idea of like how much these things are moving right now. I mean, it is a gold name. It's probably going to move a whole lot over the next month and change. It's going to drive you nuts.
Yeah. I think, honestly, if you want to do an Iron Condor in a gold product, just go to GLD.
Yeah.
And just do it there. Like, because at least in that product, you have very liquid markets.
Yep.
And you don't have the earnings issue, even if you go to Feb. Yep. And you can get the same exposure. Like, you can do a 370, 360, 420, 430, or like whatever you want to do. Like, you can get in and have a nice narrow bid-ask spread, much more narrow than the previous products we looked at least.
Yeah, I mean, I'm looking at a Feb one right now. I just randomly throwing it together, 430, 440. I just did 369, 359, and yeah, I mean, it's better. Honestly, you just have better. I mean, again, it's gonna move. So is AEM. So, like Mikey said, this is way more liquid than AEM as GLD is.
Yeah, I think it's just it's an easier in and out at the very least. Any thoughts on TTD? It's been absolutely decimated in the past year, but seems to have found some support.
There's a dog.
Good for a short put. The trade desk. Oh, man. These are tough.
It's a dog.
Yeah.
I think it's a dog.
Yeah, these chart like there's plenty of charts that look like this year where it's like a much higher price. This was trading at 125 in the beginning of this year. Huge gap down, continuation, then a reversal gap, then a lower trend. Then you get a little euphoric, maybe things are changing, and then a massive gap down again. And it's been lower lows since that point. So if you want to take the risk, fine. But I don't love when you just there's like no positivity in this chart. You know, what was another one that looked like that? Like Lulu. Lulu's trying to come back, but like still gap down, gap down, gap down. Chipotle, I think was another one. Yeah, they're trying. It's just tough. I mean, you got to be willing to hold through the pain if this continues lower.
Pretty much. Yeah, this is kind of a dog. I don't know. Yeah, Deckers also looks the same way. I bring up Deckers, man, because I'm telling you, for whatever reason, during this Christmas holiday season, that UGG store was like the line for whatever reason. And we went to the movies on Christmas Day. Saw Marty Supreme, by the way. Great movie. You got to check it out.
Oh, I gotta
It's
see
a
that.
great movie. It's a great movie. And everybody was there in their pajamas and whatnot and like their UGG shoes. I don't know if Deckers has a turnaround story, but man, something, I tell you. Everybody's wearing Uggs these days, it feels like, or Ugg-like products.
Yeah. Ugg adjacent.
Yeah, Ugg adjacent.
Let's see. For the MES year-long trade, will you always use the end-of-month expiry? No. But yeah, I think in terms of liquidity, the end of month for MES specifically, I think you'll have much more liquidity there. I will likely try and avoid these weekly cycles. If you stick with the end of month and the quarterlies, that's just from a general perspective, they're going to act more like regular monthly cycles versus these weeklies that have a lot less activity. So I might not always stick with them, but generally speaking, I want to go to the most liquid cycles, and those are going to be the most liquid cycles. Can a broke-wing butterfly on both sides represent a synthetic bat wing? Yes. Yeah, bat wing is, from an undefined risk perspective, is just a ratio spread on both sides. So a broken-wing butterfly is nothing more than a ratio spread with defined risk wings that are further out of the money. So yeah, as long as you're routing it for a credit, both of them for a credit, then you have that middle ground where you can still keep the credit if it's a neutral move. So that's all I would be making sure we're doing there is keeping it a high probability trade by routing it for a small credit. Short put in Netflix.
At your own peril. That's of course. I mean, it's not a bad trade. Obviously, I assume they're looking in earnings cycle, right? I mean, it's the only thing. But I still have in the money at this point, damn near short puts. I have the what did we decide we're calling that thing? The bullish. Whatever. Delta, not the Delta Buster. What are we calling it?
Super Bowl?
Super Bowl, that's it, yes. I still have a Super Bowl on Netflix. So, I mean, I'm essentially already selling a short put. Of course, it's risk defined, but I don't know. This is I mean, first of all, I think it's a good trade. Despite everything I'm going to say, I think it's a good trade. But there's a lot going on here, and I don't know when it's going to lift off is the issue.
I think I figured out why Netflix sold off.
Why?
Because the Christmas Day NFL games were supposed to be an amazing slate, and only one team made the playoffs from all of those games played. So I think I figured it out.
Probably why. Yeah, you're right.
But yeah, $93. So it's much. We have a lot more we can do here because of the post split price. So I think a short put. If you go to Feb. Just keep in mind you have earnings coming up and you're going to be in the earnings cycle. But if it's just a short put, you can still, of course, make money on the delta move. You don't need the volatility crush from earnings that are January 20th after the close. But yeah, to Jamal's point, I think if you wanted to, you could do like a short put spread. So like 90-80, just as an example, and then you shift your profit potential to the upside with a call spread by going with like a 95, 100 call spread here. So this is what this would look like if we isolate it. Expiration. There you go. So this is a possibility for sure. If you just sell the put, you can still make a good amount of money. But if you want to stick to defined risk, this I think makes sense too. Selling the put to finance the call spread, you can make more than just a short put, which is trading for 350. You can make 560 if you get a move to the upside. And yeah, if you're going to play with a short put for earnings, you can do that once the earnings come. I think with that kind of strategy, I might go to the near term cycle once it comes around. So like the Jan 23, you can sell the weekly for a ton of premium relative to time. And then if you get tested to the downside, you still get to keep that premium, and then you can roll into Feb or March and pick up more. So that's kind of how I would approach that if the premium stays bid there.
That's all I'm going to say about that.
That's all I'm going to say about that. Palantir.
Old Palantir.
The old Palantir. March 195 long call, Feb 210 short.
Diag.
Okay. 15 points wide for $8. Love that. And yeah, if we go like Theo here, if we just look at the, without changing implied volatility, you can see even if you get a move over the next couple of days to 210, you can make $350. If we push this out in time, you're going to be able to make a lot more, of course. This is the middle of January. If you get the same move, no change in implied volatility, you're looking at $500-ish if you get a move to 210. So I like the low cost nature of the upside trade for sure. And you're able to reduce basis pretty well here, selling the 210 for $7, buying the 195 for 15. And you do have earnings priced into the Feb cycle, so you'll see this premium stay bid in the short Feb option, but because you're paying $8 for a 15-point wide spread, it doesn't matter if you get the rally, you'll still make a ton of money. You can close it.
Can we just point out the fact that this stock started at $75 this year? It's a trip, right? I mean, huge moves for a while there. And then honestly, over the last several weeks, it's been kind of quiet. Like, I shouldn't say quiet, but just not the same animal that it was early in the year. It's kind of wild.
Yeah.
$75 this year to $185. That's a hell of a year.
It's been wild. There's been seismic shifts in some of these stocks.
Yeah.
Like, I don't think we traded Palantir previously, like from like last year or before that.
Yeah,
At least
I remember
not as aggressively.
I remember when it was like $40-something, sometime maybe the year before, and I started looking at it, but I was like, I don't know. And then it got to $7. I was like, it kind of got interesting, and that's when I do remember starting to trade it like earlier this year. But it's just wild. I mean, man, it just seems like it's had 3 different types of trading cycles within a year's time. I mean, it's crazy.
Yeah, it's insane. And then you have the opposite side of the coin where you have these products that were at 200 and now they're at 50. So it's been wild. It's been a wild year. Question about vol expanding into earnings. So I think it's important to not get this twisted with premium expanding. Vol, the implied volatility reading is based on how much premium is left in the option relative to time. So you're always going to have a situation where, like, if you look at gold, silver, platinum, those are good examples now where, like, this thing is moving so much and there's so much premium still in these 0-day, 2-day, 4-day, 7-day cycles that there's a higher implied volatility reading, 34%, 33%, 30%, and then it trickles down to the 20s. But 34% IV doesn't mean that it has more premium than the 2-day cycle. It has way less premium than the 2-day cycle when you look at the expected move. So to put that into context for earnings, what you will see is if I sold this 85 put now for earnings at the end of January, if we come back to this put price and Netflix is sitting right here at 93, this $2 in premium is still going to decay. It'll go down to like, let's say $1.50 or $1.40 or $1.30. But because there's less time relative to the premium that still exists, you will see a higher implied volatility reading. But this is still going to decay. This option decays regardless, but it just doesn't decay as much as if earnings was not priced into this cycle. So what that creates is a situation where you're taking undefined risk, but you're not getting paid as much as if there was no earnings cycle because you have to wait for the earnings to be announced. So that's why I always say, like, I don't like selling strangles in an earnings cycle with plenty of time left because, yes, it will still decay a little bit, but I'm holding a ton of risk for a lot less profit potential. So I'd rather wait until earnings or after earnings. But yeah, if you want to sell a put pre-earnings, like, you're getting more premium to sell it now, and you will still make money if Netflix rallies. Because if you look at these options down here, these options are way less valuable than this 85. But if Netflix doesn't move, you're just holding risk for not a lot of theta decay because the implied volatility is going to stay bid until the announcement happens.
Mm-hmm.
So yeah, if you saw the put the day before earnings, that's how you can isolate getting that implied volatility crush from the announcement and not take risk until that happens. Roblox. The old Roblox.
Ye old Roblox. Wow, this stock has had a reckoning again. I didn't realize that. I think it started after earnings.
I think right up here, this peak at 150 was when all the kids were siphoning parents' credit cards to buy the Roblox bucks.
Yeah.
One of my younger brother, he actually stole my stepmom's credit card.
Really?
She marked it as fraud, and then finally realized oh, he's just hammering the Roblox bucks.
Oh my God, that's funny.
It's ridiculous.
Yeah, our youngest plays it quite a bit. He doesn't ask us for as much money as he used to, though. I don't know what it is. I don't know. I mean, he gets some every now and then. We give him some, but yeah, it's this game, dude. You can do everything in this game. I mean, it's kind of crazy. The kids love it.
Yeah. The jump puzzles and the slide puzzles, those are fun. But yeah, 80-90 Feb March diagonal on Roblox. Long March 80, short Feb 90. Yeah, I don't mind it. It's another exact same scenario where you're collecting the premium that's baked into the earnings cycle in Feb, but you can still make money on a rally because you're paying $5 for a 10-point wide diagonal spread. So yeah, I think it's fine. If you're directional without neutral risk on both sides or neutral premium on both sides, like in a strangle, you offset this whole thing we've been talking about with earnings coming up because you can make money directionally. So yeah, I think it's a cheap way to get delta in here.
Sure is. Roblox.
Any trade in NVIDIA?
It's crazy. I haven't traded NVIDIA in a while now.
I know.
I mean, this was definitely used to be one of my heavier traded names. I just haven't. It's been a lot of sideways action in these type of names that the NVIDIAs, the Palantirs of the world, the Metas, they've kind of just dead.
Yeah. 7 IV rank. So implied volatility is low. 40% in Feb, 38% in Jan. I think I can get into something like this. I'll go with a longer term diagonal spread. So long March, short Feb, I think is what I'll end up doing if it makes sense from a cost perspective, but let's see. Yeah. We could do a 10-point wide, 190, 200 for $8. Or if you want to be more bullish from a delta perspective, you could do like a 200 to 10 for $7, but you're slightly out of the money. I think I would rather just have the 10 points. 10 points of a lower requirement for NVIDIA to move to go in the money. So I think I'm just going to go with the 190, 200. We'll play for an upside move into the beginning of next year. 865 can still reduce basis, especially if they open up weekly cycles and the earnings are somewhere in this range. Because it looks like they're not really pricing in earnings in the Feb cycle. They are pricing it in the March cycle. So this might actually decay before a weekly is opened up with NVIDIA earnings, but I'm not sure when the last one was.
Yeah, I think it's usually like late in the month. So I'm thinking it's like late Feb, like maybe I guess later
Like
than
after
expiration. Yeah, like the 22nd or something. Who knows?
Let's see. Yeah, February 25th is when it's estimated. So that would be after this cycle closes. So I like this even more because I can roll into the earning cycle and pick up a lot more premium and reduce basis if it's not working out. So yeah, we'll get into it. Instantly filled. Oh God. That's really the worst. Maybe it'll be beneficial. Who knows?
We should have the research team do something on instant fills.
Yeah.
Success
You are
rate on
instantly
instant
filled.
fills.
You will lose 100% of the time. All right, so I got filled at 868. Bought the 190 March, sold the 200 Fab. We're in. This is me saving the market. Just bought a March VIX call for $1.
VIX call.
Yeah, so you're way up here.
Yeah, you gotta be way
35.
up. Jeez.
But yeah, I mean that's kind of how I would play it. If you're looking for a pop, you just need it to be a big pop. But yeah, I would temper expectations. Like you bought it for $1. If you get a move to $1.50 or $2, like that's a good move. It's a good pop, especially if you consider like when this option was as high as 220. That was November 20th. So where is November 20th in the E-minis? Right here. So that was the day where we opened at 67.58, and then we sold off to a low of 6,600, closed at 6,615. So we had a 150 point sell off on that day, and you would have doubled your money. So just a nice way to look at it. Like you can just, and I just got there by right clicking on the strike. Assuming you bought the 35, you can do whatever. Just right click on it. You can view the option in the chart and see how high it's gone in terms of value. The highest was October 29th for this option specifically, and that correlated with where? Interesting.
What's up?
The 29th was just like a little bit of sell-off. I'm not sure what may have happened there, but either way. Yeah. The most recent one, you doubled your money if you get a 100 point sell-off. So here's to hoping.
Yeah, there's nothing wrong with hope.
Yeah. Question about futures. If I'm holding a long position, when should I be looking to roll? And is there physical delivery risk?
Oh, the one, I've never traded those. I really don't know much about that one, actually. That's a newer future, I feel like. I don't know, do you know? I mean...
No, I
gotta look
doubt that this is
ounce gold
physical.
I doubt it, too.
Because the micros are all cash settled. So... 1 ounce gold futures. Let's take a look. I'll post a link in the chat to the CME page for it. You can get all the information there. But I doubt it's physically settled. It's probably cash settled.
Yeah, and I'm going to yell at you for a second. You got to know these things before you get into the trade.
Yeah.
You should know.
Tisk.
But that's what we're here for, so it's fine.
Yeah, cash settled, financially settled.
Yep, financially settled. There you go.
Trading terminates on the third last business day of the month prior to the contract month. So
they will not be shipping you 1 ounce gold.
Yeah.
Pieces.
So this is a Feb contract. So Jan is when this will fall off. But you could also look at like the G6. So what is the G6?
I like a G6. Like a G6. It's like you did it to me on purpose. You knew I was going to do that.
Like a G. What's the other one? There's the 4. Like I know my pilots. Is it? It might be the same song.
It might be.
Something. I thought it was something G4.
I can't think of it.
Know my pilots by name, like something at G. I don't know. Either way, if you're questioning like the 1 ounce G6, you can go to the gold G6 and see the options. So the options go all the way through, like we just said. It's going to expire at the end of January. So the G6 here, options go to January 27th before they turn into the actual contract itself, and then the contract expires a few days later. So basically, for your 1 ounce gold, you have to roll it before the end of January into the next cycle. But it's cash settled regardless, so you're not on the hook for anything. Do any brokers allow physical delivery? You can get physical delivery. It's just more of a headache than not. Like brokers don't want you to get delivery. No. So more often than not, they'll block it. But if you really, really, really want delivery, you can make it happen. Last question here. Looking for anything with IV and C Johnson & Johnson with a 31 IVR and earnings coming out is something to play there. 30 IV rank doesn't really mean much to me. I mean, 20% IV when you look at the raw premium that's offered is very low. So 7-point move on a $200 stock is very low for earnings. But I think for this one, it's going to be the same story. Like I'm going to go defined risk. If I'm trading it, I'm going to be long Feb or long March, and I'm going to sell the weekly against it to reduce basis with a diagonal spread or calendar spread. Like I'm not selling an iron condor here or anything like that. Like 20% IV is so low. It's the lowest of the low for an equity, and anything can happen with equities. So that's it.
That's it.
I think we're out of time. Thanks for tuning in. If you've got any further questions, you can find us on Twitter. I'm at Trader Mikey B. Jamal's at Jamal Chandler. We have plenty more content coming your way on the YouTube channel as well as tastylive.com. Check out tastytrade.com/referral. If your friend opens an account, you both get $100. So check out that landing page on pinned to the top of the YouTube chat. But yeah, Jamal and I are hosting the morning show tomorrow. So we'll be in bright and early, 7 a.m. if you want to join us there. But yeah, stay tuned the rest of the day, and we will see you tomorrow morning, 7 a.m. Peace.
Okay, cowboy, here's an earnings event. Keep an eye out for them when you open your trade. They're fast, they're loose, and they can take you for a wild ride. But that's no reason to steer clear, because you can be your own personal earnings event if you take the bull by the horns. What makes earnings events so special? Before the event, people will start guessing how the stock will move once the earnings report is released. That, in turn, makes the options IV rank higher. Like way, way higher. The nearer the event, the more the speculation, the higher the IV rank. Then right after the event, IVR goes the way of the buffalo. If you sell high premium options right before the event, when IVR is really high, you can take advantage of inflated prices and lock your profits when volatility disappears. Only if, and this is a big if, the stock doesn't move against you. If it does, well, sometimes you eat the bear and sometimes the bear eats you. Earnings events can hit you hard. They can also pay off big and fast if you play your cards right. Pretty simple.
All right. Perfect. I would like to buy Park Place.
No,
What?
there is no Park Place in this game.
Yes, there is. I'm looking at it.
No,
I
this
will
is mine.
take
It's
it.
mine. You don't get it.
Okay, alrighty.
You know what? $500. $500 to the electric company if you want to keep all of your power on all these houses and hotels. And
You can't negotiate. I landed on it. I can buy it if I want
I'm
it.
the electric company. I'm the most powerful thing here.
Excuse me, to the person who owns one property on Monopoly, this is the mayor, and I'm overturning everything, and
You're
I'm
in over
allowed
your
to
head.
buy. Excuse me?
You're in over your cute little head.
Don't patronize me.
You
This
don't
is a
come
board game.
down to where the big chimps play and expect to get a banana, sweetheart. You gotta earn it.
Okay, asshole. Give me my money back. Come on, let's keep
Whoa.
playing.
Whoa. Whoa. Asshole. No, my father was an asshole. I'm king.
You are so wrong.
I'm very right.
Did you even take a wallet? Did you just eat my piece?
You don't have a piece now.
Seriously,
The
it's a
dog is
game.
gone. The dog is gone. You have nothing. I have a car.
Are you seriously pissed off because you're losing the game?
I'm not losing. I'm winning.
You are clearly losing. Look at the board game.
Every utility, 2 of the railroads, and what do you just have? You have a bunch of hotels and houses, which in this market is ridiculous. A nice, simple house on Mediterranean Avenue, a beautiful car worth 10 times more than your dog who is gone. Got to deal with me. Come on.
Okay, I quit. If you're gonna be an asshole, I quit.
Then I win. The old bait and switch. I got you. I told you I'd never lose this game. I've always got a plan. And you fell for it. Boom! Shalaka!
Just for a minute, let's forget about your favorite stocks. Just for 1 second, let's leave specific strategies on the shelf. Let's talk about what really matters. Your portfolio. How do you build it? What should you target? How do you manage it day to day? The answers to these questions and more are inside our newest crash course. So I'll see you there.
Trade size varies between traders. In a larger sized account, a trader might trade 10 contracts per transaction. In a smaller sized account, a trader might only trade 1 contract per transaction. The term tranche allows us to quantify and size to a common denominator. 1 tranche would represent normal trading quantity. 2 tranches would represent 2 times the normal quantity, signifying a larger trade size. Of course, trade sizing is immensely important. We recommend a tranche being far less than your max exposure. Look who's back testing. tastytrade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at tastytrade.
When the market moves, traders need to move faster. tastytrade Active Trader Tool offers full depth of market visibility, one-click order entry, and instant position management so traders can react in real time. While others charge for professional tools, tastytrade provides them for free. Opportunity can move fast. Seize it with Active Trader. Try it now on tastytrade.
Clip thy waxen wings, thou economic Icarus. Discard these feathery adornments, thy flight's too vigorous. Rather, garb thyself with the soft fur of the bear, and dwell in low burrows of the valley fair. Forsake thy previous highs and perilous summit, for lo, I am short, so I must needs thee plummet. O market, I implore thee, make no high. Like some comic Fozzie, unclip thy bow tie. If thou dost tumble, I shall offer thee up a succulent hoagie. So, ye markets, remain as bearish as beloved Yogi. Follow thee the lead of Kipling's Baloo, and may the move be sweet as honey to Winnie the Pooh. With joy I watch descending chart lines straighten, run down with quickness and sweetness like Lord Walter of Peyton. Let curious traders admire thy Berenstein way, and joyfully stealing some porridge, let us now say, sweet bearish market, never would I cage her, but admire her drop like some terrestrial Ursa Major. Come down, ye markets, to this sylvan glade, and let the bears have their day at Tasty Trade.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
Tasty Trade has crypto, and you can trade with zero commissions: Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Wolf! The first half of this year's market has been giving the good guys the business.
It's certainly been back and forth for sure, Pete, and I'm getting whiplash over here.
With good mechanics, we can see Team Tasty stay strong in the second half.
Absolutely. Let's check out our starting lineup.
Dr. Jim Schultz, Central Michigan University. Number 51, because trading the Tasty Trade way, that is our minimum probability profit.
Kai Zan, University of North Carolina, Chapel Hill. Number 16, because 16 is one standard deviation on one side.
Brittany Sherrick, Bradley University. Number 15, because I like to carry a positive theta of 15 to make $15 a day. Whoop, whoop.
I like the looks of that lineup.
Well, be mechanical is always better than just trying to run plays to see what sticks, Pete.
When you got skin in the game, you stay in the game.
That's right. Now get off the couch and get into the game.
Watch Tasty Trade.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. The referral program runs through December 31st, only at Tasty Trade.
What is going on, everybody, and welcome back to Risk and Reward. Today's Tuesday. We got a day or two left in the trading year, so it's really coming down to a close here. Volatility is still volatilitying, if you will. But before we get into that, everybody, I hope you're doing well. My brother Gus, how are we doing today?
Doing good. Yeah, Errol's been confused about what day it is this week.
I have. I thought it was the 29th.
Yeah, and end of the year is sneaking up. But yes, just today and tomorrow, our final two trading days of the year. Then obviously the market closed on Thursday for New Year's Day. We had a discussion yesterday. We'd love to hear the thoughts from chat. Should the market be a half day on New Year's Eve? Let me know your thoughts. We're going to start out today with something a little unconventional. I have what was intended to be a birthday present for Errol.
Okay.
It arrived on his birthday while I was at work, and then I had to travel home that day. So I was going to transition it into a Christmas present. Obviously, Christmas is long past, so we're going to call this a New Year's gift.
What?
It's something. But have this right here for you.
What?
And I will let you
right now.
Yeah, I will let you open it, and then I have a little disclaimer for you.
Okay, cool. We'll open this together.
Yeah.
I can't even believe I'm opening something right now, bro. What? All right, let's check it out. Let's check it out. What do we got?
It could potentially be a gift to all the viewers as well.
Wait. Here you go, guys. That's all I got so far. I think it's a bike, a new bike, scooter.
It's a pony.
Razor scooter. Let's see what we got here. There's no way.
Yeah. Yeah. Show the people. Show the people what it is.
This man did not. This man did not.
Yeah, so the disclaimer is...
All right, guys.
Yeah, if you can show it first. Show it
This
first.
man got me colorblind glasses. That is actually the most fire gift.
Yeah.
And I could have ever even... Bro.
Yeah. You got your blue and black candles.
That's crazy.
I thought that this would be a good idea. The disclaimer is that these things are actually way harder to shop for than you would think.
That's exactly why I can't even believe I'm holding.
Yeah.
There's just no, bro. If I could have guessed the least likely thing, I thought would have bro, no way.
Yeah, the reviews on every single pair of these on the internet, half of the reviews say oh, they worked a little bit, and I can tell the difference between red and green, but it's not that vibrant. And then the other half of the reviews say, these are the greatest thing ever. My daughter cried. No. So we'll see. But there's a lot of red and green in this room for you to give those a try with.
That is hilarious. Now we'll try them on.
It's a silver bar. I'm not that generous.
Let's go. A silver bar taken off. All right, we got a nice little case. That's just so, bro, what? Colorblind glasses? That's fire. That is fire. All right, we got a nice little case. Got a nice little case to put it in. We're gonna go ahead and close that up, put it right over here, and pop these bad boys out. Pop these bad boys out.
If they work, you might just...
Bro, you literally...
Of course.
That's so... That is funny. That is funny. All right, let's throw these on. Take this little wrapping off here. Shining. There we go. We got the nice little frames.
Yeah.
There we go.
They look funky. They look like
snazzy.
Yeah.
Got to be looking studious with the frames on. All right.
Okay.
The colors are more vibrant.
Okay.
100%.
Can you tell the difference between reds and greens?
I can absolutely tell the difference between these reds and greens.
On this wall?
The reds are way brighter. So what it's doing right now, to give you a little bit of a insight into what I'm seeing right now, is, so being colorblind, you can see all colors, all right? Things like color deficient. You can see all colors, but they get mixed up. So depending on the hue of the color, you might think it's orange, you might think it's green. And one thing that I can tell right off the bat, just what's popping out to me on the Tasty platform, I can literally see every single number. You can see which numbers, it just emphasizes the color. So now I can really see the red, and I can really see the green.
Good.
So that's fire, bro.
You look sick. You look like a...
Thank you, bro.
Yeah, it's like a Men in Black type.
Thank you, bro. It does feel like, when I looked at myself, it does feel like a Men in Black. Will Smith, what's going on?
Yeah, so we can play around. I'll have you look at some of those dot colorblind tests out there once we're out there. But
it's the neon in here.
Yeah, that tasty sign. I was thinking about that as well.
Thank you, bro.
Of course.
Thank you so much, bro. That's so fire.
Yeah.
So fire.
Happy New Year to you too, Edward. Let's soundboard. Unboxing is a YouTube ceremony. It's true. Anyway, so yeah, that's our.
I'm so glad I finally get to try those out, bro.
Yeah, yeah, of course. But
we got a little bit of market action today.
You can tell the difference between red days and green days in the market.
Bro, it's just so funny. It was just like a shock to my nervous system.
I'm sure.
Not even joking. That's so funny. It's hilarious. Yeah, no, thank you, bro. Appreciate that. Merry Christmas. And into a new year. It's Tuesday now. We could jump right into the Tasty platform.
Let's do it.
Now, no more buying when I'm trying to sell. No more selling when I'm trying to buy. Now I have no excuses. I can't use that excuse anymore. I have no excuses now. So,
yeah, I'm waiting for you to be looking at a chart and being like,
I know, no, literally. We did a little bit today in the market. We'll get into the trading view, bro. You got me on the trading view platform here in a moment, but a little bit of NASDAQ, a little bit of the micro NASDAQ today. We'll talk about the entries and exits here in a little bit, kind of what we saw too. Market's been really choppy today, pretty just kind of trading in a range. I think we have a binary event, I think this afternoon with FOMC or something along those lines. I should have been a little bit more aware.
Yeah, I think it's just minutes.
Is it minutes today? I wish I was a little bit more aware of that earlier in the PM, because it makes a little bit more sense why the market is so choppy today. We'll get into that in a moment.
Indeed.
Netflix, we sold an out of the money put spread on Netflix. It's a $5 wide. We collected about $1.65 on that. So just under a third of the width, 52 days left to expiration. $9 on the trade so far. You know, that Warner Bros deal, just wanted to get a little bit of exposure to that over there. So that's kind of the whole thought process there, but we'll see if it pans out.
Positioned against each other. I'm still along Paramount. We got different dogs in this fight.
No, we got an Iron Condor on now.
Yeah, we do.
Oh, and let me click Netflix. Let's just kind of see what Netflix has been up to. Let's zoom out a little bit. pull this IVR down. If I can grab it.
I'm sure it's been some pretty aggressive swings here as this deal was looking final, and then hostile takeover, and then the board still votes for Netflix. It's been some swings.
Okay, there we go. It's been a little bit quiet over the last week or two. Yeah. So I guess, this premium position is working out. We squeezed out a little bit of the theta because we really haven't gone anywhere, to be honest, since we put the trade on. And then with SPY, we got that position out of the money, put spread, capitalizing on a little bit of that Santa rally into the end of the year. And I think it was, January 2nd, technically?
Yes, it's the first 2 trading days, so the second and the third, technically.
So second and the
third.
third.
End of that
There we
round.
go.
Which I'm sure that you could identify some other trend about the new year and call it some kind of New Year's rally as well, if you so chose. It's all about framing.
I got you, yeah. Plus, we got a little bit of long delta on there, but that's all that's been going on my end, honestly. Nothing too exciting, not really pedal to the metal into the last couple of trading days of the year. But with that being said, if there's anything else we can look at on the platform, we can jump to the trading view and kind of see what's been going on with some of these metals. Yeah. Even NASDAQ, and then we'll touch on some of the crypto futures
These
as
metals.
well.
I'm happy I didn't get short silver yesterday. Holy cow.
So I was just taking a look at that right before this. We can jump over to the trading view platform now, but it doesn't look like gold is following suit to silver either. When I just looked at gold, it was kind of stalling a little bit, and then I was so surprised to see that silver is on the radar again to the highs.
And platinum likewise has it's loosely following trend with silver, but I mean this move on silver is pretty much just a full engulfing at this point. I mean, we're 71.31 is what we would need for all-time highs, and we're at 70.66. So we're right there in that range on silver. And then, platinum is the other one that's kind of been moving really aggressively along with these. And it took a big dip yesterday along with silver, but it's only recovered maybe a quarter of that dip. So silver just outpacing everything like crazy. I can't believe it. I've been seeing everybody on Reddit flexing their physical silver. All these people that have been, because that's the thing is, if you're someone that's been buying metals, and especially if you've been buying silver for years and years, I can't imagine how vindicated you feel right now in the midst of this market. Although that is harder to liquidate. That was the other rabbit hole I got into on Reddit today. It's that these bullion shops are still offering $55 an ounce for silver when it should be, obviously market price is close to 80, but just insane move that we're getting out of silver here.
Yeah, I mean, that dead cat bounce, whatever we want to call it here. We can go ahead and jump over to the trading view platform, but we can also see just kind of how aggressive silver is to the upside. I mean, this thing is volatile.
Yeah, this is the most, it's so comical. I mean, that you could not get a more textbook bearish engulfing candle. Just gigantic red candle. There's the you got a little doji action on the green candle before it, giant bearish engulfing, and then silver says, I don't care. It just goes higher.
Could care less, actually.
I can't believe it. Any predictions for 2026? Metals keep running. SPX 7500. Money rotates to something like consumer discretionary or something else. The metals, I don't know that I would want to put my, eggs in the basket of the metals to continue running just because of how insane this run has been already. But also, I don't know what's going to stop it. Yeah. I'm not going to get in front of this freight train. If you made me get long or short silver right now, I think I have to get long, as crazy as that is to say, looking at this chart. SPX 7500, I think that seems reasonable. I mean, that would obviously be a really good year, but I think that seems reasonable.
I mean,
for sure.
We're ripping to the highs as we speak. I recognize the wick of the daily candle went away, so I was like, oh, are we ticking to a new all-time high as we speak? We are. We're almost at a 78 silver as we speak. So
yeah, it's insanity. And what a poetic thing that silver outperforms Bitcoin this year.
There's just no way.
Barring something insane happening tomorrow.
That was not on my list for things to happen of the year. And I mean, silver at that, let alone platinum. Gold would have been, the only reason I'm like, okay, if gold is ripping, I would think something happened to the overall market, but that's not the case either. So a lot of surprises into December.
For sure. Yeah. And this move in metals is just so crazy.
It is. We can jump over to the trading view platform here.
Yeah.
But with that being said, again, silver's looking really attractive. I can't lie. I mean, I don't know who else is looking at some of these products too. What are you guys looking at? What are you guys most attracted to right now? You like gold? You like silver? You like platinum? You kind of sitting on the sidelines right now, waiting to gain more conviction to feel comfortable enough to take a trade?
I totally did not read the room. I was about to be like, Meta. I really like Meta.
That'd have been funny though. Check it out. Let's check out Meta real quick though. What they've been up to?
It's my best performer today. They acquired some AI company I haven't heard of for $2 billion this morning. Market seems to like that. Okay. I'm deeply, some might say irresponsibly, I just like to say deeply long Meta. I have Yeah, I have 3 different verticals at staggered strikes and expirations going all the way out to December 17th of 2027. So yeah, I got plenty of meta going on.
666 though. I mean, what
I know.
are we doing here,
It's been just channeling in that range the past few days. That number's been popping up on my brokerage platform a lot. But
Meta's going to hell.
yeah, I really wanted to bring attention to this just because I can't believe how often the OpenAIs, the Metas, the Googles of the world just buy these little AI startups with 20 employees for $2 billion, $4 billion, $5 billion. It is nutty, and that. And I will say that part is like the AI sector that I think could be a bubble. I don't think AI conceptually is necessarily a bubble, but I think that like all of these companies that exist for, and I'm totally, I don't even know if everything I'm about to say applies to this company that Meta just bought this morning, but this is just my sentiment in broad strokes, is that these companies, they pop up, they have like 25 employees, they go crazy, they fundraise at like a $10 billion valuation, they exist for 8 months, and then they sell to a giant for a number that ends in billion. And it's insane. It's insane to me how this just keeps happening over and over. And I think at some point, these have to become overpays, but all this technical stuff, the back end of AI is well above my head, to be fair. So I'm not entirely sure, but market likes it. Market's happy about it.
No, yeah. I mean, we're still sitting near the highs as well. And kind of funny how you just brought up throwing out Meta. Throw out whatever you want, but sometimes I do that.
I have 1,000 shares of Meta, says Steven. Dang, Steven, that's a nice position. I mean, I think I'm thinking 850 end of 2027 is sort of my longer term goal for Meta here, but I think that's very much within reason, especially with the way that these companies can move. And, and all these companies that are, in the AI arms race, it's almost like pharmaceuticals where it just takes one big release and then you take this giant 10% gap up to a new valuation.
No, I mean, I really like that take too, because it does seem that like even with the metaverse, even though they were a little bit early, in my opinion, on their conviction in the metaverse, there's still a company that's staying really competitive and really trying to stay with the times and is so integrated into just everything that we do. So, I mean, if I'm going to have a dog in the race, I really like the sentiment that you have on Meta too. So I feel like 850 is not, I mean, that might seem a little low in a couple years.
Yeah, exactly. You just never know. Yeah. Edward said, we haven't talked copper. He said, I like some copper.
Is that the HG over there?
Yeah. I like copper. Just an opinion.
He's like, I like cobalt. The guy in the back likes cobalt.
Hey, get a load of this guy. He likes iron.
This guy's trading iron today.
I learned yesterday, by the way, sidebar, that 1 ton of coal costs $95.
Oh, right. You mentioned
I made Errol guess the cost of a ton of coal sitting at our desks yesterday. But yeah, you can just buy a ton of coal for $95. I assume it's a little more expensive than that to ship it, but I think you're under $300 out the door to get a ton of coal wherever you want.
Every kid under grade 6 right now is like, get this guy off. Get this guy off here talking about where we can find cheap gold.
It's why Santa's giving it to bad kids. It's such a cheap product. He has it in volume. Right. It's a lot of bad kids. But yeah. So anyway, if there's somebody that you don't like out there, look into sending them a ton of coal.
That's hilarious.
I think you can just do that.
That's funny.
I know you can. I mean, I guess if we're just doing annoying things like sand's probably even cheaper.
About to send a bag of coal to.
What's the cheapest thing you could possibly send a dump truck full of somewhere? Somebody in chat, let me know.
I'm about to send a bag of coal to the doorstep of Robinhood HQ. With a cherry on top.
They have an office
with a cherry on top.
Yeah, we send them a ton of coal to their loading dock. Good luck.
Merry Christmas, buddy. No, that's hilarious. Just looking at copper here too. I didn't recognize that copper was kind of following suit to a lot of these other metals too. So we got some volatility over there, getting a little bit of a bounce, just like silver is today as well.
Yeah, I really didn't either. And this is this giant gap down in copper. Why am I not remembering what triggered that? I remember that being a story. Was it when they stopped the pennies? That doesn't seem like enough.
That sounds like it could maybe add some volatility to the market. Though I haven't been paying too much attention to this market, but you're right. There was a little bit more conversations about the pennies and that being discontinued. So I'd imagine.
Yeah, Edward, if you know, feel free to share with us. I'm not sure what that gap down was. About $200 for a full truck of gravel. Okay, can you burn the coal for heat? Absolutely. Although the good coal for heat. I learned a lot about coal yesterday, and I've forgotten it all already. There's 2 types of coal, and I'm talking about the crappy coal. If you want the good coal, that's more like $180 for a ton.
Okay, that's still
real premium for the heating coal.
I mean, even the good coal, that for a ton, that still sounds like a reasonable price.
It's true. Watch 2026 coal moons. That's true. I mean, if you had a ton of coal, you really don't need a big move in the price of coal for it to I don't know. I guess that the price is denominated in the ton, so I'd take physical delivery of cannabis futures.
This,
3 tons of cardboard. Steve Martin said back in the 70s, you only had to buy 3 tons of cardboard and you only have to keep 2 tons of it at your house. Cardboard would be a good one. You could get a lot of cardboard for cheap, I bet.
Oh, that would be annoying to put away too, bro. Breaking down all the cardboard.
That's true. Yeah, get it all in like tape.
You got to break it down. Yeah.
And you got
to remove it, you got to break it down. Or cut it up, slice it up. You got to do something with it. A lot of surface area.
Yeah, but anyway, yeah, crazy move in metals. Copper, yeah, is following suit. Something that I hadn't paid a particular ton of attention to, but it just seems to be behind everybody else in terms of achieving new all-time highs because of that huge gap down that we took in mid-July.
I almost want to get short delta on it, something like gold. I mean, silver is a little bit more attractive, but
yeah, I mean,
it's just too expensive.
I've said it a bunch of times. I mean, I tried to get short silver twice over the course of this thing. I don't know if I want to do it again, but also like silver can't just go up $4 a day forever. This must be unsustainable. So, yeah, I'm not sure. I don't even know. I don't know what a fair price for silver might be right now.
I don't know, but if this thing were to recover and make new highs, I mean, that would break my brain. And I don't know. Let's take a look at NASDAQ before we do something over here. Do something in that.
Yeah, I mean, what, is silver going to pass gold? we get the great shift for all of human history. All of a sudden, we get the great shift.
Well, silver looks really attractive to get short, and some short delta looks attractive to me in my eyes. It's just this project is way too massive, and I don't want to control any of that right now. But it's like, and maybe gold is the option that we can go with since it's a little less volatile. But it's like, do we want to use some capital in gold? If silver makes new all-time highs, then maybe I can get out of this gold position if we enter it here now. But I might get a little bit of short gold just to have that ride just for a little bit. So we'll do just one contract on the micros there. Just because, again, silver, I mean, this thing can do whatever it wants to do, but because it's already ran so far to the upside, if this can cool down a little bit, maybe we cool off on gold too. I don't know. We'll pay attention to both of them.
Well, yeah, that's the thing is I feel like with how much silver is just dragging along the rest of the metals with it right now, if we just get the one like correction day in silver, which I guess you could argue that this happened yesterday and what I'm about to say didn't come to fruition. Okay, if we get the correction week in silver, I think that you would actually see more pronounced moves in the other metals because they've been trailing silver so aggressively. It's like what I always say about like MicroStrategy is fundamentally I don't agree with becoming a crypto treasury company, but MicroStrategy is essentially leveraged Bitcoin to an extent. I mean, we just straight up have leveraged Bitcoin ETFs as well now, so I guess that's neither here nor there. But yeah, MicroStrategy is basically like leverage Bitcoin. If you want to have something that is much more responsive to the way that Bitcoin moves, that can be a vehicle for it. I just don't like it as a long-term investment.
No, I hear you on that.
Because, yeah, you might as well just buy Bitcoin.
Yeah. Buy the Bitcoin.
Yeah. They need to change their ticker. If they're gonna do this whole thing where they say their name is strategy now, you got to get that M out of your ticker. That's what I say. Is STR already a ticker? STR. It's not.
STR.
STR. There's no domestic ticker STR. They are just being lazy. So somebody filed a paperwork.
It looks like Bitcoin hasn't really been going anywhere, still kind of trading within that range we've been sitting in there. So I don't know what MSTR has been up to. Take another quick peek at it, see if it's kind of following suit here. No, absolutely not. MSTR is getting absolutely crushed.
Yeah, that's what I mean. Yeah, Bitcoin.
Right.
All Bitcoin has to do is go sideways. I mean, obviously it had a run down, but it's pretty much gone sideways.
It just had to stop pumping.
Yes, it just has to stop pumping, and then MicroStrategy just rides the elevator down.
That's funny. Real quick, a little bit of the trades that we took today. Down about 60 points on the day, 125. So that's about, 62 points to be exact. Take a quick look at what went on today. You can kind of see this.
Also, I'm long MSTR right now.
Are you long MSTR right now? Hey, I'd rather be long right now than at the highs, all the way at the highs. So.
No, yeah,
I won't tell anybody.
I was deeply long IBIT, and then when it seriously started to seem like it was finding some resistance at the bottom, I was like, okay, well, this is the strategy to deploy MicroStrategy exactly how I just said, where you get a little more leverage on the upside, but the upside has to come.
We'll see
sometime.
Maybe MSTR's CEO is like, we're playing the long game, guys. Don't worry, I know what I'm doing. Anyways, today we had our value area high, we had our value area low. We took a couple shorts this morning. We got stopped out on one contract, but we still had one in there. There's quite a bit of things that we could really dive into the weeds here in terms of execution, but Not to make any excuses, but was not watching the charts here. This is when we were chatting it up and stuff like that. So
I was totally distracting.
No. We were all hanging out, but we did sell off all the way down to our value area low, and then I turned back and we ripped to the other side of the range, and I was like, dang. So, anyways, whenever we had seen that, this happened so fast. Turn back, look at the computer. We're already sitting right here, so I had to make the decision. Like, yo, this isn't good. This doesn't look good, right? I mean, we already hit our objective, so there's no reason why this has to continue to sell off. The market doesn't have to do anything. So since our average entry price was around, whoops, that thing was sensitive. Since our average entry price was around here, our stop loss was around here at the highs. Whenever we sold off, we ended up pulling it down a little bit lower. But now we got to ask, do we want to take this little profit that we have here because it's coming back on us now and we weren't able to exit down here because we could have held for lower if we flip into an imbalance. But I decided to keep the stops at the same level because I knew there was an opportunity at least for the market to reject this level again and then sell back off to our lows. But that was just a little bit of wishful thinking on my end. So that's why I made the decision to just leave the stops in at the highs. Market came back against us. And it happens. It happens like that sometimes. But at the same time, it's like always trying to look at it from a half glass full perspective. How was that go? Half glass?
Glass half.
Half glass. I didn't even realize I said half glass.
I guess
glass
it
half.
It works either way.
Half glass.
Half glass. Well,
half glass full.
Can you have half a glass?
You can have half a glass if you glass half a full.
Well, I mean, if you have half a glass, it's still just a glass.
But it's still full.
Oh, okay. So half a glass all the way full?
It depends how you look at it.
All right.
And that's the whole point of this. It's perspective is power.
All right.
Right?
Okay. I'll ponder this tonight. I'll look into the stars and think about this.
Let me know. Text me, bro. No, but just kind of thinking about it from that end, it was a little bit frustrating seeing that getting stopped out. But then it's like, all right, let me not use this to become emotional into these next trades. But we got a couple more opportunities later in the day. This is kind of more, we didn't even make it to our next level of value. That's why this looks like the market is extremely weak because although market was shifting to imbalance, I mean, we failed back into value before we could reach the next level of value. So it just lets us know the market also seems to be a little weak. Not to mention we have the Fed minutes earlier today, and it's not very rare to get choppy markets whenever there's a Fed speech later in the day or whatever it might be. You tend to get a little bit lower volatility. That's something to keep in mind. That's something I could have kept in mind as we were trading throughout today too. So a little bit of my 2 cents there. But we came back down to this level of value. It was just thinking, okay, well, we're pulling back to our level of value. We could look to see if we get any buying pressure here. We did not, so I flipped short. But you can see we cut the red trade fairly quickly. We flipped short over here, sitting in profit here. Now just really wanting that first target that we put in this morning, and we weren't able to get it. We came back up here, rejected our value area high once more. So seeing price action validate those levels, again, kind of gives you that confidence to let your trade play out a little bit more. We started to chop around, really moved to nowhere. I mean, barcode type action, as you can see right there. And then the market ended up coming back around after we took out these lows. I mean, just shy of the profit target. So, I mean, this thing did me dirty twice today, right? Sawed off down to our lows, ripped. Sawed off down to the lows, ripped twice before being able to exit this position. So that's kind of how my day went for the day. But down $125 on the day, even though we took quite a few trades, I would say the risk was managed fairly well. So I guess we'll take it and we'll try to look at it from a half glass full perspective. Lastly, was there anything else? Anything else? Market's super choppy. No, that's all we got on the day for the micro NASDAQ. So,
all right. Well, yeah, good little day. Yeah, tomorrow we'll have to dive into your trader wrap stuff you were telling me about this morning. That was all fascinating to me.
Trader wrap. Oh yes.
Yeah.
Yes.
Yeah,
Definitely.
I think that's cool stuff, and I think that's particularly enlightening for me and for everybody here who watches you trade with these strategies really consistently. I thought all those numbers were very fascinating.
Oh,
we'll have to throw some slides.
I got you. Kind of puts it into perspective.
Yeah, exactly.
There you, 100%.
Yeah, it's a great lesson that you can. You can lose more trades than you win and still be profitable if you're careful.
Yeah, and when you see that data, it gives you the confidence to take the loss. Yeah, because you see the bigger picture, half glass full, right?
Yes, half glass full.
That's the thing now.
I really liked Big Deal Donuts half glass, half full, and then the proper interpretation of that from Steven, quarter glass, which is correct. But yeah, my point was you can't have half a glass. If you cut a glass in half, it's still a glass. It's just a smaller glass.
If you cut the glass in half, it's a full glass.
Yes.
Ooh.
Half glass. Okay, so if it's a glass half full, you just cut it in half, then it's full glass or glass full.
If technically though, if you cut the glass in half, it's now full. Like legit.
Exactly.
That's just breaking the matrix.
There you go, everybody. If your glass half empty, cut the glass in half.
Now it's full.
Cut that glass in half. All right.
Anything else on your end?
No, I think that's a good closer.
That's going to be it for today, guys. Thanks for taking the time to hang out with us. Stefan, Organic Farming, big deal. Rets Media, everybody else. Couple days left into the new year, so we'll see what we got. It's going to be a slower market, a little less volatility, but we'll still be having our eyes on the market. But that's going to do it. Thanks for taking the time to hang out with us, and we'll catch you guys in the next one. Peace.
tastytrade's active trader interface makes futures markets your arena. Built for the bold, not the board. Trade CME futures with a single click. From micro contracts to major ideas. And go even further with futures options. tastytrade lays out multiple ladders and charts for total visibility. Plus, hundreds of built-in indicators for traders who want a broader view. tastytrade, pro-level tools, intuitive design, total control.
tastytrade has crypto, and you can trade with zero commissions: Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
tastytrade's Money Match event. Unlock 30 days commission-free trading. Plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new tastytrade account. Level up your trading experience with active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new tastytrade customers.
Global markets never sleep. Explore them with Forex, now available on tastytrade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on tastytrade.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with tastytrade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the tastytrade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Diversify your portfolio with stocks, options, futures, crypto, and more. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. tastytrade. Download today.
We're back. It's still Tuesday, December 30th, 2025. This is Futures Power Hour, sponsored by CME Group. I'm your host, Chris Vecchio. He's Jamal Chandler. Jamal, it's another day in the barrel for the metals.
It sure is. I'm not really that surprised, though. I kind of figured this was going to be the bounce, right? I mean, after a big down day, who wouldn't try to scoop up a little bit of silver?
A little scoopy near 70, 71. Now trading closer to 78. It's a 10.1% rally here on the screen right now. Why is that occurring after yesterday's enormous sell-off, stretching to a fresh all-time high before ultimately suffering a terrible fate? Well, not as bad as it seemed by the end of the session, Jamal. It's not just silver, though. It's a theme in the market today. If you shine it, you buy it. Gold, copper, platinum, palladium, silver, of course. They're all soaring. It's a pretty dead day in equity markets otherwise. It's not really that exciting of a day in crypto or energy or even FX. Maybe that changes with the release of the FOMC meeting minutes from earlier December today, mid-show at 2 p.m. Eastern, something for us to talk about, Jamal. But the metals, that's where all the action is, and I'm trying to figure out why. I don't think it has anything to do with the Federal Reserve itself. This is not a market that's pricing in an imminent rate cut. We've had a lot of data come out in recent weeks, Jamal. CPI, NFP, yada, yada, catching up to the lack of disclosures that we had during the government shutdown, October and part of November. 16% chance for the month of January here. So the speculative forces that are pushing around silver, treating it like a meme stock, if you take a look at SLV's volumes, has more trading volume on Friday than triple Q's. GLD, for goodness sake.
It's crazy.
This is not a speculative bubble, if that is one, being driven by speculation over Fed policy changes in the short term, Jamal. I'm curious, it feels like what the Fed is going to do or not do, maybe it's because it's the holidays. This has really fallen out of the zeitgeist over the past week or so. Do you find this to be a market that cares very much about what the Fed may do next month when it finally meets?
It certainly doesn't seem like it. I mean, bonds really haven't done a whole lot. Bond vol is the lowest that we've seen, it's in a long time. I mean, it's some historic lows almost. It certainly doesn't seem like the Fed picture is of much worry to the markets at all. And you mentioned, I mean, equity markets are fairly quiet. A lot of the big names that we've paid attention to throughout the year. I mean, you've barely heard the word Mag 7 in a while. It's just kind of the way things have been more recently, and it's been all about the metals. I love when this happens, by the way, which I know we'll delve into more later on those metals. But this picture right here, when you look at what's going on with the Fed, it's funny. We talked with Craig Bewick today from CME, and we talked about a lot of the stuff that the different tools that they have on their website. Obviously, that one being the biggest one, but I don't think I've actually been there in a while, to be honest with you, because there really haven't been much changes talked about coming down the pipeline for the Fed. It's just kind of what it's turned into. And, that's just very different. I mean, going back 3 years, that's mostly what we've looked at about what's going on with the Fed when they're planning to change rates, whether it was up or down. I wonder if that's going. I wonder if this is a tell going into 2026. As much as they talked about maybe 1 or 2 rate cuts, I wonder if this is the tell of things are going to go back to the way of, not much change is expected overall with rates.
Not much change is expected overall with rates basically until April. I mean, there's a 57% chance for March. That to me is more or less a coin flip still, and I wouldn't be penciling that in, but not be penning that in to my calendar. A lot can go right or wrong between now and then. For the Fed, given the lack of reliability in the data, I know January 9th is something that we're looking forward to. We're going to have that non-farm payrolls report next Friday. And then the following Tuesday, that 13th of January, we will get the CPI report. If we see a result cumulatively between those two releases, Jamal, that pushes the January cut odds up past 50%, I'm inclined to think it's not going to be for a good reason. Why would the Fed all of a sudden need to be perceived to, they have to cut rates immediately here? Probably going to mean a little bit more labor market weakness or another big decline in inflation, which isn't necessarily something that macro policymakers look to as a reassuring sentiment, if you will, on their screens. Inflation, you need a little bit of it, so to speak, to show that aggregate demand is staying intact. So they don't want to see that big pull off. So a sharp decline in CPI, a really bad NFP report. Yeah, we're going to get our cuts, but is it back to a world of getting cuts for potentially bad reasons? And what does that mean for asset allocation? Maybe not the most bullish of setups, therefore.
I got to say, I hope they're meaningful, honestly. I mean, the last couple of job reports and CPI reports haven't done as much to the market as they used to in recent times. So I got to say, I really do hope they're meaningful because, it's funny, we did a great segment today, and in looking at that segment, we were talking about the things that move gold, and it was CPI, it was non-farm payroll report. That hasn't happened recently, and gold has needed no help from any of those to pick a direction on which way to move. So I wonder, man, I really do. Like, what's going to happen with this NFP report? Is it going to move the markets? Is CPI going to matter as much? It doesn't seem as though these numbers that we get from the CME FedWatch tool are taking them into account as much as they did in recent times.
We turn our attention to equity markets here on this Tuesday with stocks more or less churning here. S&P is down by 0.06% on exceedingly light volume, Jamal. Our gauge has usually been north of 1 million contracts traded in ES by the time this show starts, and even a little bit more than that now that the show begins at 1:30 Eastern and not 1. We just crossed the 505,000 contracts traded today. It feels like the end of the year.
Yeah, it feels like the end of the year, big time. I think you can almost kind of book the numbers as to where they are. It's almost starting to feel like, right? I mean, we got one day before we're the end of the year, end of the quarter, which usually would mean a little bit something too. I still am holding out hope that maybe it does, but I don't know if it does, Chris. I mean, this is kind of it, 69.50 in the futures, of course, 6,900 in SPX. It's almost like you can book it now.
I need 50 more points to book some things, Jamal. That's my problem here. Do you know where the guess the market was? We got to look at the guess the market numbers for this year.
You're supposed to be. Aren't you doing the show with Tony tomorrow? I think you guys are supposed to be a part of that. What I understand.
I don't think I'm on Monday with Mike Butler for the morning show.
Well, then I guess Tony's by himself. Maybe, I don't know, but nah, he's supposed to do it tomorrow. Actually, he's supposed to do that tomorrow.
I'm at 68.50 in SPX, so it's like, okay, do I care about being right, or do I care about making the money with those 7,000 calls dinged? I care about those 7,000 calls being dinged. Like, who cares about that loser from a year ago who thought we'd be at 68.50? We have money to make, Jamal.
You said 68.50
in SPX as my year-end target.
Yeah, I mean, well, you're not that far off, honestly. I mean, hell, I'd call this a win. I mean, that's pretty close, man. It's way better than what I was. I was much lower, I think.
Well, I'm a very dumb bull, so line goes up as far as I can tell. But you know what? It's the volatility that's been making me think that. And even though the market's churning today, Jamal, we look at the VIX, 14.36. Oof, going nowhere. VIX futures at the front month, F26 just hit a new cycle low over the course of the session, and this would be a closing low for the contract. Same thing for the G26. We go out into time and we see that just not too long ago, we hit a new cycle low here. So vol is coming in. Some may say that this is typical. It's the end of the year. I went back literally within the past hour and spot checked all of the VIX and continuous VIX futures charts. This is the first December that we've had since 2020 where volatility is closing the month lower for December than where it started. I don't know if that's a good thing or a bad thing, but then again, you have volatility crashing out at the end of December 2020, and what happens after the election, Jamal? Pfizer comes out with their announcement that they have a shot for COVID. So that is, of course, a big precipitating factor for why the market started to rally in late 2020. But 2021 was a great year for markets, right? The vol collapse at the end of 2020 precedes that continued rally into 2021. 2021 does not give you a vol collapse. You don't get your Santa Claus rally. You don't get your January effect.
It was because of the new variant on COVID, right? I do remember that, 2021.
And then then Russia comes around with the Ukraine war. And okay, so maybe this is the setup that we need, that Santa Claus still has some hope. He has not appeared yet, which is unique. This is not typical, but Santa Claus has not appeared yet. And if he doesn't appear, The forward returns for the stock market in the month of January, historically, they're not great. And if you don't get a great month of January, you typically don't get good years.
That's what they
But
say.
this is going to be year 2 of a presidential election, a presidential term, if you will. It's also a midterm year. The first 6 months of those midterm years of year 2 of a president's term, they are not good for stocks. Lots of chop, lots of sideways action, lots of back and fill. You may get new highs, but then you get your 5 or 7 or 10% drawdown, and you make a run back to the highs and you get another 5 or 7% drawdown. I know we're going into the year with really low vol. I don't think we should necessarily be expecting that if history is any sort of guide right now.
Why do you think that is in these second years of presidencies? Why do you think it happens in these situations? Is it people are kind of settled in on what the politics are of the new president? I mean, do you think that's kind of what it lends to, or what?
So my view is that psychologically speaking, Congress people are running for re-election every 2 years. And so they, obviously in year 2 of their term, they're running for re-election. They're focused more on the campaigning than the legislating.
Mm-hmm.
And so in terms of a market that is trying to price in the future, you actually have a good deal of uncertainty because the future may see a shift in power in Washington that could ultimately upend and change where money goes, what companies are getting credits, export controls, tariffs, all those sorts of things. And so it leads to a bit of this haze or fog. And then, of course, you get to your November elections and you say, we're going to have a split Congress, so nothing's going to get done. It's fine. And then everyone starts to rally again. But to me, it's the psychology of, will the current power structures and fiscal policies remain in place? And you enter a small window where until you get to late summer, early fall, you can't really trust the polling on it. So it may serve as a bit of an albatross. Economically, though, I suppose the president gets his new policies implemented, right? He spends his first year hammering out his bill. We just saw it with Trump and the one big beautiful bill, as he calls it. Year 2 is when those policies are implemented. The market's trying to digest the impact of those policies. You get your 6 to 9 months go by. You see how the policies have actually worked, and you make your determination for how to move into the future. That to me it's a psychological issue. It's nothing based in evidence that there's any real decline in corporate earnings, expansion, or margin compression rates.
Right.
It's really just a story that people tell themselves, okay, let's see if this guy's going to be a lame duck for the second half of his term, or he's still going to have his current Washington setup where he can do what he wants to do. It's not groundbreaking theory here.
No, I mean, it makes sense. And I tend to reason with it, tend to make sense to me. I mean, looking at markets right now, I mean, what can you say? Things have been real quiet, as you would expect. Market structure is still intact, though. I mean, it's still intact for higher prices, it would seem. And I think that's the most important thing. It's just liquidity is dried up, so nobody's going to push it in any one direction or the other. But things are still looking good, whether you look at the ES, whether you look at NASDAQ. It's really interesting to me, though, like when you look at the pieces, we were talking about this on the morning show, the big names that we've paid attention to all year long, they all look like they're coiling and they're like a spring and they're on the launch pad.
Yes.
To move one way or the other, you would think to the upside in absence of any bad news. But a lot of these names that we pay attention to have not done a whole lot. The Apple, Microsoft, NVIDIA, of course, these are the sum of the parts for the NASDAQ, but they've just been really quiet, and it just tells you that the year is winding down.
It does tell us the year is winding down. But the NASDAQ could be winding up, if you will, at least coiling. I see the downtrend off of the October and those December swing highs coming into play here. That capped off price action after Christmas on Friday. I likewise see that on our lower term timeframes. I like to go down to the 4 Jamal. December 2nd onwards, you have this 25,650 area or so. That was support and then flips over, becomes resistance, and then has since become support again on the way back up. We've actually held it really neatly here through the past 2 holiday weeks, and it's been support again this week. So something's got to give. Whether or not that happens before the end of this year is another story. But as we head into next, you begin to put together the contours of a market that maybe this is consolidating. Maybe, just maybe, this is a triangle, Jamal. I know this is the daily chart and there's not a ton of things going on here, but bottom left to top right, a symmetrical triangle for stocks is probably going to be a continuation pattern to the upside in a low vol environment, unless something presents itself otherwise, which is why I like to enter my ridiculous analogy chart back into our zeitgeist of conversation. The S&P 500 here with the 1998 analogy overlaid in it. That's the yellow line.
Mm-hmm.
It's been following it pretty closely, which is to say that if we continue to follow this analogy pretty closely over the next few months, it does mean that we have some strength around the corner. And so a technical setup that holds, volatility staying low, and I have this story that I'm telling myself, the AI build out is much like what happened to tech stocks in the late 1990s. If we're continuing on that path, then maybe the timing of being long the S&P 500 7K calls that expire tomorrow won't work out. But looking beyond there into maybe a test of 7K early next week, that is definitely feasible and is not something that we should dismiss.
I'm just laughing at the way you say I have this story that I'm telling myself. It's pretty funny.
Yeah.
I look, if we end up having kind of this sideways chop that we talked about, which sometimes occurs in year 2 of the presidency, that will work fine. If we do have this upside move, as long as it's not too crazy, that will work out fine for me too, because I'm talking about my position, right? I'm talking about the strangle that I've talked about that I put on in M&Q, and it's going to be part of a year-long trade that I'm doing. And so currently it's short the 25,250 put and short the 27,000 call. And, for the most part, because of the way markets have operated over the last few years, save for 2022, of course, obviously we're not going to talk about 2020, but even then markets are mostly moved to the upside. So I'm going to try to have an upside bias on this, a positive delta, if you will. But, I feel like that works well, and it definitely will work well in a market that kind of moves sideways. It's one where if the premium even gets low, again, that's why I'd want to have not premium gets low, but if the volatility kind of stays low, much like we are right now, it's not going to be the sexiest trade, but it'll work, right? I mean, you do want to sell in high vol environments, but in absence of high vol environments, if you're in a big product like the S&P 500 or the NASDAQ, and then the market's not really moving a whole bunch and volatility is low, but it stays low, you could still end up winning in that situation. So that's why I like the idea of the trade. As long as we don't have any huge drawdowns, I feel good about it.
Yesterday on the show, we talked about the impact of the month of January as we look around the corner here. I saw that Ryan Detrick over at Carson Research, he's a frequent guest on CNBC, friend of the show here, likewise as well, posted this about the January barometer, and it lines up exactly with some of the stats that we were discussing.
The January effect.
Yeah. So if we have a positive January, right? What happens for the rest of the year? A positive January has produced a stronger remainder of the year, nearly 87% of the time. Okay. This is from 1950 onwards, producing a return of 12.2%. If January has a gain of more than 2 or more than 3%, similarly, the rest of the year, higher, 84, 85% of the time, around a 12% gain or so. When January is negative, right? When you have a bad January, the market only rallies about 2.1% on average, 60% of the time. So we think about the Santa Claus effect leading into, the first 5 days of January, and then you get the January effect paving the path for the rest of the year. Are they valid? Maybe. I know some people don't believe in seasonality around here. I think it's worth looking at and discussing. But that's why I care so much about what happens the next few days, because there are enough people who believe in these things. I say tell themselves these stories, Jamal, right? That it could incentivize people to trade. Oh, Santa Claus came. It's going to be a good January. I can't be late. I can't miss out. Oh, look at the stock market here. Look at that NASDAQ triangle. Oh, this thing looks like it's going to pop. I mean, you can feel the psychological puzzle pieces pulling together to tell yourself you need to be long. So we'll see how this plays out, but I think maybe we should be not so scared of our shadow. We should just continue to embrace the bull as long as vol continues to tell us that it's pointing to the downside.
And hey, like I said, as long as these charts continue to consolidate, it looks like you could possibly have some upside activity in markets trying to hit their upside targets and even go higher. So we'll see how it plays out. Right now, everything's looking just fine. It's just quiet. There's not enough volume to really get any determination.
You say just quiet. I say you're right. The ETF watch list that we have here for Futures Power Hour, we track 25 sector ETFs on the platform. 12 are in the red, 13 are in the green. It's just right down the middle.
Yeah.
Not a growth day, not a bad day, not really anything. I suppose the good news is that crypto is recovering some, although it's off its highs over the past few hours. Both Bitcoin and Ethereum here coming back in. These have been really choppy markets. Maybe it's that 4-year cycle, Jamal, right? 12 to 18 months after a halving, the market tends to peak. And the last one was in April 24. Add 18 months, that gives you to October 25. And when did Bitcoin peak? October 25. Maybe it's just all working out swimmingly. We haven't touched on the Russell here. Russell pattern looks a little bit weaker than its counterparts. And perhaps this is where we're seeing those January rate cut odds have their effect, Jamal. Even though stocks broadly in the S&P and the Nasdaq have been stable for the past week, the Russell has been eroding alongside that deterioration in those January cut odds. So the Russell really needs that cut. If you're thinking, if I'm playing stocks right now, is my trading predicated on the Fed's going to cut rates in January? You and I seem to think that maybe that's not going to happen. The Russell is likewise telling us that maybe it's not going to happen. So Russell performance this December, not one to remember, so to speak. I feel like it's had really, really awesome Decembers the past few years. And this one is just kind of petering out.
Yeah, I think you're right. For reasons, that had to do probably, like you said, more with the economy. We kind of had a little bit more of an idea of what was coming. I felt like in those previous Decembers, not so much this time around, or at least a strong opinion more than anything. Right? There was a lot more strong opinions in December about what was coming down the pipe in January, February. Not as much this time around. And I think maybe that's why we're seeing the weakness in the Russell. And I haven't made a Russell trade in some time. I mean, again, the vol has been low. I really hadn't felt like trying to chase upside in the Russell. It's been kind of quiet. But one thing I can say, like you said, even though the chart is weak, it does look good compared to previous years. I mean, the Russell had looked really ugly in previous years. We were just trying to find reasons to make a bullish trade, and we just couldn't do it. And, it's been a really good year for the Russell overall. So at least you can say that.
It's been a good year for the Russell. Hasn't been a good few weeks for me in the Russell. 2,400 was a line in the sand for me, Jamal. I don't know if you remember. I certainly do. Back in the middle of November, just to make a point here on that entry RTY. RTY, November 17th is when I decided to get long a put spread here. It's looking pretty smart for a few days. I said, I'm trading long stocks, ES, MES. I'm going to keep this on. This is obviously expiring worthless. Would I put this trade back on again? Listen, if I'm looking for some downside protection in stocks right now, the Russell's giving you an 8.9 IVR. Would a move back to 2,500 over the next 2 weeks, 3 weeks, would that be obscene? I mean, in theory, you could get long a 25-point wide put spread, right? You think the market could fall 1%? There are ways to protect you with interesting risk to reward setups. It's a little bit better than a 2-to-1 and a 37% pop. I'm not going to be trading it that way again because I don't see a technical pattern there that I particularly like. Mm-hmm. But there are ways to take advantage of the low vol if you are a little bit more cautious or hesitant about the upward trajectory in the manner that Jamal and I am in. Currently situated.
I'm not mad at the idea that you had at the time because, again, I just think if you're going to try and play something to the downside, it's better to do it when it's already weak, be honest with you. I mean, it's just harder to do it at times like this. I know the volatility is low. I know those puts, as they say, are a lot, cheaper volatility-wise right now. But, I mean, come on. You have to have a catalyst, right? There's always a catalyst. Just because it's quiet doesn't mean a catalyst is around the corner. I was going to ask you the same thing a little while ago. I mean, make a case for me to buy a VIX micro contract right now. I know VIX is 16. We got 3 weeks to go in the January VIX, but what's coming? I could make up stuff, but nothing will actually stick. You don't really know. So it's just a lot harder to bet on the end of the world when everything seems fine at the time being. It's probably better to do it when there's a lot more fear.
Probably when there's a lot more fear. Bonds, notes, bane my existence. I actually think I had a really bad year trading treasuries. I'm planning on doing my retrospective this weekend to see like where my best trades were, what type of strategies worked out well for me. I do this every single year at the end of the holiday. I want to know what I was observing because I keep a trade journal, why I went into the trade. I want to go back and match. Did this work out the way that I thought it would? And why was I losing money here? That's definitely going to be a point of for metals. It's going to be easy. Buying out of the money calls. Market goes up. Chris makes money. No analysis required. For bonds, this has been incredibly frustrating because it feels like I've been very mechanical, sticking to my methodology. I overlay my technical, my fundamental, my quantitative. I throw some potatoes in. Maybe you've got a stew going on kind of thing. And the stew has been rancid for me in the bond market. All right, I'm still sitting long my out of the money put spread here at 24 days to expiration, 112, 113. That's gone. That's going to be worth nothing. But I haven't been able to get out yet because I'm waiting for a close north of 116 here. 116 being that line in the sand that we've been talking about for several weeks, and we can't quite punch through it yet. Now, on a shorter term time frame, it certainly looks like that momentum is picking up. You could see the moving averages serving as kind of a base of support as we're trying to grind through. And if we do break through 116, it sets us up for a return up towards 118, the base of the wedge. So depending upon how we close out this year, I may be getting ready to flip over into, and this is at 24, so let's get rid of you. But at 52 days, a long 117, 119, maybe a little bit 118, 120, sizing up a 4-to-1. I'll have to take it. These haven't been working out. Bonds have been getting chopped up. Being directional has been a fruitless effort for the past several months, unless you've been really good about the timing. Just operating those 45 and 21 day out cycles have been somewhat testy. That's really all I've got, though. I have a position that's not working, and I need to flip it in some direction. If this next long trade doesn't work out, assuming we cross 116, then I just may step away for a few weeks for the month of January.
It's funny. I really didn't remember this, but and because it wasn't one of my top, but it's probably within. It wasn't one of my top 5, but I think it's within the top 10. I mean, I did pretty decent in ZB this year. I think mostly, oddly enough, from selling vol. And I kind of forgot about this. It was like this one iron condor that worked out the best, but. Yeah, to your point, directionally was hard overall. It didn't work out as well, and I think that's actually times where I lost money, and it probably could have been a better trade if I had just stuck to being, non-directional versus what I did at times, which we both did at times. We figured there was a narrative that made sense for these bonds, and then we had to be right, and so we picked those directions. And it just didn't work out, even though you had a lot of moves. You had a lot of moves in bonds this year, right? When you go back to even September,
yes,
I mean, it's weird. I don't know. It's been hard, man. And here I sit right now, directionally long and ZB, and I'm up right now. It's actually working. I should probably close it and wait for the other opportunity. And maybe that's the thing. Maybe we didn't do it enough. Maybe when we tried to be directional. Because I do remember times where I was directional and it was actually working. And I figured, okay, now it's going to start to work. And then it reversed. And I think that's maybe part of the failure. And it's funny, I've been holding on to this 115, 117 call spread. 115s are in the money. And I'm like, should I close this thing? But I haven't. So I don't know. Tell me why I shouldn't.
That's like my favorite. That's my favorite place in the world when my long strike and a call spread is in the money and my short strike is still out of the money. It's like I'm just so smart.
You got to do the Jack Nicholson on that one. Like, you know what I mean? Like, that's the time. I mean, when the long is in the money, you're like, heck yeah, this thing's about to work. Right there. It's happening for you right now. That's what it's like. This is great.
This reverse iron fly stinks, Jamal. I mean, where are we at this with this reverse iron fly? Just continuing to bleed out money here. I know there's 52 days to expiration on the follow page. I want this to get away from 112. Again, low volatility. I think the rationale at the time when we dunked into 112 was the right thing to do. Volatility goes negative. You don't really want to play for a vol compression event then because IVRs are negative. So you have to do something different. The reverse iron fly here, as explained again yesterday, short the 112, both put and call, long both the 112 call and put, short the 110, put, short the 114 call. The idea here being that just notes need to move. As long as they move, we're fine. Notes aren't really moving all that much. Vol is up a little bit here. It looked like we were breaking the local downtrend today. Not quite, although with both bonds and notes, you're getting these nice little lower tails. Not a result of any treasury auctions for what it's worth. This week, today we had a 6-week bill auction. I don't think that's anyone is looking at 6-week bill auctions to determine what they're doing in notes and bonds. We have our next 10-year auction on Monday, January 12th, and the next 30-year bond auction on Tuesday, January 13th. The next 20-year bond auction is on Wednesday, January 21st. So we are kind of free and clear for the rest of this week and next in terms of those influences. What I found to be really fascinating, I saw this stat published yesterday. I think it was Tony Nash who published it on Twitter or retweeted it. I forget. He's also a good follow. Particularly if you're interested in Asian macroeconomics, that's his wheelhouse. Foreigners purchased more U.S. Treasury debt this year than they did last year. Which, given all the narratives going around, that to me is just a really fascinating counterpoint. Given about the tariffs and everything I've said, too. Like, if you told me that foreigners would buy more treasuries in 2025 than 2024, given the fact that the dollar was going down and gold was going up, I would say no, they're selling the treasuries for precious metals. They're diversifying away from Western fiat in their FX reserves. And it's not what we saw. Not at least in that particular corner. And maybe that's the issue here, Jamal. The why I've struggled with bonds, and I have to figure this out. Maybe the regime that I've been viewing the world in that's worked out well for stocks and metals this year, maybe bonds aren't living in that world right now. Or maybe those forces that are actually pushing up stocks and metals are countervening forces for the bond market. And that's why we're getting so much churn. But bonds are definitely a place where I personally feel like I need to go back to the drawing board, because this has been a lot of chop, and I just don't like chop.
Yeah, and I also think we just missed the boat on the times where there were the really big moves. I mean, I don't remember if I had a long delta bond position in March/April. I don't think I did. Probably should have. August was another time we look at a big bar. Same thing with September. I think we just missed those moves because there were times where, again, part of this trade having long, and I don't remember if I was, had any put spreads that I was long, but I was definitely long call spreads throughout the year. Part of that trade, I think in my head, stemmed around the fact that if the market falls, I actually prefer to have what do you want, a long bond position, a long delta bond position, or do you want long VIX? Personally, I mean, unless it's catastrophic, I would rather the long bond position because usually that works, and I think it just missed some of those times.
We turn our attention again over to the manic part of the market right now. Metals mania continues. Mania, of course, has a wide variety of definitions. Excitement manifested by mental and physical hyperactivity. It also could just be mental illness, excessive desire. I don't know how else to describe the past 2 or 3 trading days in the metals here, which will just run around the horn. Silver up 9.98% right now. Your platinum's up 5.62%. Your copper here is sitting up 3.89%. Gold of the non-industrial variety is only up 0.83%. Silver yesterday, of course, was a big point of focus on the show, given our long-standing interest in it on the long side and the continued long interest on the long side. I didn't hear no bell yesterday, Jamal. We presented both the case for the bulls and the bears, where the excessive volumes that you saw in SLV, historically speaking, coincided with tops. I likewise shared the little run of stats that I produced last week when we noted that silver had finally exceeded a 40% trailing quarterly gain, which throughout history has not been a strong predictor of future returns. In fact, the 1, 3, 6, and 12-month returns for silver after such an event are uniformly negative. But we also noted yesterday that we had the rarity of a silver market that had hit a new high within the past 24 hours, a new all-time high in the past 24 hours, and had closed lower by 6% or more. That was the 7th such occurrence in history yesterday, Jamal. And when you looked at the 1 week, the 1 month, the 3-month returns for silver, uniformly they were positive to the upside. Here's the asterisk at the end of that sentence. The 3-month return for silver following a move like yesterday is typically just over 11% higher. Silver basically did that today already. So if you were placing a trade yesterday, like, I'm going to get long here because it's going to bounce, and I'm going to stay long for the next few weeks and months because this thing is going to bounce up to 11%. If history is a guide, we did the move already. It's done. So what do you do from here? Jamal, I was making the case yesterday on the show that volatility staying up, the uptrend from the late November lows being in place, this area right around 70 holding, the fact that we closed the gaps from before Christmas, right? In all the metals, we broke out higher following Christmas. Monday comes around, liquidity comes in, we close the gaps, and that's where the sell-off basically stops in copper, in silver. Couldn't be a coincidence. Maybe it was. But then the rally starts to resume again. We just deleted Friday's price action. That's all that happened. We deleted Friday. So this thing is still running now. Glad I held. Didn't hear no bell. Still don't hear no bell, Jamal. We're sitting at 56 days. We got time on our side. Staying constructive here in the short term, I think, is worthwhile. I don't think the underlying fundamental drivers of what's putting silver and gold, copper, platinum, palladium, name a metal, if it shines, you buy it. I don't think any of that is in question right now. So before I get into my diatribe about why I think this is actually all happening and where we're heading next, I have a black swan prediction. I suppose would be a gray swan prediction now next year. But I think I finally put together the pieces here, and I got to go get some tinfoil while you respond to me.
I mean, I want to know those too, because the move has been crazy. There's a lot of different theories. I really don't have one. I'm just trading the price action. To me, look, I'm not surprised that we're up today, because honestly, I thought that, this looks a lot like what we were seeing just in October, honestly. You see a strong move, little touch near term highs, that kind of weird looking, reverse candle. And then you see a little reversal, at least on a weekly pattern. And so I think it'll be interesting to see. I'd be surprised and also thrilled at the same time, because I just love seeing the mania, totally. But if this ends the week positive, I'd be surprised. And I'd be surprised if I wouldn't necessarily be surprised if it went up next week again, but I'd be surprised if this week ended up positive for silver, gold, and platinum overall. I think maybe they made their tops yesterday, but again, we'll see what happens. I mean, look, I think the best thing for people to do is I've been saying this all morning, be risk defined in however trade you want to do, whether it's to the upside, to the downside, because this could all turn at any given time, and it could keep going because it is mania. It really could keep going. We could see silver. I think if silver were to touch 100 somehow over the next couple of days by the end of the week, I think that would be absolutely wild. And I think all bets are off for sure then. Until that point, now it's just basically a momentum play, which has been pretty much most of this year. So, whichever move has coming next is anybody's guess. I got to say, I'm playing to the downside for the time being. Again, this on the short term, I'm playing for some downside to see if it kind of cooler heads prevail. And if the cooler heads do prevail, again, I think that's just a setup to go much higher in a normal fashion at that point. But it's fun. I mean, this is at least the most interesting thing to trade in the market right now. Any of these metals, like we've talked about, most of the equity stuff is pretty dead. Volatility is pretty dead, but not in here. There's a bunch of different ways to play it. I'm using SLV as of now, long a put in February, but I was able to sell some stuff in January against it yesterday. And it's nice to have two-sided action in something, whereas you're not getting that in much of anything else right now. But I want to hear these theories of what's going on, because there's all kinds of theories about what's going on with the physical, what's going on with the prices over here versus London versus China. I mean, what say you?
China is going to attack Taiwan next year. Hear me out. Starting in late October, silver prices bottom. The NASDAQ, the tech-heavy NASDAQ, the sensitive to Taiwanese semiconductor supply chain NASDAQ, peaks in late October and has not been able to recover since then. Curiously, so did bonds. Bonds peak in mid to late October as well. You know what also peaked in mid to late October, Jamal? Bitcoin. But not gold, not silver, not palladium, not platinum, not copper. We wind back the clock to February 2022. when Russia decides to invade Ukraine. And we see gold prices run up to about $2,000 an ounce. And I recall talking to reporters at the time, unless World War III is coming, gold can't really rally anymore here henceforth. We see US and European sanctions rain down on Russian assets across Europe, and hundreds of billions of dollars of Russian assets get locked away in Europe because of the war. But that doesn't necessarily provoke gold and silver prices to go up. In fact, gold prices were trading close to $1,600 an ounce by October 23 when Hamas attacks Israel and Israel begins their campaign against Hamas in Gaza. You find yourself in a world where the United States is condemning Russia for invading its neighbor while helping provide the assistance to Israel to not just go back and retaliate against Gaza, but I think many would argue at this point in time, go well beyond that. Okay. It's almost like there's a fracture in the global order of what rules apply to what actors. But you see then, starting in 2022 and 2023, what's going on. China, with its 4% of reserves in gold, starts to begin accumulation on the other side of the Russian war and Israel's attack on Gaza. I mean, really, that's when it starts to accelerate. Trump comes into office and he says that the global world order that we've entertained for these past several years, decades, is broken. The United States is fundamentally removing itself from that. And we think about all of the reserve currencies in the world right now, Jamal. It's the dollar, it's the yuan, it's the yen, the British pound, the euro. Okay. I would make a very strong argument. I have high conviction that the Japanese economy, the British economy, and the European economies are nothing in their form of fashion of what they are right now, unless the United States takes on the world reserve currency role and becomes the world's bank since 1945. Unless Japan and South Korea and the UK and Europe have the largesse of the American security umbrella, the nuclear umbrella, their economies can't develop prosperously because they haven't had to make the investments in their military over time. They've been able to, because money is fungible, put that towards infrastructure and education and healthcare. And so the very reason why these economies have even potential for being reserve-like currencies, for central banks even holding them on their balance sheets, is thanks to the United States post-World War II posture. And yet all of that is changing now. And so if you are investing at the margins, if you're allocating into reserves at the margins, and America is saying we're no longer going to be the type of backstop to Europe, to the UK, to Japan that we once were, well, who does that hurt more? We're buying everything from them. Their factories are the ones that shut down if we stop trading with them. Our dollars stop going abroad. And sure, so they may need fewer dollars, but the economic outlooks for those regions are going to be much worse off. You also can't trust the Chinese government. So if you're going to allocate away in your reserves, what are you going to go into? You got to go into gold. And this has been an argument that I've been making all year long. So where does the whole silver part of this come into? Well, if I'm China, and my belief is that the CCP only cares about one thing, it's staying in power. If China were to prosecute a war against Taiwan, which, hell, if Vladimir Putin with his PhD, his doctoral thesis is in mineral rights in the former Soviet sphere of influence in Eastern Europe, and why does he refer to Ukraine as Novorussia in all of his official communications? Because he thinks that's Russian land. If Donald Trump is trying to broker a ceasefire that gives Russia that land, if the United States is going into Venezuela and saying that's our oil that Venezuela stole from us, wouldn't China have more of a logical claim within that framework to say, no, Taiwan's ours? If Russia can say historically that Eastern Europe is theirs, and you guys can say that Monroe Doctrine, the Western Hemisphere, is yours, why can't we say that Taiwan, this little island that's 100 kilometers off our coast, why can't we say that belongs to us? If I'm China, there is a window now with which I can act, because American resources and attention are strained between Eastern Europe, the Southern Caribbean, the Middle East, where we're talking about another strike on Fordow and other Iranian nuclear installations. Now is the time to make the move. And if I'm the Chinese government, I can't allow sanctions to bear down on my currency and economy. So I need to stockpile all the things that I would need to ride out a wave of sanctions. In fact, I would need to sanction-proof my economy to do so. And I can't do that just through gold and the PBOC. I'm going to need my citizens and businesses to hoard every single piece of metal possible. If it's a hard asset, we want it. This is my grand conspiracy, Jamal, for next year. The geopolitical theater is just getting started. I find it highly coincidental that the end of October sees the beginning of a wave of pressure in treasuries and in tech stocks and in Bitcoin. And the only things that are going up are hard commodities. So my alarm bells, I talk about the NASDAQ having a short-term path higher into the start of 2026. There is that side of me that says maybe every 2 or 3% tick higher the NASDAQ, if volatility is lower, we should be looking out 90 days and getting some funky downside protection, maybe buying some deep out of the money puts, maybe looking at VXM. But I do not like what silver and gold and copper, what they're all telling me about the state of the world right now. And maybe it's because I'm seeing those drills around Taiwan and it's flagging this for me and it's putting it at the front of my mind. But as fun as this mania has been in metals, there is clearly something else going on right now that's driving this disconnect. And I don't think it's something that makes me too comfortable.
Whoa, first of all. But second of all, if it does go down that way, I think the big change that we've seen in the gold-silver ratio, which again has moved a lot to the downside, it's about 60 now. If it does go down that way, then gold is very underpriced and most people should be long it. I am. I took the idea of the trade that you presented to me, and I thought it was a good idea. I'm going to do it again. I'm short. I'm short Delta and SLV right now via the put, and I'm short a strangle. So therefore, I have a short call right now as well. But I am long a call spread that we both put on, I think, in April and GC right now, 5,000, 5,100 way upside. And my point is that if it goes down, like you said, that gold to silver ratio will flip. Why? Because history shows if you have some serious geopolitical issues, like real serious, usually that ratio is touching 100. And so therefore, gold will return. So my whole thing is I'm here for the mania. Not that I'm here for the geopolitics. I really am not. But I'm here for the mania. Whatever these metals want to do, I'm down for it because it's going to be big moves. I just hope it doesn't involve missiles or anything bad on the other end of it. I just hope it involves only metals trading. That's it. But we'll see.
I can't help but think I've seen charts of gold and silver prices during the Civil War in the United States, right? When the Union won battles, gold and silver prices would fall because the assumption would be that the Union will have to issue less debt to finance its war efforts because the war is going to end sooner. And when the Union lost battles to the Confederacy, gold and silver prices would rise because the Union would have to issue more debt in order to fund a longer war effort. So I would be very curious for gold and silver, right? If, China were to make a move on Taiwan in any significant form or fashion, if Trump says, hey, listen, China's business, just like us conducting strikes in Venezuela is our business, not theirs, what they do in their sphere of influence, gold and silver are going to get crushed. No sanctions are coming, right? There's no need to issue the debt. But if all of a sudden you see the U.S. and China, the U.S. and Japan and South Korea all girding the loins for battle, if you will, Jamal, the war machine's turning on. The deficits and the debts are going to run. Gold and silver and all the hard metals are going to be in high demand at that point in time. So it is the gray swan that I'm watching for. I think the charts, finding a story first and then trying to fit that square peg into the hole of the charts is one thing. I think the price action is telling us everything we need to know. I don't think these trades are dead by any stretch of the imagination. Holding through yesterday's drawdown was obviously very difficult to stomach. I hope some of you were able to do so as well. But nothing has changed. And these are weird conditions. All we did was delete Friday's price action. So staying long gold, staying long silver, staying long copper. Copper's looking really nice now that 575, 585, or 5758 call spread is moving into the direction that we'd like for it to. We did spend a lot of time there on the metals, which, given the action today, the lack of volume and volatility elsewhere, is probably appropriate.
It absolutely is. And the one last thing I'll say, The move in the last couple of weeks in these metals has all been in tandem. I don't think that's been really the case throughout the year. When you look back at platinum with copper, obviously copper had its own dislocation, gold, silver.
Yeah.
This recent move is actually all in tandem, and I think that's actually what makes it more interesting than most of the year.
Yeah, and people have said, like, where are the demand destruction levels? I was looking at some of the numbers yesterday. We went over A.B. Campbell's thread. He's a former Citadel Bridgewater guy who's been putting out a lot of missives on silver over the past year. I went through and ran the numbers myself to just be able to backstop and say with confidence, yeah, I've checked this out and can say that the math's out. It looks like that copper break even is going to be between $120 and $125 an ounce for silver in terms of a substitute effect. You're not going to see a crash out in terms of demand destruction across a number of industries until you get north of 130. So silver right now is just the fact that everything is going up all together. That's the most interesting thing, as you point out. We haven't had the palladium, platinum, copper, gold, silver all at the same time in these 5-10% stretches. These are price insensitive buyers in the market right now, Jamal. I mean, again, the fact that people are buying a silver in Shanghai or Dubai for $91, $90 an ounce, when they could buy the paper in the US for $72 an ounce yesterday. Physical usually wins over paper. So the oil. CIA is indeed conducting strikes on Venezuela. We said that yesterday on the show. It was confirmed last night that we did attack them last week. I suppose there is a point of correction that is warranted, however. When I heard President Trump say that Ukraine had attacked Putin's residency, I didn't realize he was simply repeating a claim made by President Putin, which upon delving into further, the Russian Defense Ministry said that they had no evidence of a report of an attack on a Putin residency. Ukraine, of course, denied it. So my mistake in repeating what the President of the United States said as truth. I guess Russia didn't even need to stage a false flag in order to get Trump to say that Russia was attacked. Like, there's just nothing in the news. There's nothing in. People were tweeting me at this yesterday during the show. Chris, where are you seeing this? Where are you seeing this? After the show, Chris, I can't find this. So I looked. No, it was a claim that Trump said that he had heard from Putin himself, and Russian news and the Russian Defense Ministry have denied that such an event occurred. Okay. Crude oil down 0.21%, volatility coming in. The Venezuela trade, is it done now, Jamal? We're doing land strikes there. We already had our run up off the lows in middle of December. Is this it?
I mean, again, it's another one you talk about the idea of the end of the world, right? I mean, it's hard because we just haven't seen that movement from oil on these geopolitical issues since June, essentially. I mean, a little bit in July, but it's been a minute. It's the only thing that's probably been a little bit more dead than oil recently is some of the tech names that we mentioned earlier, the big tech names. So I have been long from that 55 and change number, and that's what I'm sticking with right now, mostly because I still have a ratio spread as well to sort of it's a long story, but basically I got a 1x2 short upside ratio spread, 56 half, 58 half, and I got a long future from 55 and change, and so that's kind of been the play, holding on to that for now.
Very nice. We make our way through just to FX quickly. Dollar was mixed prior to the release of the FOMC meeting minutes. On the other side of them, stocks still not moving. The dollar here a touch softer, actually now stronger across the board, dare I say. Pound reversing, Canadian dollar reversing, euro, yen. Will we get yen intervention? That is the one trade that we still have working up for here, 10 DTE. Listen, it's going to go out for like, what, $30 if it's a loser. That's fine. I just don't want to be caught flat-footed. We could get out of it today right now, Jamal, at the same cost that we went into, a clean $31.90. And that's like money you carry in your pocket, not $31 in options terms. Mm-hmm. So we head into the calendar for tomorrow. Things wind down. Of course, we do have jobless claims. We will have some energy storage information. Outside of that, it is a fairly dry Wednesday as we wind down the trading month, the trading quarter, the trading year. We're going to take a look at those SPX Guess the Market numbers tomorrow on Last Call. Tony and I will be hosting that together. I'll be on with Butler in the morning next Monday for the morning show. Until then, Jamal, I will see you on, I'll see you next year.
See you next
We'll
year,
see you
buddy.
next year on Futures Power Hour. So for Jamal Chandler, I've been Chris Vecchio. Good luck trading. Stick around, though. Tasty Live still coming at you with Dr. J. Jim Schultz with From Theory to Practice up next.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. The referral program runs through December 31st, only at Tasty Trade.
Okay, cowboy, here's an earnings event. Keep an eye out for them when you open your trade. They're fast, they're loose, and they can take you for a wild ride. But that's no reason to steer clear, because you can be your own personal earnings event if you take the bull by the horns. What makes earnings events so special? Before the event, people will start guessing how the stock will move once the earnings report is released. That, in turn, makes the options IV rank higher. Like way, way higher. The nearer the event, the more the speculation, the higher the IV rank. Then right after the event, IVR goes the way of the buffalo. If you sell high premium options right before the event, when IVR is really high, you can take advantage of inflated prices and lock your profits when volatility disappears. Only if, and this is a big if, the stock doesn't move against you. If it does, well, sometimes you eat the bear and sometimes the bear eats you. Earnings events can hit you hard. They can also pay off big and fast if you play your cards right. Pretty simple.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
I'm Jim Schultz, and this is From Theory to Practice. Welcome to the show today. Welcome to the broadcast. Now, welcome to the Tuesday edition of what it is that we are trying to do. I'm glad that you guys are here. It is only because of you all that we can do what we do. So thank you guys so much. If you are watching over on the Tasty Live network, now it actually bounced on over to YouTube because you can join the conversation and join the discussion, and you can communicate with your brethren who are also watching the program. Man, you can celebrate if you are a medals bull. You can commiserate if you are indeed still a medals bear, but it will be a good time had by most. So pop into the chat, communicate with your brethren, and for no other reason, pump that engagement for the love of the algo. So Ryan, bring us into the market, bring us into the portfolio, because today we are going to shoot from strength. So I want to do it right here, right now together. We are going to look at this Starbucks position, right? We are going to go back in and we are going to dissect and examine. No, definitely not. You can examine. You could even investigate. You most certainly cannot examine, but that's what we're going to do for the next 16 to 19 minutes. So we're going to go into Starbucks. We're going to examine every single. Hey, I've got 3 small kids, man. They're examining a lot of stuff. I can assure you of that. We're going to look at and kind of break down every single transaction in this trade since we put this on. Now, I know we could go into the change. We could do it super simple. We could do all those kinds of things. But man, what would we do with our lives for the next 17 minutes? Like, you guys think this content's just going to create itself? Like that'd be 16, 17 minutes of dead air. So we're going to spend it together unpacking all there is to unpack here with this Starbucks position. We're doing it all, man. We're doing dividends. We're doing commissions and fees. Like we're going to do everything to arrive at a final basis for this trade. So, okay. The first thing I want to do, because the Starbucks price is going to be moving around quite a bit. So let's lock this down right now. Let's just call it 85.50, just to give us a nice round number to work with. I understand it's 85.44, so maybe we're 6 cents off when this whole thing is over. But let's call it 85.50 as the current price of Starbucks as we work through the math, we break out the final Jeopardy pen, and we do all there is to do with this basis. Okay, so let me delete all that. Let's go into... And oh, by the way, if you're brand new to the show, this is your first time, welcome aboard. I really have enjoyed this project because I feel like this is something that a lot of long-term investors are either doing or looking to start doing with their long-term investments. Like they want to continue to hold the shares, but they're looking for ways to kind of, trade actively around that core position, if you will. And this has been a great case study for the last year. And let's see where we're at when all the dust has indeed settled. You can see right now we have 100 shares and we have a long call, a deep in the money call that we bought as kind of a DCA, a dollar cost averaging substitute, because I didn't want to fork over the buying power to buy additional shares. So we did this guy instead. So, okay, let's go to the activity page. And I see you guys in the chat, by the way. While I'm doing all this, please, for the love of the algo, put it in there. Put examinates, put everything you can think of in the chat, because this needs to be seen and heard by more people. Okay, so let's start with, this was the original trade. I mean, here it is, man, 92.18, right? December 27th, 2024. So almost exactly 1 year ago, this was when this project began. So what we're going to do now, I've got my pen and my paper in front of me. We're going to be walking through and talking through all the different things that we've done along the way. I'm going to jot them all down, and then we're going to tally them up at the end. Old school style. We're going to pretend like it's, 2003. Maybe even 1996 for my 90s kids that might be watching the show. We've got all this technology at our fingertips with order chains and Allison chains and analysis tabs and whatever. Man, let's just grab a Final Jeopardy pen and get to work. Okay, so we bought the shares for 92.18. And then a little while later, about a month later, you can see that the premium, the short premium component part of the project began. So we sold a call against those shares for 93 cents. We bought it back for 16 cents. So this is going to be, we'll call this our first premium tranche. So this is our first premium tranche, and it looks like, if my math is correct, we picked up 77 cents. So 77 cents, boom. And the project is now underway. I hope you have your electrolytes handy, because this guy is going to be a doozy. Okay, so then on the same day, we decided to sell another call against these shares. Now, I don't have a chance to go back and see what the price of Starbucks was at that time and all those kinds of things, but you can see, actually, because these trades are so long ago, you can't see the timestamp, but I did all of these trades on the show. So if you go back into the From Theory to Practice archives on the Tasty Live Show network, and you kind of dig back into, January 21st, March 11th, etc., and so on and so forth, you will see all of these trades happening on the show. So you can see the price of Starbucks. And, just to remind us, we went through everything. We went through a huge rip higher in Starbucks, and then obviously a crash, boom, bang lower in Starbucks. So it's been a really, really nice kind of broad swath of different stock prices that we've had to contend with. But this second premium tranche, we sold it for $1.60. We bought it back for 31 cents. So again, I'm no Jacob Perlman. That looks like about $1.29. So we've got 77 cents, $1.29. Okay, and now this little collection of trades, let me grab a different color actually. Let's grab magenta. So this was our first earnings bonanza, right? This was our first little slew of earnings trades for Starbucks. Now, to be fair, I'm going to include everything. Like, we're going to include all the premium that we sold against it. We're going to include all the earnings trades that we did, even though those might not necessarily be connected to the original position. I want to be fair. I want to be fully transparent with all the things that happened in Starbucks for the last 12 calendar months. So we are going to include all of the earnings trades for better or worse. So you can see we had 3 earnings trades on for Starbucks back on April 29th of this year. So we did a long call spread, this 209 guy right here. So that's this guy right here. We did a short put, which is this guy right here. And then, of course, we did an expected move butterfly. Now, if you look at the three different components, you have to kind of find their corresponding counterpart later on, like in terms of the actual activity tab here. So this 209 call spread, this guy goes up right here to 244. So it looks like I made 35 cents on that call spread. Again, I'm no Julius Spina, so you've got to allow me a few cents around the edges. But I think that's a 35-cent profit on the call spread. Okay, what about the short put? So the short put, we sold it for $3.10. We then bought that guy back. We have to go all the way up to here. We have to go all the way up to this $1.08 debit, if I'm not mistaken, right? We sold an 80 put. You can see that right there. Right? And then we bought back that 80 put. You can see that right there. So those two guys are going to be connected. That looks like we made $2.02 on that trade. So we will write down $2.02 on the short put. Okay, beautiful. Now, what about the butterfly? It appears that we may have lit a stack of cash on fire. It's not the first time, and it certainly won't be the last. So with this butterfly, that's how you know this is authentic, by the way, right? If you are brand new to the show, I do this quite often. This is one of my most favorite activities, to light stacks of cash on fire around earnings with expected move butterflies. And so we did that right here on April 29th. We have this butterfly for $1.38. And then you see later on, this guy gets connected to this little 14 center right here. And I had to think about this as I was kind of prepping for today's show. And I'm like, oh, I think I vaguely remember kind of what happened. Most of the butterfly was worthless because we basically missed the move. But this extra call, or I shouldn't say extra, but one piece of the butterfly, the 85 call. Actually, let me grab the Glacier Free. So this 14 cents right here, that's going to be this 85 call. That's also this 85 call. That's part of the butterfly. And so because that butterfly was set to expire and I was able to, pick up 14 cents on that, the call part of the butterfly, I just decided to, the short call part of the butterfly, I decided to just close that guy down and keep my 14 cents. And so when I look at the overall butterfly, $1.38, we bought it for, we reclaimed 14 cents. So we lost $1.24. So the butterfly minus $1.24. Okay. So that is the first earnings bonanza. It will not be the last over the course of this little project. Okay, so now we've caught up to the earnings bonanza, and we left off. Let me clear all that away just to give us kind of a clean slate. So now we are right here on the timeline. So on June 12th, we decided to sell premium again. This is going to be our third tranche of premium. So we sold a call for $1.33. We bought it back for 29 cents. That looks like we made $1.04. So third premium tranche, $1.04. Okay, perfect. The fourth premium tranche is going to be the next little sequence of trades. We sold this guy for $1.90. We bought it back for 93 cents. It looks like we made about, oh wait, no, hold on. We, that's not right because that's a butterfly. Hold on. Let me scroll up on the screen. It's going to be, bear with me for 1 second. Yeah. So we sold this guy for $1.90, but this guy, let me grab a different color here. Again, I would have LMNTs handy. I would have a ghost handy. Like you need something. You might even want to go natty light ice at this point because we're only about 40% done. If I go to this guy, this is actually another butterfly that we put on for earnings. So we bought this butterfly for 93 cents. The premium that we sold just before it, so this $1.90, this guy gets connected to this 35 center right here. So you can see right here, 105 short call, 105 call bought back, right? So that's going to be your fourth premium tranche. $1.90, bought it back for 35 cents. We picked up $1.55. Now, what about this earnings butterfly? Well, if you scan the layout, what you see is no corresponding butterfly. You see no bought back butterfly. You see no profits taken on this butterfly. So what does that mean? That means it went out to pasture. What does that mean? That means it is no more, much like my guy Phillip Rivers. Like he's over and done with, and this butterfly met the same fate. And so we bought this guy for 93 cents, and we did not get anything back. So we lost 93 cents on the earnings butterfly. Okay. Now we resume our premium collection process. So this is going to be your fifth premium tranche, 85 cents. We bought it back for 56 cents. Fifth premium tranche, we made 29 cents. The sixth premium tranche, we sold it for $1. We bought it back for 31 cents. And so we made 69 cents on that guy. And then we had another earnings trade on 1029, right? You can see we did 429, we did 729, we did 1029. So if nothing else, it's quite feng shui, if I don't say so myself. But this one, we actually were able to make a few shekels on the trade. We bought the butterfly for 204. We sold it out for 231 the next day. It's not much, but hey, it's 27 cents. So we made 27 cents on that earnings butterfly. And then, of course, the last trade here is the dollar cost average substitute or synthetic that we did with the deep in the money call that we bought for 26.70. Okay. So the premium capture, so all the premium capture, everything that I just did. In fact, here, let's go back to, well, actually, no. So before we do that, let's go to the history tab. So if I go to the history tab, because I want to bring up, let's see here. I want to bring up my dividends and I want to bring up my commissions and fees. I want to bring up everything. So first and foremost, so you can see I have the date set 12/20, 2024 to present day 12/30/2025. So this is going to give me the full gamut of everything that's happened with Starbucks. Okay, well you can see commissions and fees $24. And so let's make sure we write that down because I want this to be inclusive of everything that we've done in this trade. So commissions and fees $24.26. Okay, so 24.26 commissions and fees. And we did quite a bit, right? And so again, this is a testament to we're not paying anything on the closing commissions. Like that's gone. You got a little fees in there because you still got to pay the man a little bit at the end of the day. But this is still, that's pretty good. I mean, you can be the judge of that, but I think that's pretty decent given all the activity that we had in there. So $24 commissions and fees. Let's go back though to I want to change this to the dividends. So what dividends did we collect as a long-term investor in Starbucks now? So here you go. So we picked up $61, $61, $61, and $62. So we picked up $2.45 on a per share basis. It's obviously $245, but I'm trying to convert this all to a per share basis. So we picked up $2.45. Okay. So now, if you were to, I'm not going to write it on the screen because it's just too much to scribble. And you guys, I mean, we went through every little transaction that was in the activity page. And we're already almost at the halfway mark of the show. That's crazy. I actually can't believe that we're almost done with half of the show. Let's go ahead. And so we've got the premium, all the premium capture. We've got that premium capture. We've got all the dividends. Ooh, that's a nasty looking D. Not unlike that nasty looking capture up there, but that is capture. Penmanship has never been a strong suit of mine, especially now with a mouse and a Final Jeopardy pen here live, only on the Tasty Live Network. Premium capture, dividends. We've got our commissions and fees. And then we've also got the share price. And we've got our little DCA action. Okay, so the premium capture, if you add up all of the different, premium tranche 1, premium tranche 2, including all the sacks of cash that we lit on fire for earnings, what it amounts to is plus $6.10. That's not too shabby, man. Like that's pretty solid indeed. Okay, so plus $6.10. The dividends, again, I want this all on a per share basis. So $245 would obviously be $2.45. So $2.45. My commissions and fees. So my commissions and fees were, again, $24.26. Let's just call it $25 so that I can make this a little bit easier when I go to fit this guy in on a per share basis. So that's going to be minus 25 cents per share, right? It's $25 total. There's 100 shares in the overall package. So it's minus 25 cents per share. The share price difference, again, I'm using 85.50 mainly because I already did this before the show and I don't want to change my numbers now. It looks like we bought the shares at 92.18. They're currently selling for 85.50. So that means we lost $6.68. And then for the dollar cost averaging, let me bring up my my Starbucks. I'll get this out of the way in a second. But if you look at the mark price of the call option, it's 30.72. Let's just call it 30.70 because that's going to be a lot easier to work with. Since we bought it for 26.70, it's currently marking for 30.70. That means that we were able to bring up, let me erase, hold on, let me erase that and that. That means we were able to clear $4 on the DCA. That's a plus sign, believe it or not, plus $4. Okay, so if you look at all of this together, all of that together is plus $5.62. Okay, so let's recap. This is everything. This is everything in the Starbucks project for the last 12 months. We made $5.62 on Starbucks on this position. Look at Starbucks. It is down to 85.50, 85.40, whatever. That is actually a drop. I calculated this before the show. That is a drop of 7%, 7.25%. So the stock went down by 7.25%. But using all the things at our disposal, not just short premium, although look, that was actually the biggest component, right, of the group. This had the biggest impact on our overall profitability on this trade. But using everything at our disposal, dividends, dollar cost averaging substitutes, everything that is at our disposal, we were actually able to make $5.62 on a 92.18 basis is a return of plus $6. I'm sorry, 6%, 6.1%, 6.1, 6.1. So we made 6% on a stock that went down by over 7%. And how did we do that? We did that by leaning into all the things that are available to us at our disposal. The main one being selling premium along the way. So selling premium, selling calls when the stock goes up. When the stock goes down, we didn't do anything. That's why when you look at the activity tab, you see lots of long gaps between some of the premium tranches because Starbucks was rallying. I'm sorry, Starbucks was going down. So we wanted to keep the clean delta to the upside. So that way when it rallied, we sold the calls into strength and we got rewarded for doing that. And so this is the 12-month case study in Starbucks. We took a 7% drop in the stock and we turned it into a 6% profitable trade at the end of 12 months. So hopefully that was helpful for you guys. I mean, that was something I've been wanting to do for a while. And I think it's good. You guys might even see that on YouTube here this weekend or next weekend or something. So even though you saw it live, please watch it on YouTube as well because your boy needs that watch time. So, all right, so let's take a look at the markets. And man, I see you guys, man. Look at you guys in the chat. Man, I see Sam L's in the house, James Bond in the house, Wolf in the house. Man, look at you guys. Death Sneeze in the house. Margin Walker. Man, let's go. Harsh is in the house. Man, Theta Traders here. Monco Rail in the house. Rodrigo in the house. Man, I appreciate you guys so much. I'll try to get to as many. John Covington's here. Man, I'll get to as many of you guys as I can in just a second. But some quick market commentary. Man, look at silver. Oh, it's selling off a little bit. So silver up $6 today. So, man, this is not, this is not your grandmother's silver market anymore, ladies and gentlemen. This is the real deal Holyfield. Like this thing was, if we look at a chart of silver, man, it's going to really be something. If they rugged all the longs yesterday, only to bring it right back to 80, 81 today, or like later this week after New Year's Day or whatever, man, that's going to really be pretty wild because it looked like it was going to get below 70 for sure. I mean, the low today was 70.21, and when that was happening earlier this morning, or maybe it was overnight, it looked like 68.69 was just a foregone conclusion. But that's when they ripped it right back, and yeah, man. So the Hump Brothers are happy. All the silver bugs are happy. Even got the shifties out there celebrating. Got gold up 21 points. Market's a little bit weak. The Santa rally's not exactly been that impressive. I mean, the Santa rally's obviously left a little something to be desired. But for my portfolio, we already went over the portfolio yesterday, so I'm not going to rehash all this today. And again, by the way, don't forget to be here for tomorrow's show. So tomorrow's show, you're going to see my 2025 predictions for the different indexes. And I will also give you, and how I did, of course, and then I will also give you my 2026 predictions. So it's going to be a good time. It's going to be an absolute hoot of a show. And so the only thing here that I would consider doing something with is silver because it's up $3 today. But again, this is only, we've only got a one lot on, we're down, $5 on the trade, $5.50 on the trade. The implied volatility rank in silver is still crazy high. It's 89, it's high 80s. I mean, this is when you want to be short premium, right? This is when you want to have volatility contraction working for you. And so I think we're going to sit tight. Let's sit tight, right? And so let's go ahead and let this guy ride. Again, I'm going to be out all next week, so do not expect me to trade this position at all next week. We're probably just going to let it go and let it stew, and maybe we come back and SLV is 85, 87. That's very possible, of course, but we could also come back and SLV is 55 or 57. And so it's going to give you a reason to tune in for the January 12th show if you didn't already have a reason. And I would not take it personally if you're like, yeah, I really don't have too many reasons. But maybe that gives me a half of a reason. But SLV, we're going to sit tight and do nothing just because I like the IV. And we are in February with 50-something days to go. And so let's just, we'll sit tight. Sorry, let me see, though. Where are you guys at? Man, I see you guys in the house, and I appreciate you guys. Let me try to surprise and delight somebody in the middle. Let's see. So Rodrigo Mezcal Pascal, what's going on there, my friend? Or my friends, if that's multiple people. It seems like multiple people in one single username, which of course is a power move. But Rodrigo says, do you think XSP is liquid enough for 45 DTE strangles? I did SPX Iron Condors, great liquidity and no early assignment risk. That's correct. What do you think? Yeah, a lot of traders like XSP. As a smaller version of SPX. And so, excuse me, you can see right here that this is, it's just a mini SPX. I mean, they just tell you right there, just blatantly, that this is just a mini SPX. So it's 1/10 the size of SPX. And so if I go in there, I go to XXP, and I think XSP, much like SPX, is also cash settled. And so the price is going to be very similar to SPY, but SPY is not cash settled, so there is early assignment risk. And so if that's important to you, which it is, especially for a lot of like zero DTE traders, that can be something that obviously you should factor in. I mean, you're mentioning kind of 45 DTE strangles. And so SPY would always be an option for you there, Rodrigo, given 45 days to go, because the reality is, when you're trading something with assignment risk, is there always a possibility that you are assigned? The answer is yes. It doesn't matter how far out of the money the option is, how far in the money the option is. Obviously, the probabilities shift around depending on the moneyness, where in the money options have a much greater likelihood of being assigned than out of the money options. But the likelihood is still this, or the truth is still this. If you are short an option, any option, out of the money, in the money, at the money, whatever, the likelihood or the probability that you get assigned is always above zero. It's always above zero. So you have to understand there will come times in your career, if you trade long enough, when you will come in to your portfolio the following day and you'll be like, why am I long 100 shares of SPY? Why am I short, 200 shares of Tesla or whatever? That doesn't make any sense. You were actually assigned at a time that didn't really make a lot of economic sense to the other side of the party, but people do crazy things, man. Like people do some crazy things in the market. And so, when it comes to assignment risk, it's always there. But when you're dealing with a cash settled product like SPX, and I'm pretty sure XSP is also cash settled. I don't trade it that often, so I don't have quite the the knowledge and the know-how with XSP that I do with like an SPX. But if it is cash settled, that's a really nice advantage. You don't have to worry about that. So if I were to go in here, though, you go to February with 52 days to go. And, if you look at the liquidity, you can see, just looking at, like, for example, I like to look at the at the money strikes because they kind of give you, at the money and then slightly out of the money. You can see that the markets are about 20 cents wide, right? So you're about 20 cents wide pretty consistently on both sides of the market. Maybe even up to like 25 cents or so. Or 21 cents, I should say. So you're about 20 cents wide. So the liquidity is clearly not as favorable as even SPX because that's a 10x product and you're going to see similar spreads. But if I go to SPY, so if you go to SPY, you're going to see that the markets here are very tight. So if you look at the, the out of the money options on SPY, you see, 2 cent, 3 cent, 4 cent wide markets. You look at the out of the money options on the call side, same thing, 2 cents wide, 3 cents wide, 4 cents wide. It looks like that 688 is like 7 or 8 cents wide. That's a little strange. So maybe Vinny's got that one strike on lockdown. That's Vinny Batista, by the way. Tony, that's Tony's son. He's teaching him how to make markets. And he's teaching him the Batista way, which is you go as wide as you possibly can. You go wide and you stay wide until somebody tells you otherwise. And so, yeah, I mean, SPY is clearly a lot more favorable liquidity-wise than XSP. So which should you choose? I mean, again, if you have 45 days to go, the buying power requirements are probably going to be very similar across the two because the price is almost identical. I would actually go SPY, Rodrigo. I wouldn't worry so much about the cash settled nature. Now, if you were to shift to like 0 DTE, that's a little bit different because, you like to have the optionality of taking it through expiration because, the last 10 minutes of expiration day or any day for that matter, if it's a 0 DTE world, that can be quite a mover. Like that can be really important to your strategy where like, man, I don't want to feel like I have to exit this guy with 10 minutes to go or 5 minutes to go or whatever. Like I want that last push of movement. Like I want that last little nudge for the stock to get it over the finish line or not get over the finish line, depending on which side of the fence you might be on or what have you. So if you were in a shorter term world, I would probably go XSP and just deal with the lack of liquidity. But since you kind of cited 45 days to go, I would probably go SPY, my friend. And so hopefully that helps you a little bit. So, man, I'm going to surprise and delight somebody. I'm going to do a second surprise and delight. I'm going to go to the very end, the last comment, which came in from Rex Kramer, probably thinking there was no way I was going to get to this, but that's the nature of the surprise and delight. And so Rex Kramer says, Dr. Jim, how are you feeling about Costco? I'm eating more free samples these days. Well, I appreciate you, my friend. And I'm feeling quite good about Costco, if for no other reason than I have to. Like I don't have a choice. And so, I mean, we are long Costco. We are long this call spread. Again, I'm going to sit tight and do nothing for all the reasons that we kind of went over yesterday. But, nothing says the American way. Nothing says the American dream quite like Costco. Like I can go in there and I can get free samples. I can get some pizza. I can get some corn dogs. I can probably get some pomegranate juice, right? And then, of course, what else can I do? I get some soap. I can get some toilet paper. Right. And then naturally, I can get a whole bunch of fresh Costco drip in the middle of the store. It's like, what more do you need? This is all under one roof, people. This is all in one place. And so I'm mega bullish on Costco, like mega bullish, at least for the next 17 days. And so that's how I feel about Costco there, Rex Kramer. But I appreciate you gobbling up some samples to help the cause. And so thank you, my friend. And and I did see Rodrigo says, I'm only one person, Dr. Jim. How about that? That's a powerful username, my friend. Thank you for the great answer. You are welcome. You are absolutely welcome. And all right, so let's see. Let's go all the way to the beginning and let's see where you guys are at. So Stephen Bivens in the house. What's going on there, Stephen Bivens? I appreciate you, my friend. Thank you so much. I hope you're doing well on your regular jaunts to Detroit. I think you said you go there regularly for work, if I'm not mistaken. You've been there a couple times, I think, in the last couple of months. And I connected with Stephen at the Detroit show that we had there in October. And I'm very excited, by the way, for the Tasty calendar for 2026, the roadshow calendar. We haven't had meetings about it yet. I think that's slated for the early part of next year. And then we'll have a lot more to say about that. But just keep your fingers crossed that I make the team. Like, keep your fingers crossed that I make the rotation, because that's not always the case. And so I'm just hoping that they go with the B squad again, because if they go with the B team again, then you might get to see your boy live at some shows. But if they go A plus, if they're going Mike Butler, Nick Batista, maybe get some Chris Vecchio on the road, man, I don't know that I'm going to make the cut. But we can keep our fingers crossed. Maybe they need some people to eat some innings. So Stephen Bivens says, Dr. Jim, I was just approved to trade futures options. Woohoo. I'm putting together a short list of products, and I was wondering what your recommended percentage of portfolio should be used for futures options. Okay, so this is a very good question. And the answer is actually kind of easy. I don't think that you necessarily need to have a percentage that's earmarked for futures options specifically. So you're going to have some percentage of your portfolio that's allocated for premium trades, right? Short premium, whether it's equity options or futures options. I think you put those guys in the same bucket. Like, I don't really think we need to get so granular that we're actually, kind of demarcating between equity options, and futures options. Like, it's all kind of going into the same, it's going into the same pot of jambalaya. It's like you've got a little chili powder, you've got a little cayenne pepper. It's like, are they different? Yes, technically, but are they basically the same? Of course. And so when we look at equity options and futures options, I think we look at them the same way. And so, when you're talking about, like, maybe you have part of your portfolio that's like long shares, you have part of your portfolio that's like maybe for futures, outright futures trading, like, that's a little bit different. You do want to earmark those guys differently, but I don't think you should treat this any differently than you would equity options. So, Stephen, I would view it as an extension off of, kind of what you're already doing with equity options. And I think that's great, man. Like, it's going to give you a lot of additional flexibility, especially with the indexes. I mean, with the equity indexes like MES and MNQ, or even ES and NQ, because I think if I'm not mistaken, you're trading multiple six-figure account, if I'm not mistaken. And I could be totally wrong, so don't feel the need to necessarily, confirm or deny that information publicly. I totally respect the fact that you may not want anyone to know that. But I think I remember you're trading a larger account. So whether it's MES, ES, MNQ, NQ, whatever, RTY, get a little boomer action in there with some YM, like you can do a bunch of stuff. And it's just going to open up a lot more flexibility, man. So I think that's really, really awesome. So Sam L, Doc, what are you with you? Truly blessed with knowledge, wisdom, and that criminally underappreciated B- humor. Man, I appreciate you, Sam. Appreciate you very, very much. And no, I think it's appreciated about the right level of appreciation. I think it's appreciated at about a B- level, which makes sense because you've obviously got the congruence between the appreciation and the actual product itself. And so I think we're at about the right spot. But thank you, my friend. Thank you so very much. The Preston in the house. Dr. Jim, what are your thoughts about NVIDIA? And what would you need to happen for you to take a position? Keep up the great work, my man. Man, I appreciate you there, the Preston. Man, I don't know. Let's take a look at NVIDIA. Which, by the way, if you're brand new to the show, people all over the world, like this is a global phenomenon. They don't know how to say this company right. The correct way to pronounce this company is NVIDIA. Like N-U-H, Vidya. Right? I hear NVIDIAs and all kinds of other crazy things. It is NVIDIA. Listen to Jensen Huang yourself, and you will learn the right way to say this stock. So NVIDIA, 187. Yeah, man, I don't know. I mean, it's it was up to 215. It looks like, yeah. Wow, that's nuts. I mean, I would have to be, man. Like if you really press me on this guy, I don't know, man. Maybe have to be bullish on NVIDIA. If for no other reason, then I think there's now going to be a flood of people saying it the right way. So that's probably going to be bullish for the stock. But yeah, I don't know, man. Like, obviously if it goes down more, 180, 175, then I tend to be even more bullish, kind of being a short-term contrarian in nature, especially from a short-term price movement standpoint. But yeah, I would probably lean neutral right now to maybe slightly bullish and then get more bullish if the stock goes down around, 170, 175, even if it gets down around this low right here. I mean, look at this thing, man. I mean, is this thing not plain as day? Like, even I know. Like, look, is that a double bottom? Some technician out there in the chat, help me out. Is this a double bottom? Is this a confirmed double bottom on the daily chart? Isn't the daily chart the grand poobah of all charts? Like, sure, you can do, the 15-minute chart. You can do the 4-hour chart. You can unlock the Errol Coleman settings on the 2-minute chart. But again, the grand poobah of them all is the daily chart. And this is it, man. A double bottom on the daily? Whew, man, if we go back down there, I think we go guns blazing to the long side. And so those are my thoughts on NVIDIA there, the Preston. Sam L, here's to another year of charts, trades, life lessons, and perfectly timed dad jokes. I appreciate you, my friend. What's funny about my dad jokes, because the jokes themselves aren't that funny, but the commentary around the jokes, maybe we have a chance with that guy. So I use them in the house all the time. My kids don't really appreciate them as much. I think at first, like the novelty kind of caught them by surprise, but now I just weave them into like daily conversation. Like I'll be teaching like my son about some life lesson, and then we'll weave in a dad joke, and he'll be kind of left confused, which is probably how a lot of you feel on any given day here in the show. And so I just wanted you all to know it continues. It continues in my family life. It continues there when I go inside because you just can't shut it off. You can't run from who you are at a certain point. And so James Bond, hey, Dr. Jim, way to pick the Falcons last night. That's right. I saw that they won. My boy Kirk Cousins just locked it down. Your picking football games is on par with your option trading brilliance. I don't know about that. But yeah, the Falcons, man, my Falcons looked really, really good last night. And I mean, I've been trying to tell you guys about the Falcons since Jamal Anderson. Like I've been trying to tell you guys about the Falcons since, what's his name? The Chandler guy. What's his name? Rich Chandler? Rich Gannon? No, something Chandler. Yeah, but he's my guy. Like whatever his first name is, it's something Chandler, but I can't remember. Chris Chandler? No, it is Chris Chandler. That's it. That's my guy. That's my guy. And so, where are we at? Wolf's in the house. What's up, my friend? Samuel, enjoy the well-earned vacation with your family. Come back refreshed, fully caffeinated, ready to educate us again. In 2026, P.S., dad bod calories remain undefined. That they do, my friend. That they do. The dad bod calories are actually, that's a very, very good illustration. Here's another one that could work. It's no different than a stop loss, right? You're in a position and you're like, all right, I'm taking my shot. I'm long silver, I'm short silver. It doesn't matter. I'm taking my shot. But if it gets to this level, I'm done. I'm out. I'm not letting it get beyond that level. Well, when you're in like full dad bod mode where you are just locked in and you are loaded up, you get to that level and you're like, no, we can go a little more. Like I'm pretty confident that we can push this guy just a wee little bit further. And so I would say that's exactly the spot that we find ourselves in right now. But thank you there, Sam L. James Bond, Happy New Year. Happy New Year to you too, my friend. But be sure to come back tomorrow. Come back tomorrow because, wow, it looks like the metals are selling off. We got to see what happens to the metals now tomorrow. Whew, silver now down back into the 75s. And so that's something because that guy was up into the 77 range a couple seconds ago. But wow, there's like no wick on that candle. Look at that. That's so weird. It got up to 78.065. Huh. Interesting. The move is so crazy. The candles can't even keep up. And so, wow, look at that. So this guy is selling off. Gold is selling off. So, man, I don't know what's going on out there, but somebody check on somebody out there. And so Data Trader says, Dr. Jim, have you girded your loins? I heard that's the move for 2026. No, I have not. Yeah, I don't know that I'll be doing that for 2026 either. And so I try to keep this a family show. And so we move forward swiftly onto the next question or comment. But I appreciate you there, Theta Trader. I know that you know that I do. Adam Armfield, hi, Jim. I'm bedazzled by the fixed income products screen. Perhaps you could do a quick explainer about these bond things. What sort of prices I should be shooting for et cetera, for shorter bonds like 3 months. Yeah, I think that's so the fixed income thing is, I don't know that I can do that here on the downloadable. I think that's like a my.tastytrade.com type of thing where you can see the fixed income products. That's kind of outside of my area of, it's not like if you spend some time on it, it's not too bad. But I don't know that we'll be doing too many fixed income things. What I would do here live on the show, what I would do though, Adam, is I would email support@tastytrade.com. because they can send you like screenshots and they can send you like explainers and explanations of what's going on. Like if you're looking to buy like short-term paper, which that is how you buy short-term paper, or at least one of the ways you can buy short-term paper. You can also do BILs and SGovs and things like that. But if you want to buy like the straight paper, like the straight US Treasury, that would be the way that you would do that. And so I would reach out to support@tastytrade.com because I don't know if that's something I'll be doing here live on this show. But I don't want to totally leave you hanging. And I know that they'll take good care of you in terms of explaining anything that you might need explained. But let's see. Theta Trader. Also, let's wean you off that terrible Starbucks. I can't do it, man. Maritally, I can't do it. Take up tea. Hot brown water is trendy. Yes, my wife is on to tea now. So my wife is like way into some tea. And so she's doing the chamomiles and like the, what's the other one? Not green tea. Like she's way beyond green tea. It's chamomile. And then what was the other one? I can't think of it. I can't keep up, man. Like it changes. It changes with the wind. Like I'll go in there and it's like, it's all organic. It's all gluten-free. It's all this, that, and the other thing. I'll go in there the next day and we're like, yeah, we just got to make sure it's actually really, really highly processed, gluten, like really highly processed, but also like super fresh and like ready to go. And I'm like, man, I can't keep up. Like I just can't do it. And so I've surrendered. And so, Sam L, the algo is watching. Yes, this is educational. There you go. I appreciate you, my friend. Death Sneeze in the house. What's going on there, Death Sneeze? I appreciate you. Sergio Lambrico. I think I just usually call you Sergio, and I should get back to that because that's a tricky one, live. Greetings, Dr. Jim. What's going on there, Sergio? Trader Nate, what's up there, my friend? Sam L, the comment is 100% organic, grass-fed, algo approved. Yes, my friend. It most certainly is. Margin Walker, hey, Doc, here we are again. Let's go get it, man. Let's do it. Let's 100% do it. And so, let's see. Harsha, Dr. Jim, since iron condors move slow, is there any advantage in selling shorter duration, like 2 weeks out, and manage at 1 week? So this is a very good question. Yes, iron condors do move kind of slow, surprisingly slow if you're not kind of ready for this. And I think it's one of those things that does surprise a lot of new traders if they're not quite ready for it. And so this is one of the reasons why I don't personally love iron condors too much. And you don't see me doing them too often on the program. I will weave them in from time to time because I still think it can be a useful and worthwhile strategy, but it's not my go-to. It's not going to be in my top 5. But when it comes to how do we combat the slowness of the strategy, could we potentially get in at 2 weeks and get out at 1 week? So I really like the way that you're thinking about this. And I really like the way that you're kind of critically processing, okay, this is the gotcha. How do I maybe bring a gimme alongside this gotcha that can help to kind of circumvent, the original gotcha? That would sort of work to combat the original gotcha being the slowness of the strategy. But the problem is you now introduce a secondary gotcha. And it's this. When you sell an iron condor with only 2 weeks to go, the reality is you're not going to be able to collect nearly as much as you could if you sold it at 45 days to go. And so the problem is now you're not getting enough premium. Like here, I can even show you. Oh, I can't because I'm like out of time. Wow, that's crazy. Man, it's so fast. But man, that Starbucks deal, that ate up like the whole show, but I'm glad we finally did it. So now it's out there, it's on paper. But the problem, Harsha, is 45 days is still going to be a better option, I think, for most people. Maybe 35, but I wouldn't go 2 weeks. Maybe toy around with like a 40 or 35 to speed it up a little bit, but you don't want to go too quick or too close to expiration because you're going to miss out on all the premium. But I got to go. I got to run and get you guys to Tim. I appreciate you guys. I appreciate you guys so much. Thank you guys for being here and being a part of the show. If I can ever help you guys in any way, please shoot me an email. I'm Jay Schultz at tastylive.com, or we can connect on Twitter. I'm at JSchultzF3. I would love to hear from you guys on there as well. But stay tuned. We do have Tim Knight coming up next with Trading the Charts. In the meantime, guys, trade them small, trade them heavy, and stay generous. We'll see you guys tomorrow.
Tasty Trade's Money Match event. Unlock 30 days commission-free trading. Plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new Tasty Trade account. Level up your trading experience with Active Trader Mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new Tasty Trade customers.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
Hello, everybody. Well, we've got about 7 hours left of trading this year. And today I would like to characterize it in the following fashion, because from Thanksgiving until just a couple of days ago, there was an increasing amount of media attention on precious metals. And I'm sure that those that weren't in them kept eyeing with envy, increasing envy, as they just went up and up and up and sort of kicking themselves about not being in them. And when we had the big plunge on Sunday/Monday, a portion of those people be like, now's my chance. I'm going to get in. And let me be really clear. Those of you who watch me regularly or read Slope know this anyway, but to be very, very clear, I think precious metals have a great 2026 ahead. I think we're going to have tons of lifetime highs next year. But the idea that one day of selling suddenly makes everything a great bargain again is ridiculous. And I think that those who were just sweating to get back in are going to get stung and are already getting stung because silver, for example, had a big bounce today because it was cheap after the sell-off, and it's I don't think after one day the lows are in, right? I do have a pretty clear idea in my head about when I think prices will be good again, particularly with palladium, and I've written about that. But it ain't now. So that just as yesterday, the precious metal sell-off was in the background and informed equities motion. Same thing today, because precious metals did have a recovery of varying sizes, and as I said, with silver particularly large. But it's not, one day is not going to do it. Okay, so having said that, let's thumb through some charts together as we approach the end of the year. This is the spider. Same old, same old. We had on Friday, was it Friday? It's tough with these holidays to know what date I'm talking about, but 3 trading days ago, we had a lifetime high. We had this bullish breakout, and that flopped yesterday. We had a failed bullish breakout, and it is still quite failed today. Nothing that's happened today is undone yesterday at all. In a way, it's kind of affirmed it because we've just been kind of hanging out this little bitty doji here, very narrow trading range, very low volume, just kind of like, now what? The cubes, come on cubes, you can do it. They're down a little bit, and same idea. Although, as I mentioned yesterday, weaker than the spider because the most recent high was lower than the lifetime high, and it got very close to the gap but didn't close it. So the gap held, and then we fell again, pushed higher once more. On Friday or whenever it was, we had another lower high, and we weakened away from that yesterday, and we just begun hanging out here today. Tiny bit of more selling. And the small caps, represented by the ETF IWM, are also quite weak. As we zoom in on this was the peak. They slumped, they tried to recover, and they peaked last week, lower high, and then weaker. Take note, every single day, here's a low, lower low, lower low, lower low, lower low, lower low. Do you sense a trend here? So the selling's continuing on that. And tomorrow will be a little peculiar because maybe there'll be some tax loss selling. It'll get a little weird. End of years and beginnings of years have a little bit of a twang to them because of things not specific to the market in general. One item, and I still have 30 shorts, one item that I added to the pile today was China, FXI. And the pattern's not quite complete on this, but it's working on it. Let's just expand this a bit. It's basically that kind of range. It's a right triangle top. And I sold into strength today. And if we can get below yesterday's low, that would definitely complete that pattern. So into FXI now. So let's turn our attention to gold and other precious metals because it's kind of the driving psychological factor in the background right now because it's the most active. I mean, equities are very tiny ranges, very low volume. 2025 is kind of done with that stuff. Even today's Fed minutes, everybody just shrugged their shoulders. But precious metals are on the move. And so as we look at gold here, we can see here again the nice cup with handle pattern, the burst higher, the very dramatic reversal that transpired on Sunday night / all day yesterday. And there's been an attempt to recover today. As you can see, it is undone just a sliver of the damage. So yes, we're up almost $20, almost 0.5%, but it's just like a Band-Aid. More importantly, the failed bullish breakout is still very much failed. In fact, it's kind of interesting. We've spent the entire day almost below this level. And so what's going to happen, I think, is that this clear uptrend is going to get damaged, distorted, disappointing, whatever D word you want to use. And it's going to take some number of weeks, I think, for people to be like, forget it. And so for the shorter term traders on this, they'll get kind of disgusted with a whole lot and just lose interest. And paradoxically, that's typically when things are actually good priced and ready to rock again. Here's GLD, and the ETF is up a mere 0.27%. And from a charting perspective, just picture perfect. This was the breakout level. We gapped down hard yesterday, and today's extremely similar in terms of where the open was. And so, birds of a feather. So nothing's changed. There's been nothing transformative. What's been particularly odd is how exceptionally strong silver has been. This is not a pattern you see very often. I know Steve Nissan and candlesticks pretty well, but I can't recall what this creature is. But there's some name for this. But this is really fascinating because we had a strong up day here. We had a massive reversal here. I think I read it was the biggest in 5 years. And then another reversal here. So we're seeing a lot of strength right now. But I think it's kind of a siren song. It's very seductive. And I don't think it's going to yield good things for those buying into silver at these elevated levels. I think it's going to get beaten down a lot more than this before a real bottom is in place. Likewise, the ETF SLV, and I show them side by side just because the ETFs have a much shorter period in which they trade, so it's a lot more gappy. But it's quite interesting because we are basically in the same zone here today that we were at lifetime highs. But I think they're in for a surprise. I can't say it enough times. I am a precious metals bull, okay? But one day is not going to make a bargain. Palladium, which I'm way more interested in than any of this other stuff, is continuing to fall. It opened strong, and we've got a bearish engulfing pattern here. So we are, as far as how far this is going to fall, I have ideas on that too. But we will see in terms of this pattern, which I've just completely wrecked, if that's going to provide support or not. Something like that area seems to me a sensible place, but it has to be seen also with respect to gold and silver. Because palladium is a kind of a creature unto itself. It's very thinly traded. And something I've never traded before and don't intend to, but kind of tends to trade side by side, is platinum. And this was actually up for the day. But here again, I think it's got lots of downside prospectively before things really settle down. As far as the miners themselves go, this is the gold miners GDX. This is still bullishly configured. There's nothing really wrecked here. Even with yesterday's hard sell-off, it actually held at support. If it breaks below this level, if it gets below yesterday's low, then you've got a bit of a mess there for the bulls. But strangely, it's actually held it so nicely. It's up 1.3% at the moment. And my own participation in this is simply my XME short. It's also up, but only modestly, 0.21%. And I think that if you see gold miners weaken, you'll see XME really weaken. The long-term prospect for XME is much, much weaker than GDX. GDX should outperform XME for years, I think. Okay, so let's get off of precious here for a bit. I'll just share a few particularly interesting short positions today. Here's Accenture, ACN. Not exactly a thrilling creature here. It has a very small range, but long-term, I think this has a very interesting downside potential. And I would be happy to hold on to this for months if necessary, as long as it doesn't violate any stop loss to the upside. BRKR, which is Bruker Corporation, also an interesting critter here. This one's down today a bit more than 2%. And once again, this is beneath this massive years and years of overhead supply. So I think this is a good long-term hold on the short side. Owl Capital, OWL, Blue Owl. This one down a bit more than 1%. And you can see the fantastic head and shoulders top on this one. And listen, if next year's about one thing, it's just one thing and one thing only. Is this AI thing real? Does it, ROI? Do businesses say, yes, this is working, and we're going to keep throwing money at it? Because I've read and I believe that if there is a whoops moment with AI, if there's an inflection point where people just like throw their arms up, it's depression time, because the economy is absolutely dependent upon this AI promise coming true. What else? And you know what? I want to focus on 5 particular ones real swiftly here that I don't just have short positions on, I have puts on. So I have particular strong beliefs in these 5. Make sure I've got 5 here. Yeah. The first one is ALB. And we're down on this one today. I think all 5 of my underlying equities upon which I own puts are down today. So that's nice. So here's ALB, slipping a bit more than 1%. And once again, the patterns that were beneath on this some years ago, but I've always believed charts have a long memory. Another one is ANET, Arista Networks. This one down today, not quite 1%. And again, these 5 here that I'm showing are the 5 that I've puts on. So the next one is DoorDash, DASH. This one's down about 0.75% today. Here's one everybody knows. Not very exciting, but I like it on as a short play, is General Motors, GM. And it had been for days just doing absolutely nothing. Today, we're finally getting a nice reversal on that. And so that's a step in the right direction. And the last of these is a real high flyer, Western Digital, WDC, which is down quite nicely today, 2.1%, slipping lower like so. And so that, and you can see this has been at the end of an extraordinary multi-100% bull run. So I think we're kind of starting to curl lower on this one. So just to wrap up with a couple of last charts on a more positive note, and I don't own this yet, but I want to. Rivian, R-I-V-N. I haven't talked about this in a little while. I had a good 2025 with Rivian. I'm out of it completely now, but I want to get back in. And I'm thinking that somewhere around 18-ish might be a good opportunity to get back into this. So I'm keeping a close eye on that for a long position. And the other one I have no position in, but it always demands close attention, is NVIDIA. And in this instance, my view is that we do have prospectively a topping pattern on this, crudely defined by what I've drawn right here. And the line in the sand, if I can just rough this out real quick, is something along like so at this peak. If we stay below that level, and more importantly, if we break below this range that I've drawn here, this could be a very important reversal top for the semiconductor sector and tech stocks in general. We're still in the thick of it right now, but that's the pattern to watch. Okay, that is the penultimate show for the year. I will see you tomorrow. We'll wrap up 2025 together. And thanks for coming by. Good night.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're #1 for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Tasty Trade's Money Match event. Unlock 30 days commission-free trading. Plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new Tasty Trade account. Level up your trading experience with active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new Tasty Trade customers.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. The referral program runs through December 31st, only at Tasty Trade.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with tastytrade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the tastytrade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
tastytrade's active trader interface makes futures markets your arena. Built for the bold, not the board. Trade CME futures with a single click. From micro contracts to major ideas. And go even further with futures options. tastytrade lays out multiple ladders and charts for total visibility. Plus, hundreds of built-in indicators for traders who want a broader view. tastytrade, pro-level tools, intuitive design, total control.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on tastytrade. Genius loves company.
Touch me, hold me, love me, know me. I like how you do it. You're helping me through it. Baby, your love is too good. You knew what you did when you planned it. You scammed it, making right off like a bandit. I know what I know, it's time that I go, 'cause baby, your love is too good. Baby, your love is too good. Ring the alarm, hey, ring the alarm, boys. Turn up the charm. Listen up, y'all. Get out the damn stall. It's the last call. Hey, the last call. The last call. The last call.
Hello, everybody. Welcome to Last Call with Liz and Jenny. If you didn't get enough of us an hour this morning, 30 minutes today, and 3 hours tomorrow, we'll be back in 2026.
Yeah, right. We'll be back in 2026. Okay, so this is Last Call. We have a handful of things to take a look at. We will be on tomorrow morning, and tomorrow is Wednesday, so we'll be doing What's Your Assumption? Ryan, if you could please pull up the art card, we'll show everyone where to send their assumptions or how to get their assumptions in. It's going to be the two of us on, so you might get a slightly different trades than you'd get from the boys.
You will, we've done this before. You'll get a little bit different. Just keep in mind it's us doing it. So make sure you've got liquid products and we'll keep it light and fun.
And okay, here it is, tastylive.com/assumption. Send them in. We'll take all products, all kinds. I know Liz said liquid products, and yes, we want liquid products. But any ideas or assumptions, we'll try to find a trade.
To your point, we don't care. Send them to us.
Hey, you know what? I love getting things that I've never looked at before. Like this morning on Twitter, we received something from Arun. And
ASAT.
Is that what it was? ASAT?
It's either ASAT or ASTS. ASTS.
ASTS, yes, Space Mobile, lots of premium in ASTS. So, I'd like getting ideas of things that I haven't looked at. I have my own kind of universe of products that I'm used to looking at. ASTS was not on that list, so thanks for sending that.
You know what's so funny is, speaking of like universe of products, the one universe thing, things sometimes they get added and they stay for life. Like OKLO, if you would have asked me this time last year, I didn't have OKLO.
No. I mean, that was like I think we got into it in March.
Yeah, I think you're right.
Just like, I mean, there were a lot. Look at all the new ones this year. We had CoreWeave and.
But I don't have CoreWeave. I traded CoreWeave, but it's not in my core position. The one thing that like I've been into and out of that I still have is OKLO, and I think us too.
We barely had it this year. We barely were in and out of it. Like us, but we were in CoreWeave quite a bit because they had really nice margin. We weren't in OKLO too much in this account because the margin in there was not good.
Yeah, because they didn't give us the good margin there. I get it.
But CoreWeave, taking a look at it, we've been into and out of this, and I think we got in with a buffer and got out on the up day. Maybe we should take a look at getting back in.
Yeah, let's take a look. I'm in.
Okay. So now Feb is going through earnings, but let's just see. Here's a put for.
Yeah, but even if it's going through earnings, we've never really been selling strangles. We would do a Jade Lizard, you just do a put. It's still pretty good buying power.
I mean, you look at this return on capital, the 55 put, which is $20 below, we'd get long CoreWeave at around 52 and a half, is only using $550. So we're using $550 to make 230. That's a 50% return on capital. If we don't keep the whole 230 and keep half of that, it's still a 25% return on capital.
Hey, that's not bad. Can you walk me down memory lane about the chart?
The chart? Yeah, 55 is probably IPO price. Here IPO'd around first day, right? No, let me go back. Here, IPO low of 37, high of 42. And that was like its first month. Now, could it go back there? Sure. And if we sell that 55 put, our risk is getting long 100 shares at 52 and a half.
Yes, agreed.
Mm-hmm. Or we could play the game that some people play of like close losing naked options at 2 times loss. Like you can do that if you want to.
We could totally do that Totally do that. Oh my gosh. Remember how we said we'll take any product?
Yes.
I'm only chuckling because somebody's like, RSX? Question marks? I was like, no.
Yeah. Okay. Every year I say I want to get rid of it.
That was funny.
Okay. You want to know something? Like JCPenney, I've had plenty of products go to zero or nothing.
And they go away.
But JCPenney, there was like an ad during a football game, I think, for JCPenney. I was like, what the is going on? JCP. I know it like went to like a 4 symbol pink sheets type of thing, but now they're back? Now they're having commercials?
Wait, but there's no symbol. I can't see the top symbols right now.
Okay, so I don't even know where it is anymore. I think it's like maybe on the.
And then your little spirit, every time that resurrects itself occasionally as well. It's just like I'll hear a news story about Spirit Airlines. It's like we might be back, and I was like, oh, good God.
And I think that switched to like Save Q, but again, probably something like on the pink sheets somewhere, or the what? Like I don't know why we say pink sheets, but. Why do we say pink sheets, Liz?
I don't know, but it just reminds me of Greece when they're racing for the pinks, for the slips of paper that own the car. Pink sheets are things that it is true that they'd be trading on the pink sheets. It was a real thing. I don't know if it still exists if they're trading on the pink sheets.
Yeah, but if you think about like this is the year end. If we want to talk about just this year, or if we want to talk about history, the things I've gotten in that have gone to zero: Walter Energy, Spirit Airlines, JCPenney,
Cliffs Natural Resources,
RSX. 6 things at least that we've gotten in that have gone to like the pink sheets or nowhere.
Yes.
Oh, Smile Direct Club.
Oh, that's still on there. That's SDCCQ.
Oh, here it is. Here it is.
Yeah, I mean, don't you laugh, but we still got that one right there too.
Oh my goodness. Okay, so what say you on these core wave quotes?
Do it. I say do it. Do it. Do it. Do it.
All right, going through earnings, we don't care. Because I wouldn't sell strangle through earnings or an iron condor through earnings, but directional trade, sure, we get a pop up, we can get out.
True. Certified Badass Option Trader. And I don't know if anybody knows the origin of Certified Badass. We had a friend who we called the Certified Badass.
Yeah.
Jokingly. And then we used to joke around with each other saying Certified Badass Options Trader. And then someone made us these cards.
Okay, so she was very intelligent. She is very intelligent. Went to University of Illinois. She was a commercial appraiser. She's a wonderful friend, but she would often say, I don't know if you remember this, Liz, but she would do something, and then she would say, "Ain't I a badass?"
I remember that. Yes.
So somehow it got leveled up to certified badass, and we made the our business cards certified badass option traders.
No, didn't John Sinnott make these for us?
Okay, maybe he's made them the first time, and then I keep producing them.
Oh, you're the reproducer.
I've got boxes. I've got like business card boxes. You open these up. Yeah.
Your name's not even on those. She's got business cards. They're like, don't you want to put your name and your phone number? And they're like, nope, just certified badass option trader.
I meet someone, they ask for a business card. They get this. It doesn't even say my name.
That's how we roll over here.
So funny. Okay. All right. I sold the put in CoreWeave. Do you want to push that out to the follow page?
I would be honored.
Thank you.
There we go.
What else? Don't we have? I believe we might have something else to pull up besides the art card for what's your assumption. And I think it might be like,
oh, the guess the market. Guess the market is going to be tomorrow. I think they're going to reveal the results.
Okay, here we go. Oh, look at where everyone's guesses fall.
I don't remember where my guess was. I know I was bullish, and I think I was pretty bullish.
I think I was like 6,800.
Look, yes. Okay. There you go. Jenny, you're 5,800.
5,800?
No, I'm sorry. We're Q4. Jenny's 6,500. You're pretty good.
What were you?
6,317.
Okay, who's the highest on our board of
Katie and Mike. That's why they have the little stars right there.
And where are they?
69, Mike. Very funny. And then Katie is 6,888.
Nice. Katie might be the winner. Or no, we're trading 69. And is this ES or SPX?
It is SPX.
Okay, so you take a look at SPX now, and we are at 69.04. So I would say Katie's the winner without going over. Closest.
Price is Right style. It's the closest to without going over. I mean, 68.50. Chris Vecchio is pretty close too.
Ooh, he is. And who would have thought? Well, I was going to say, like, if I have the chart just like from here, from April on, you wouldn't think we're going from 4,800 to almost 7,000.
I mean, I thought I was bullish at 6,300.
Yeah, but you go back to January, you go back to the beginning of the year, and January 2nd, we were at almost 6,000. So we weren't that bullish. It wasn't that bullish then. But we had that huge fall in February and March. Yeah. February, March. And honestly, it was, I'll take you a walk down memory lane. We were killing it.
Not killing it.
And then this is where it went really awry. So at this point in time, we said, we'll be happy if we can, scratch this year. And we've done it and then some. You've got to be happy with yourself, Liz. I know we don't have as much money as we had on October 30th.
But you would think we would.
But you would think we would, but we don't. But I'm not going to complain because we dug ourselves out of a tremendous hole.
That's that's what trading's all about, right? Getting in, getting out of a hole. And that's just it. If anybody tells you, look how much money I make consistently all day, every day. No, that's not true.
That's not true. And here's something that TP sent in cherry picks today for people who think they're going to time the market, are going to try to time the market. Here we have a chart of being long SPY all the way back from 2005 to 2025, and this orange is if you removed the 10 best days.
All the way to 2005. That is crazy. Look how underperforming you are if you remove 10 days.
Well, compared to the 10 best days.
Compared to leaving it in. Yeah, with all the days in, being like always in, or removing the 10 best days.
So removing the 10 best days, what a difference this chart looks like by removing the 10 best days. And who can really pick the 10 best days? So I think the point of this is you can't time the market. You can't say like, oh, we're at the top, I'm going to take it out and I'll wait for a down move to get back in. And on a down move, I'll get in now because I think it's the bottom. And I think if you're a buy and hold, you just stay in.
And I got to tell you, I really do like these cherry picks. TP's doing a killer job at them. I like the stuff that he's producing. And this is pretty interesting because you and I say all the time, you can't time the market. We say you can't time the market, but we have no proof. Here you go.
Yes, it's funny looking at this chart because he went back so far, and I like that he did this on my first road show, our first year on the road. I did a whole piece on when my son was born in 2004. I took a break. I left the trading floor, and in 2004, I just put the money into a fund, and I was like, "This isn't a fund. I'm not really doing anything. I'm." Miss stay-at-home mom, and I came from the trading floor, and I didn't even know I could be a retail trader, right?
Yeah.
And in 2011, we started Tasty, and I had less money in there in 2011 than I had when I put it in 2004. And so then I was like, whoa, this is a huge,
eye opener
and huge advocate for becoming a retail trader and being an active investor. And that, it didn't change that much until we got to this kind of crazy period here. And it's just been nuts.
Till about, 2020 is where it really rose. But it has been rising steadily from 10 to 18. 2010 to 18.
I mean, here we had the top of 2008, and then you had that crash here, and it took until 2014 to get back to where we were in 2008. And honestly, you look at, okay, so it's kind of nuts. You look at the fees some people pay. I was helping my in-laws and looking at their stuff, and they had some money in the fees that they were paying. Like they were like, where it is, why aren't we making as much money as we thought? Or why isn't this money lasting us as long as we thought? Because they were getting charged with so many fees. That's why I kind of took over and I'm just replicating it without fees. You've got to really outperform to cover the fees some of these places charge you. That's why it's so good to learn how to do it yourself.
It is. It really is. And it's not that hard. The other thing that TP has talked about too is if you're just selling puts, if you know how we always say with the Wheel of Fortune, you want to get in with selling a put, then, and we talk about the wheel just because it's easier with people if they own the stock to understand you sell a call against it and let it get called away. But if you just start with a put, I mean, he did a study one time about just selling puts and where you would be versus versus just buying and holding.
And honestly, buying and holding outperformed in like the times we've been in
the times from 2020. Yeah.
But if you go back in time, and this goes all the way up to 2005, so from 2020 to 2025, we have been in this crazy rally. There's no reason we might not get back to this where it's not moving and you need options to really be making money.
I didn't know it did this.
Did you see my arrow? Oh no, you don't.
Oh, we can't see any arrow. I was like, is she playing machine gun? What is happening?
the grind from 2005 to 2000. Like there's plenty of time and years in the chart where there's just a grind, and if you're not doing something, you're not making much money.
Yeah, no, I'm picking up what you're putting down.
Because how long is it going to last that we're going to have a rally like we had in the last 5 years?
But we don't know, and I think that's the point. Like we don't know. No one knows.
how high our PE ratio is going to get.
When you talk to me about PE ratios, it goes in one ear and out the other.
So it's just like we can't sustain this kind of rally year after year after year after year.
But we've sustained it for 5 years.
Yeah.
Yeah.
Yeah. But I'm going to call 2026 more of a slow grind, and when premium selling will work like a charm. I think 2018 was one of the best years for just selling strangles, if I recall.
I mean, when you look at that, it would have been great to sell strangles from 2005 to 2020.
You say that, but we've had years where the calls were where the market was going through the calls.
We've had lots of years where the market goes through the calls, but if you take a look at this chart, that's what it looks like. But I think the IV was so low. Let's look where implied volatility was in 2018. Because that's when we were going through VIX that in single digits. Sometimes.
I don't know, but I do remember like 2018 was the year of IWM strangles for me. I think that was the winner. 2 IWM strangles.
Well, that's good.
I don't know, but wait, who knows what the year's going to bring? What do you think 2026 is going to bring?
I think it's going to be another up year.
Okay, so you want to look at the VIX.
Here's what I think. I think 2026 is going to be an up year, and 2027 is going to be the down year. I think we got one more year. One more year.
All right, so I mean, VIX, you're right.
I mean, I'm kidding. Like, I have zero idea, and nobody really knows anything.
No, because what did we say? What have we learned? Like year after year after year after year, what do we learn that we don't know, right? That we don't know where the market's going. Here's 2018. It was low most of the year. You see, we've got like in the teens, 14.
Yeah, 12, and then go to 2017. 2017 was the worst. It's the worst. It's in the sevens.
Yeah, this was rough. This was every single show we did a calendar.
Yes.
All right. So speaking of trades, let's put something on. We had this request come in on Twitter that asked, can you explain the IBIT trade a little more? We're going to put on another one in another product, and just to walk through like our thought process behind the trade.
Yeah. Awesome. Let's do it.
Okay.
If we're going to put it in, we've got a couple minutes.
Okay, so I was looking in IBIT. We do it weekly. So I was trying to find something where we could get that dollar, the full dollar, in a weekly, and have very defined risk on the put spread. So I found Starbucks,
and I understand the request, because what they're looking at is why we're putting it in the way that we're putting it in. So it's a jade lizard, but it's almost put in differently.
Yeah, and I guess so. Like in Starbucks, I could go to a jade lizard and say, there's a jade lizard. There's a jade lizard, but it's using $1,648, and so I guess
No, you could do this backwards. I mean, I think you can.
The whole IBIT started with, we wanted to just sell puts, but the puts were using so much buying power. We wanted to get like $1 on the put, but they were using so much buying power. And in order to still get $1.
So remove the put the call spread in and buy something. Let's see what you can do. Let's literally just follow the mechanics that we do in IBIT in the 10-day.
Okay. So we sell a call spread and we need at least like 20 cents.
No, 16 cents is fine, because we're doing it just to release it. So take it up to 88.89, just because I want to show how we actually do this. 88.89. So we get 16 cents. Now go buy something for 16 cents. Go buy 79.
So yeah, we're only selling a call spread to give us money to buy something. So correct. I can probably buy that 80 for close to 16 cents mid-market here.
Sure. I mean, I don't care if you
So there we go. So I'm using, most of the time I would say, like, I'm not going to sell a dollar-wide call spread for 16 cents, but we're using it to just buy a put to release capital. The only reason.
And the reason I don't mind capping it at 88.89, I'm not trying to say it can go up or we're going to collect over or anything of that amount, is it's 10 days. So, and then if you're going to, then you go in and you sell the 85 put for $1.10.
You get your dollar. You want $1? We want $1. We get our dollar. Here we get the dollar for the put, but instead of using $1,600 on the trade, we're using $384.
And if it meanders up, we are going to put a GTC in to take 50% off of this. I don't mind this taking in this little bit when you're not using $1,500, and it's 10 days.
It's just a short trade. It's just a short trade. And our goal is to every week churn out like $50, $50, $50, $50. And if we have a loser,
then we're long Starbucks.
Now, if I wanted less than $384 in risk, I could bring that call spread down.
No.
And bring this put down.
No. No, just go with our IBIT rules. Like the IBIT rules, it's exactly what we've been doing in the 10-day. Because you're using, it's a different rule because sometimes you don't want 30 cents for that put, but you don't want less than 30 cents for the call spread, but you're using that 88, 89 to buy something.
But so moving it down and collecting more on the call spread, let me bring that put up. And then it took our risk from 400 to 277.
Sure, ship this.
And actually, I could even bring it up again and still get over $1 and take our risk down to 190. I like the idea of risking very little. We talk about how many wins does it take to make up a loss. If we can get our risk very low, then it doesn't take many wins to make up a loss.
So this is saying it's going to stay between 85 and 84 and 87.
And if it meanders up, well, this is what's been happening in IBIT. If it meanders up, we'll take, 30, 40, $50 out of it.
Press send. Or hit review and send, because then we can put a trade in.
And then we're going to put in a GTC right away to take 50%.
Yeah, just replace that.
And as long as we're getting over $1. Okay. And our IBIT trade is that tight too. You can make it much wider if you go further out in time. It's just they're very tight when we're looking at a weekly trade.
That's why they're so tight, because it's only 10 days. We're not saying it's for life. We're saying it's for the next 10 days.
So IBIT, we're at the 50, 52.5, 53. And we have a little more risk to the downside because our puts, it looks wider because it looks wider because these are half point wide strikes. And I think that's why.
It's not, it looks very similar to IBIT.
Yeah. The only reason it just, the IBIT strikes look wider because you have 50-cent wide strikes. You've got twice as many strikes in there.
True.
Okay, so I'm going to put in a 50% GTC. These weeklies, the dailies, the weeklies, they've made us impatient. So we can grind out $50 here, $50 here, $50 here a week. It's not bad.
It's not, but it's not bad. You're being proactive and you understand your risk. Your risk is mitigated.
Right. Yeah. Our risk was very little, very little.
I mean, can we go to, the biggest movers of the day again today were the metals. So silver is up almost a percentage. It was down. What is this?
I will post it. You know what? This popped up in my memories today. I don't know why, but it did. I don't know why. When we were in Toronto, it looks like summer because people are in short sleeves, but it popped up on my phone in a little photo montage. And I thought I would share it with you, Liz.
2024. It says it right there. July 2024.
July 2024.
That's
Toronto.
awesome.
I know. Look at that crowd. Look at that good looking crowd.
Yes. And then we went out for lunch afterwards, remember? With everybody.
Yeah.
It was so fun.
So fun. Okay. And Ajit came in with WDC Strangle. So Western Digital, one of the big movers this year.
Yeah. I love that he sees it's us. So it's Blue Wackadoo, Jamal, Frank Walsh, Tony Batista, Jack Tucker.
Yeah. Yeah. Ajit. And then he also posted this about gold and silver short strangles. Very high IV for both.
Yeah, so the gold and silver is the trade of the day. Now those don't close, I don't think, right now.
I mean, you see silver was up. It was up even higher at some point today. It got as high as 78. 78.
Now yesterday was 82, but and we saw that in SLV. That was before the market opened.
Tomorrow morning we'll be able to watch all these before the open because they'll be moving.
And what's great about these is you can trade them. Like I trade natural gas before the regular market opens. Sometimes you can look at the options. So
right. So we'll be on bright and early, 7 a.m. tomorrow. The first thing we'll be taking a look at are the metals, seeing what's going on, seeing what the market's going to do last trading day of the year.
Last trading day of the year, 2025, going to be done and dusted. All right, Jenny, we are cutting into the boys' time though, so we should take a quick couple-hour break.
All right, Liz, I will see you back at 7 a.m.
7 a.m. We'll see you there. Should we do peace like the boys do?
See ya.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
Tasty Trade's Money Match event. Unlock 30 days commission-free trading. Plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new Tasty Trade account. Level up your trading experience with active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new Tasty Trade customers.
Wolf! The first half of this year's market has been giving the good guys the business.
It's certainly been back and forth for sure, Pete, and I'm getting whiplash over here.
With good mechanics, we can see Team Tasty stay strong in the second half.
Absolutely. Let's check out our starting lineup.
Nicky Bat, University of Kansas. Number 20, because that's how many underlyings are in my portfolio.
Rick Welch, Illinois Institute of Technology. Number 23, because I'm trading 23 hours a day.
Dr. Data, Louisiana State University. Number, square root of 1/365, because that's the square root of time for 1 day, which is multiplied times the stock price, multiplied times the implied volatility, which gets you the projected stock price for 1 day.
I like the looks of that lineup.
Well, be mechanical is always better than just trying to run plays and see what sticks, Pete.
When you got skin in the game, you stay in the game.
That's right. Now get off the couch and get into the game.
Watch Tasty Trade.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. The referral program runs through December 31st, only at Tasty Trade.
Where's Santa? It's still Tuesday, December 30th, 2025. This is Overtime. I'm your host, Chris Vecchio in New York. He's Ilya Spivak in San Francisco. We're here to take you through the next 25 minutes or so as we wind down the trading session. What a session it was. Sorry, what session was it is what I meant to say, because there was no trading volumes here, at least in stocks. S&P 500 down a smidge, third consecutive loss here as we wind down into the end of the year. Santa Claus nowhere to be seen. Supposedly, Ilya, the S&P 500 has returned 1.3% on average in those final 5 days of the year and the first two of a new one. But much like last year, we have no hope for anything. Okay, so stocks here meander a little bit, down 0.17%. The NASDAQ off 0.26%. Your Russell, the loser, down to 0.7%. Fed rate cut odds continue to come in, so that interest rate sensitive Russell perhaps exposed on that vector. We see that the January cut odds are now down to 16%. A week ago, sitting a little closer to 20, and then a month ago, a little bit north of 20. So the consistent erosion continues. Otherwise, the volumes, we say that they were terrible. They were terrible in the bond market, where ZB continues to flirt with, but not breaking yet above 116. Very frustrating. We head over, of course, to what's going on in energy. Crude oil a bit weaker the day after President Trump confirms that the U.S., vis-a-vis the CIA, did indeed conduct drone strikes against Venezuela last week. The world of currency, dollar meandering, a little bit higher here, but downtrend still remains. But the manic behavior in the metals market continues. You wouldn't see it via gold, which is only up 0.5%. You have to take your jaunt over to the world of silver, which is still up 8.32, although well off the highs of when it was up nearly 11%. You have copper prices here, which are up another 3.25% today. And again, like their silver and gold counterparts off the highs, palladium, platinum, no matter where you look, Ilya, the metals, they're shining again. That's the most interesting part of the market for the second day in a row. But I suppose we should spend a little bit more time talking about stocks here today. Are you surprised by this price action at all? I feel like the only reason why I am keyed in on the S&P right now is because I have some 7,000 options that are expiring tomorrow.
Yeah, I don't think there's really anything going on here. I mean, it's kind of quiet. That could be something onto itself if we consider sort of all of the Santa Claus rally, maybe this is the window, and all the risks are out of the way, which for the most part they are. We got the FOMC minutes today. They were non-controversial. It didn't look like the Fed was getting any kind of confidence boost in terms of proceeding with easing. They sound as confused as they did after the meeting itself, and sort of were channeling what Powell was saying then. But markets generally knew that. And so it didn't really seem like today would have been a day for anybody to get especially worried. But we don't see momentum. And maybe that's just markets limping into the end of the year. We spoke before about this idea that nobody's going to be in a terrible rush to mess up their high watermark by year end. And so we're probably not going to see a really big wave of selling unless there is something to truly worry about. FOMC minutes didn't give us that. But if we consider sort of where markets have been, let's call it over the past month or two, it's not exactly the rosiest thing in the world. I mean, we've basically stalled now on the S&P for better part of 3 months. October was the peak, and that was that October 29th Fed meeting. We were down in November, and this is the S&P, and we're on pace to be up about 1.25% in December without taking out that October high.
So can you square something for me? I had this conversation a few times today with people. I had it with Jamal on air, a few folks off air, even chewing on it with some folks that not even at the company, just picking people's brains. Do you find it, if this was an end of October, the Fed's not going to give us the cuts that we want, so stocks come off.
Yeah.
It feels like logically it would follow then that maybe gold and silver would be weaker, the dollar would be stronger, bond yields perhaps a bit lower, given the fact that, you're not going to get that reinflation impulse. Okay.
Sure.
But the reality is that since the end of October, while we've seen stocks, the NASDAQ here is still off of its October highs, so too are bonds. Bonds are weaker than where they were right going into that the week before the Fed meeting. Crypto, of course, is still weaker. Bitcoin peaked out in October 25.
Yeah.
But gold and silver really have rallied since then. Gold decided to take its turn to the upside again, right? You get to the end of October into that Fed meeting area, and then the market starts to go up. Same thing for silver. Silver's price appreciation really begins, mid to late October. So I'm trying to square what world are we pricing in from late October onwards that produces us a sideways chop in equity markets, weaker bonds, weaker currency, blazing hot precious metals.
So this is
which is what I'd have to say is I don't know if this is the Fed at all, because this does not feel like a typical how the market behaves and those relationships behave around cuts on and cuts off.
Right. You're previewing what I'm going to talk about on macro money today with the exhaustive assistance of lots and lots of charts with perfect pitch. I mean, this is exactly the thing. When you look at the way things performed this year and you pull back a little bit and you go, hold on. Explosive year for metals. Stocks go up a bit. Decent year. Nothing crazy, but nothing terrible, certainly. Got about a 20% gain on NASDAQ, a little bit less on S&P, solid. And that's after a very ugly loss. At one point earlier in the year, we'd erased all of 2024's gains. So we've come roaring back. These 20-odd% gains on both indexes, they're not just that. They're much more impressive considering we came from significant lows and had to replay 2024 all the way back. So solid year, to be sure. Dollar's a little bit lower, but not a lot lower in the final analysis. The biggest lump, of course, against the euro. Euro does exceedingly well. And so you see kind of a strange situation where, yeah, the dollar's a little bit weaker, but it's not so much weaker. And the bond market is a little bit higher. Yields are a little bit in, but the Fed's been cutting. That makes sense. So what are the metals doing here? And why are stocks up at the same time? What's going on? That this is different. And what you will see in the charts that I'll show later on Macro Money is it's not even central bank buying, because actually central bank reserve buying is down in 2025 versus 2024. But the really interesting thing is that global trade volumes are down, and uncertainty around global trade has increased significantly, although obviously it's way off the peaks of panic from April or so, clearly. And I think the essence of this is that the environment has just become more uncertain. And as we've talked about, metals have become something you need to own as a vehicle to move in between maybe increasingly siloed global systems. That essentially the US and China don't get along. Everybody else doesn't get along necessarily by extension, depending on which camp you're in and who you do more business with. And it's possible that you have periods of rupture and periods of escalation, and you need a non-sovereign unit of currency to move back and forth. And really what's going on in the metals is that.
You know, I'm looking at, I have some data from gold.org, the World Gold Council here.
Yes.
They say that Q4 23, 4.3% of China's reserves were in gold, 4.37% for Japan. Yeah. As of the end of last quarter, 7.68% of both China and Japan's reserves are in gold. That could be a function of the changing weights of their portfolio. For Japan, it is. Their gold reserve tonnage really hasn't shifted all that much. Yeah. It's still about 845 tons. China's is up marginally.
But it's just not what we saw last year. I mean, last year we saw blistering gains in central bank gold reserves. In 2023, we saw a big jump. Going into sort of end of 2023, reacceleration, 2024, solid numbers. 2025, elevated relative to history, let's say pre-COVID, but not so crazy.
It's one of the things that's racing around my mind today, Elio. Why are we seeing, first off, the rebound in silver, it was up 10%. Now it's up 8.4. Either way, that's really impressive. Following what was yesterday was a death candle in the metal space.
Yeah.
And while it hasn't been invalidated yet because we haven't broken through yesterday's highs, right? If you wanted to trade short, you have a level to trade short against. It's not exactly what bears would want to see. And what changed narrative-wise, yesterday just felt like we deleted Friday's price action post-Christmas.
Yeah.
And we're kind of now back to our pre-scheduled programming. That's an old-fashioned TV term for anyone under the age of 30 listening. So we have gold, we have silver, we have them rallying. The volatilities, they are back on the up and up today. Ilya, I threw out a theory on Futures Power Hour, and I'm not going to give the full version of it here. And I would encourage people to go back to the gold and silver section, the metal section on today's show to take a listen. But this to me just is an accumulation of so many events, missteps, policy decisions over the past several years. It really started with Russia invading Ukraine and the US freezing all of the US and Europe freezing all their assets. People forget, though, that the initial Russia-Ukraine attack, it got gold back to what, $2,000, Ilya? By the time Hamas attacks Israel on October 7th, 2023, gold's still at like $1,600 an ounce. It had given up 20% of its value immediately after Russia-Ukraine. And then when you start to see this, I don't want to call it hypocrisy, but certainly the U.S. criticizing Russia for going into Ukraine and being a little bit more even-handed with respect to Israel's actions in Gaza, and now what the U.S. is doing in Venezuela because that's our oil. It doesn't really seem like there's a logical throughput there, unless the logical throughput is that if you're the bigger country and you're the great power in your sphere, you can pretty much do as you damn well please. So if Russia wants Eastern Europe, or Israel wants to bomb Iran, or the U.S. wants Venezuelan oil, fine. But consistent with that logic would also be then there for China. Why can't they have Taiwan? And the CCP, of course, they can't not be in power. So they can't allow an economic disaster to occur should U.S. and European sanctions arrive, should a Taiwanese invasion take place. So why not just stockpile everything? Why not gird the system for those sanctions? So you're not dollar dependent, you're not liquidity dependent. And oh, by the way, everyone else, you're now their major trading partner. And so while they may not want to settle in yuan, they certainly would be willing to settle in something that's a neutral counterparty, a neutral store of value, something else that could clear easily and would be accepted worldwide. And that is not crypto, because everything is done on a damn ledger in crypto. And we've seen time and again, Ilya, people try to steal money, they try to move money, they try to hide money, and they're caught because the wallet addresses track that stuff. So you can't use crypto. Interesting, Ilya, that since our jingoism towards Venezuela ramps up over the past several weeks, at the end of October, bonds are down, stocks are sideways, crypto is down, and it feels like the entire world is grabbing as much shiny stuff as they can.
Crypto's performance this year is basically the inverse of stocks, in the sense that stocks were down a lot and now they're up. And crypto is on pace for a down year, having been up a lot.
That was definitely something I got wrong this year. The trading worked out better than the prediction. I remember in early October, I got out of some long IBIT call spreads, and then that was near 125 in Bitcoin. And then the thing tanked. I put another trade back on around Thanksgiving, some long deltas. It's done absolutely nothing. I'm having trouble reconciling. And I don't know why today is the day. Maybe it's because of the severity of the metals moves and it's the end of the year and I'm getting ready to do my annual assessment of how many trades I took, you know, how many winners, how many losers, how much I make, right? Like everything, what strategies worked well, what didn't. I'm going to do that this weekend. This to me is the oddest part as I'm getting ready to do this retrospective, because it feels like there are consistent themes and read-throughs and historical relationships that held in the first few months of this year.
I would only diverge there with the idea that this is somehow the emergence of a might is right world, because it actually seems to be the opposite. If this were a might is right world, everybody would be afraid of big bad United States and wouldn't be getting out of line.
But
it's not, because
haven't we seen a bunch of countries, and I've been holding a thread on this on Twitter for the past year, updating it as I see another country come on this list. I think there are 7 different Western countries that have talked about finding ways to acquire nuclear weapons, which is like telling you that the American security umbrella is dead.
Right. And so if this were in fact a might is right world, everybody would still be afraid of the big scary policeman that is Uncle Sam and would be staying in line. But it's not. And we see that with what's going on in Russia, where they feel empowered to go do a thing. We see it with what's happening in the Israel-Gaza and Iran kerfuffle. I mean, let's not forget, this was a war started by an Iranian proxy against a U.S. ally with seemingly Iranian coordination. So at least that's what sort of the reporting seems to suggest. So what is this? It's a sense that the policeman is out to lunch somewhere, that might is not right, as a matter of fact, and that bit players that before would be afraid. I mean, Iran would be afraid to engage a U.S. ally this directly and to have started something, to have aggressively initiated conflict. Russia would have been afraid to initiate conflict on this scale if the U.S. security umbrella were really feared like it used to be, and if might were right. So I think actually this speaks to the unraveling of certainty, because what might is right does, when all the might is with one hegemon, is that it creates stability. People go, okay, well, we know what the rules are. Whether we like the rules or don't like the rules is neither here nor there. The rules are the rules, and they're going to be relatively predictable.
Can I pick on that for a second, though? Do you think that we're living in the world of a singular hegemon right now?
No.
So then, if
because the hegemon has decided that he's going on vacation.
But if the singular hegemon caters to stability and predictability, has catered, would it stand to reason? Is it too far to suggest that this is a world of instability?
I think that's exactly what this is, and I think that's exactly what the metals move speaks to. The idea that, at least from an economic perspective, the predictability of global supply chains, the predictability of global rules enforcement is substantially diminished because the hegemon is going on vacation.
I'm just trying to, if we went into this year and said, okay, it's now the last trading day of the year, SPY is up 17.22%. Everything that's happened this year has happened. And the only difference is, like, let's say gold's up 25%.
Yeah.
We would also be sitting around saying, how is gold able to outperform stocks? Like, how did this occur? So when I look at something like GLD and I see it's up 64%, or I see SLV and that's up 162% year to date, that's not just a small, like, people wanted their equity exposure and they decided to, diversify a little bit because of fears of the U.S. is changing up. Tripling the S&P 500, quadrupling the S&P 500's performance in gold, almost 10xing it in silver. Something like that doesn't sit right with me, because that's just not something we see unless we're in the dark times.
Yeah. But I mean, this is the essence of this era of deglobalization that seems to be playing out in front of us. And without killing my punchline for macro money, which begins in just 5 minutes, don't go anywhere, I have charts. This is the biggest risk for equity markets next year, because deglobalization is an AI nightmare, given how internationally integrated that supply chain is.
Well, maybe that's the play, Elia. Maybe if my fears of the metals hinting at some sort of testing of Taiwan in the near future, because quite frankly, if you're going to do it, you got to do it under Trump. If there's a Democratic Congress, that perhaps keeps Washington's attention internally focused. But right now, U.S. assets are spread between the Middle East, Eastern Europe, and of course, the Southern Caribbean now. So do Japan and South Korea and the U.S. decide to team up and take back Taiwan? What if they don't? So you have a window now, like it's going to be in the Trump admin if it happens. If it doesn't happen before the end of 2020, I'd be partial to think it doesn't happen under a Democrat who's going to be more about the international rules-based order and, restoring alliances, what have you. more globalization, as it were, I think would be the path forward there, even with the populist wing of the party speaking up a little bit more right now. So next year seems like it's fertile ground. The U.S. is divided. It's distracted. We're setting a precedent again that if we want something in our sphere of influence, it's allowable. And hell, same thing for Russia. Isn't the big sticking point that Ukraine won't give up territory that Trump has agreed to hand over to Putin?
Well, this is, again, we are not living in a might is right world, right? The U.S. would be able to dictate such things. But no.
I don't think it's a binary step of 0 or 1 in terms of it being I think there are gradients.
It's not. No, it's just other countries are feeling themselves able to assert their prerogatives in a world where before they would defer.
Well, on this day of deferral, which is really a good way to describe today, because there was really not much activity in the broader equity markets, even with their modest losses. And again, Santa Claus has not come yet. We still have tomorrow and a few more days left in the Santa Claus rally window, which of course feeds into our January effect. We look to our January barometer. Today, the big movers are all the commodity ETFs. OIH is your top performer of 1.42%. GDX, GDXJ, they're right back there with the gold miners starting to perk back up. Lots of energy names here, utilities likewise. So I see OIH, GDXJ, GDX, XOP, IYE, XLE as your top 6 ETFs today. And those round out just 10 that finished in the green. Other green sector performers today: telecoms, utilities, real estate, and, well, more real estate. On the other side, the biggest loser was biotech, followed by home construction. So real estate up, home construction down, which is an interesting split. We likewise have the regional banks, which are coming back in a bit. And Ilya, I know you're not one for that horizontal line, but I am. And I'll say that we are now down below both a horizontal. No, you actually are for the horizontal line. You're not for the diagonal.
No.
We're below both the horizontal and the diagonal in our KRE chart here.
Yes.
The move off of the November 24, the September 25 highs. We broke out. We were holding there. So we've lost that former high and we've started to get sucked back into this triangle. Tomorrow is going to be a day of defense, particularly for the Russell, which seems to be creaking a little bit more than its other counterparts. Maybe those Fed cut odds coming in, no reassurance post FOMC minutes released today, wasn't enough. Next week, no big data, Ilya. We wait until January 9th. Oh, actually, that is next week. Next year, I should say. We wait until next year for more meaningful economic data. Tomorrow, just initial jobless claims and some EIA energy numbers. But you have more to talk about here with the good folks on Tasty Live, because you want to look at what's been going on and all these different assets over the past few weeks. We didn't step too far into that territory here today. And what's interesting about that, Ilya, you and I don't plan these shows ahead of time.
No.
We keep it fresh. So
it's all spontaneous, everybody.
And
we're doing it live.
It's funny that you're arriving like, oh, we should talk about this on Macro Money, when I'm thinking like, oh, we should talk about this on Overtime. Overtime's at a time, second to last day of the year. We will be back tomorrow.
Yes,
same
sir.
time, same place, right after last call, 4 Eastern, 3 Central. So for Ilya Spivak, I've been Chris Vecchio. Good luck trading. Stick around though, because Ilya, he's here with more of those charts. Macro Money up next.
See you there, everybody.
Global markets never sleep. Explore them with Forex, now available on tastytrade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on tastytrade.
tastytrade has crypto, and you can trade with 0 commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it. We get it.
Gonna go to Florida. I got Rob. Rob in Florida. What's up?
Hello, Tony and Nick. I am a big fan. My wife and I watch you guys for hours and hours every day. You can be very, very proud of your son. He is doing a great job. I really didn't know anything about stock prices or options or anything. until I started watching probably 500 hours of Mike and his whiteboard from years and years and years ago, and learned all about it. And we've been trading actively since February, and just couldn't be more pleased.
Awesome, man. Thank you so much for the kind words.
Thank
Really
you,
do
Rob.
appreciate it.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
New from Tasty Trade. Unlock 30 days commission-free trading, plus a 1% cash match on all qualifying deposits when you open and fund a new Tasty Trade account. The Money Match event starts now, exclusive to new Tasty Trade customers.
Stocks meander to bring us within 24 hours of the end of the year. FOMC minutes don't end up giving us anything terribly controversial. And so we will take this opportunity to take a look at the year ahead, 2026, and take a look at why the markets seem to have been doing what they did this year and what they might do next year. This is Macro Money. I'm Milius Spivak, head of global markets and global macro here at Tasty Live. That's the one right there. And as we take a look here, I'm going to start with what these markets did this year across the major assets and just go down the list from a bird's eye kind of view. And then try to make sense of what's going on and what that seems to be setting up, because we get stuck in the minutia of the everyday moves, but sometimes lose the big picture in the sort of day-to-day oscillations of what's going on. And if we take a broader sweep here, there are a number of things, of course, that immediately stand out. So this has been a year, of course, where stock markets continue to go higher, give or take 20% for the S&P 500 and the NASDAQ. NASDAQ obviously outperforming. Yields down. Fed has been cutting rates. That much makes sense. Crude oil down despite all kinds of shenanigans on the geopolitical front, which just tells you that those geopolitical rumbles don't very much matter. And on the currencies and the gold front, obviously the big, huge thing for the year is this massive, almost 66% rally in gold. Dollar is a little bit weaker against that backdrop. Euro is a little bit higher and outperforming. Yen relatively flat. And Bitcoin, interestingly, having been up a lot earlier in the year, now tracking down almost 6% for the year. So at least as far as bonds go and sort of what the Fed's been doing all year, that much seems to make sense. These are not the world's most dramatic moves when we look at them as far as the year is concerned. And of course, the biggest decline at the 2-year, because that's where the Fed is doing the cutting. But it has been a year of rate cuts again for a second consecutive year. The Fed cut rates last year as well. And so what's going on here in the bonds seems to make sense. The situation with crude oil likewise seems to make sense. If at all there was a concern about geopolitics, they've since fizzled, largely because a lot of what's been going on hasn't really run away into aggressive escalation, not in the US/Israel/Iran theater, not really in the Russia-Ukraine theater. In fact, there's been more talk about de-escalating that conflict than escalating it, though progress hasn't been made really. But the tenor of what's going on, at least, has not become worse, and crude oil supplies have not become more disrupted for it. And so if we look at what's going on here, those things kind of fall away relatively easily as understandable. For stocks, it's not exactly a shocking situation. I mean, we can see here that when we look at the relative performance of the various sectors in the S&P 500, this is a runaway year for information technology. It's all the way up here, vastly outperforming, and that's hopefully not a surprise to anyone, and not an undeserved sort of thing when we consider what has been outperforming on the earnings front. We can clearly see here that tech has vastly outperformed on earnings growth and has been vastly outperforming on earnings growth for a while. Other sectors have done better versus worse. We can see obviously that decline in energy has been a big story here. But the overall kind of makings of what's going on in the stock market seem relatively reasonable. Stocks are up. Earnings growth is accelerating from 2024 into 2025 and going forward. Obviously, this also includes 2026 because some of these companies are on a different quarterly arrangement than others. But when you look at this, you sort of see, okay, well, it makes sense so far. And of course, that performance, these gains that we've seen of 20-odd% for the major indexes, they're made all the more impressive considering the very soft patch in the first quarter or so going into the second at the start of the year, which at one point we can see here at the bottom of this move had pretty much erased all of the gains from 2024. So here was the run-up from 2024. Here's where we got at bottom here. So we almost erased everything for the year. And so not only did we have to replay all of 2024 back to the upside just to get here, the next 20-odd% was on top. So a very impressive year on the whole. Now, what was this all about? Well, not exactly the world's most shocking thing here either. We have here the World Trade Policy Uncertainty Index. This is something constructed by Fed economists that looks at the incidence of mentions of trade and uncertainty together and connected in news articles and gets a sense for just how much uncertainty about trade is percolating in the zeitgeist. And we can see here that obviously at the start of this year, there was a massive surge. That's with the unveiling of the Trump 2.0 tariffs for the president's second administration, concern about what that would mean, and then the subsequent easing of that concern. Now, we can see here clearly that it hasn't come back to where it was before and is still more elevated even than going into COVID right here. But nevertheless, we're looking at a situation that looked much more aggressive when this was occurring and now looks meaningfully less so. So maybe about 4% of news stories are talking about this versus close to 11% at the peak. And so that much seems to make sense. So if that's what's going on, then what's going on here? So this makes sense. Okay. This seemingly makes sense. Okay. What's this all about? Well, obviously the gold part of it is the most eye-catching. And the tempting thing to say is, well, this is just continued diversification, something that we've seen for a long, long time. This is central banks' holdings of gold. And we can see that while most reserves are still overwhelmingly held in currencies, with a little smattering of IMF SDRs and such things, we can see that there's been a consistent rise in the share of gold in currency reserves, and it's really picked up steam here recently. So this chart goes all the way up to 2024. Doesn't include this year yet, obviously, because it's not yet over and we don't have the final data. But the tempting thing to say is, well, this is a trend we know, and it's probably continued. But then we look at the actual purchases by central banks of gold, and we can see we've got 3/4 of 20 to 25 right here, 1, 2, and 3. And we can see that what they represent is a meaningful downshift from what was there in 2024, what was there in 2023. And so what we see here is maybe something else is going on, because whatever it is, it certainly doesn't seem to be central banks really dialing it up this year versus last year or the year before to explain such an incredible 66% surge. Looking at the makeup of reserves in terms of currencies, we can put to bed this idea that what we're looking at is somehow a loss of confidence in the US dollar or de-dollarization. Well, that doesn't seem to hold up either. Because if we look here, the number of dollars held in reserve has not really changed very much at all, and has even increased a little bit from 2022 to, as far as this data goes, which is the third quarter of this year. Now, if we look at the share of the dollar in overall reserves, we can see it's been declining basically since 2016 or so. And if we squint even longer, that's largely because of the introduction of the euro. And also now, over the more recent years, this greater dispersion across other currencies. So we can see now the Canadian dollar is starting to make itself seen here. So is the Australian dollar. So is the yuan to some extent. Other currencies have a growing share. So this isn't so much that the dollar's share is declining because people are holding fewer dollars. They're holding about the same amount of dollars. They're just also holding more other kinds of currency. So whatever's going on here doesn't seem to be about kind of the usual suspects that come up in this conversation. It's not central bank buying. It doesn't seem to be a loss of confidence in the dollar. So what's happening here with gold? Well, why is it doing these things? And ostensibly, what is the other side of this when it has to do with the dollar, which clearly is down, but certainly nothing like what's going on here, and at least to some extent probably has to do with this decline in yields. The yield on dollars is significantly diminished, as a matter of fact, this year relative to other currencies. Typically, interest rates around the world follow that of the US, but we can see here, so far this year, there's been a meaningful divergence between how interest rates have done in the US versus how they've performed elsewhere. In fact, if we look at the collective performance here, an average for interest rates at the 10-year tenor here, we can see for the US, obviously, we've got a 10-odd% decline. For an average of the Euro area, the UK, Australia, and Japan, sort of the next major four, the 10-year yield average there is up 12.4%. So at least some measure of this dollar weakness is just what we see in the bonds. But even with that, there's nothing here remotely approaching what gold is showing. So something else must be going on. Now, we looked at this earlier and we said, well, it looks like global trade uncertainty is diminishing. And so it is. But when we look at the details into this data, something different seems to emerge. Here's that spike in trade uncertainty that we saw earlier this year. And in the red, we have a 30-day moving average, in the black, a 7-day moving average, and the blue bars here, that's the underlying index on a daily basis. What we see here should be very eye-catching indeed, because we're certainly down off the peaks of the fearful period here. But also, note the dispersion. We're very tightly wound around the 7 and 30-day moving averages here. There's a bit of a kerfuffle in the first Trump administration. We can see there's more trade uncertainty as those tariffs start to emerge here. We can see here was the kind of a U.S.-led free trade consensus, not a lot of uncertainty, and the swings are very narrow. As we get past the 2016 election, all of a sudden now going into 2017, more uncertainty, more uncertainty, more uncertainty. And then that uncertainty perhaps diminishes here during the latter part, the recessionary part of COVID, as opposed to the lead-in, because at this point everything is on lockdown, not much uncertainty if nothing's going on. But as you look at all of this, what you see is that post-pandemic, you don't really see a whole lot of trade policy uncertainty. Everything is kind of on standstill. The world is mending, and you're very tightly wound around a trend that's holding you relatively low. Then you start this year, and we can see the swings in sentiment around the averages get wide and choppy. And as you get back down on these averages, once the kerfuffle from April abates, you're still very choppy. And this, of course, speaks directly to what we've just witnessed here. We just talked about, well, AI is outperforming. Clearly, tech names are what's powering this market. But when we try to square that with this, we invariably have to consider just how international the AI supply chain is. Now, of course, the majority of it is still in North America because those are the biggest models. But if we look at just how spread out all of this is, some parts get made here, some parts get made there. Even just the hardware, if it were to lose a step in China or lose a step in Taiwan or Korea or Japan, if somehow we lost something in Europe, then chip manufacturing itself would come undone. And so when we're in a world of this much uncertainty, as we see here, at a time when market sentiment seems to depend on what's going to happen with this AI boom, this is a tremendous vulnerability. And probably the most important thing to be worried about as we go into 2026. Well, how does that explain gold? Well, if you're concerned that there is going to be more uncertainty around this, even though the trend might well be moderating. You're concerned that swings up and down are going to be something to be constantly aware of, and you never quite know when something might come out of left field. We saw, of course, right here when we started to talk about this possible escalation between the U.S. and China. This was right here toward the tail end of September and going into October. This idea that the president might not like something that happens and threaten a 100% tariff. China might say, you know what? Okay, so we'll clamp down on rare earths. And then both sides decide after some weeks that, you know what, this is too painful and unnecessary. Let's walk it back. But companies need to do business every day. They need to have predictable supply chains. They can't sit there and say, well, for a month and a half, the US and China might not be talking to each other. And what might that look like if it's not a few weeks? What if it's a few months? What if it's a few quarters? Clearly, the level of uncertainty around the average has become significantly greater than what we'd seen in recent years, even during this period. So how does gold speak to this? Well, if you end up having some sort of a rupture between the US and China, where one decides to start using its economic weapons, the other responds, and we go back and forth, if you're a third country, you might need a way to move from one sphere of economic activity into the other without necessarily connecting the two. You might need, for example, to do business with China and do business with the US, though China may not be able to do business with the US if in some situation of escalatory back and forth, the US decided, you know what, we're going to cut off Chinese banks from the dollar settlement system, let's say, or at least substantially diminish their capacity to use it. Maybe not necessarily as sharp as what happened with Russia, maybe sharper, maybe less sharp, but certainly creating frictions. And if you're a third country like, say, Brazil or Argentina or Turkey, you might need a go-between. And that go-between needs to be a non-sovereign asset that can't be necessarily looped into what is emerging as an economic Cold War. Gold, silver, they seem to answer the call there because they are not sovereign assets, not subject to sovereign decree. Crypto, for what it's worth, is obviously not shining as an alternative. We can see that here. Again, Bitcoin is on pace to be down 6% this year. And that's after it had a blistering run of gains earlier, especially thanks to that sell-off in the US dollar. At one point this year, Bitcoin was up 35.2%. And so what it has done here in sustaining this net 6% decline is actually lost about 30% off its year-to-date high. So clearly it is not emerging as a kind of third vehicle here. But gold seems to have. So, with all of that in mind, I am going into next year with my exposure, for the most part, unchanged. I'm still long gold here, despite the sharp pullback at the start of this week. That's after very explosive gains last week. And looking for this to rebuild momentum. I'm a little bit short the US dollar here. It seems like interest rates are likely to take their toll, though things have been slow going. But euro, pound, and the Canadian dollar is what I have on the short side for now. I'm short risk going into next year. You can see the last bit of my Bitcoin short that I've been nursing for some months is still left on the board. It's got 18 days to expiration, so I'm going to ride into January with this and then see if there's an opportunity to add in and extend duration. I still have plenty of duration on my equity shorts. Russell out with a put vertical into the end of January, into the end of February for the S&P and the NASDAQ, and looking for the conversation next year to increasingly start to focus on whether this global uncertainty backdrop and the outperformance of the highly internationalized AI sector are compatible to be occurring at the same time, and whether one of them might be due to give back some ground, and whether it's the uncertainty that's likely to give way or the AI optimism. And that is Macro Money for today. As ever, we are here right after overtime, a show that I co-host with Chris Vecchio, looking at the Wall Street close and where things might go therefrom. We've got an abridged week here for the show because of the New Year's holiday. So we're back tomorrow for a full day, and then we're off for the rest of the week. But normally we're here Monday through Thursday. I'm also writing for the News and Insights portion of tastylive.com and commenting at Ilya Spivak on former Twitter and on Blue Sky. If you're watching this on YouTube, like and subscribe. We'll see you tomorrow. Happy trading.
Come on, you know it, can you feel it? We got some things to talk about. Pre-market, it's early, but not too early. Come on, wake up now. Pour that coffee down your throat hole. It's hot. Now you got a hole in your throat.